actually we call.
Yes, ma'am.
So because of that, we are able to do a lot of. Uh,
Good
Sanjay,
morning.
welcome.
Good morning, and welcome to all the co-panelists on the e-platform. Yes, it's indeed a fantastic, wonderful, pleasant morning here at Pune, and I welcome all the participants on behalf of the Pune branch of ICAI to this sub-regional conference. Yesterday, we concluded on a fantastic note while we were marching towards our professional excellence, and now today we again have a full power pack day to start, and the theme is very aptly designed by the team, saying that we are going to march towards professional excellence along with new professional ethics and standards. So before we start with this session, I welcome all the participants, and may I please request our chairperson of Pune branch, Abhishek Dhamne, to welcome all the eminent panelists and WIRC immediate past chairman, Preeti Savla madam.
Yes.
Over to you, Abhishek.
Thank you, Amruta. Respected past CCM, Sri Atul Beda sir, immediate past Chairman WIRC, Preeti madam, all the panelists, Chintan sir, Sanjay sir, and dear participants. Very good morning to all of you. It's indeed a pleasure to welcome you for the second day of Gyan Setu, uh, organized by WIRC, hosted by Pune branch. We had a wonderful day yesterday. Entire WIRC team was here. We had, as planned, 7 interactive meets. We could complete 6 interactive meets. Last one was Vice Chancellor of Pune University. Yeah, yesterday at 8 o'clock, we got free from those meetings. Friends, today, as the session has been designed as marching towards professional excellence, we thought that uh, professional ethics, normal provisions are explained through presentation or through uh, through technical sessions. But if we can have this interactive session as panel discussion, and it can correlate with our day-to-day case studies, so it would be wonderful and it would be more effective. That was the thought process, and this entire program was conveyed by Preeti Savla ma'am to me, and she was coordinating with Atul sir and his entire team. And as just Atul bhai told that they have worked really hard. Yesterday I got call from Preeti madam yesterday at somewhere around 10 o'clock that they are still practicing, but she's just called me to confirm whether everything is all right and we are on for tomorrow. So they practiced till midnight yesterday. So friends, this is a wonderful initiative, a new way of presentation of professional ethics, uh, the technical terms, what we call and what we call act, schedules, all those things will be presented to you in a in a panel, first in presentation and then in a panel discussion form. So do take benefit of this. I would like to thank Preeti madam and Atul sir for this coordinating and accepting our invitation. With this, I request all of you to please let us know your feedback also. On day one, we have circulated Survey Monkey form to all of you. Please let us know whatever your feedback is, whether it is technical feedback or any administrative feedback you is there from our side. Please let us know. We will definitely try to resolve. So with this, I welcome all of you once again. I wish you happy learning for the rest of the day. Over to you.
Thank you, Abhishek, for the welcome address. And now I request CA Preeti Savla, the Regional Council member and the immediate past chairperson of WIRC, to give her opening remarks. Over to you, Preeti ji.
Thank you, Amruta. My dear friend, Chairman, Pune branch, CA Abhishek Dhamne and his entire team, Samir, Kashinath, Amruta, Ruta, and who Abhishek and one more
Rajesh.
Rajesh Agrawal, and the Pune branch nominees, my colleagues in the WIRC, my dear friend Yashwant and Arun, and present treasurer Anand Jakotia. And I really appreciate and compliment the efforts of for entire year, as well as for this sub-regional conference, which is very well designed by Abhishek and his team. and really wonderful work they are doing for the benefit of members and students of Pune branch. So my appreciation. And friends, must tell you that this code of ethics which have come in July 2020, and there are a lot of things to learn which are at par with now IFAC, IISBA. The team which has put efforts is really amazing efforts and appreciable efforts. So I must say that panel moderator who is guiding all the way at all times is really appreciable. The efforts which he has put and timely guidance is remarkable. And as he was a chairman of a committee, ethical standard board, his guidance to the entire team was really great. Further, the efforts which are put by the panelists, CA Sanjay Nikam, CA Harsh Dedia, and CA Chintan Rambia, I think more than 20 hours of efforts for these specific sessions has been put. They have taken sessions at various study circles and various branches, but for specifically for this session of 1.5 hours, generally we have sessions of 2 hours and 3 hours, but putting all those stuff in 75 minutes, it was really a tough job. But we want to see that this topic is very much is not that if there is a topic say GST, everyone will be happy to hear and understand, but this topic putting, otherwise we want that it should be very interactive and learning value added session. So you have put lot of case studies so that they members can correlate practically in their day to day routine practice. So all those efforts are, for putting in 75 minutes, so many, 100 hours, I can say man hours, 100 man hours efforts have been put. So I really appreciate, and I think this will be a really value added session to all of you. And if you have any query, we will also have some 5 to 10 minute sessions of this question answer. But then also, if you have any queries, you can reach out to any panelist, panel moderator. So once again, my compliment to Pune branch, Abhishek and his entire team. Thank you very much for giving me this opportunity to starting this session today morning on this Saturday morning. And I wish you again a very happy new year to all of you. Thank you very much.
Thank you so much, Preeti ji, for the welcome address. And now, to navigate this session, rightly said that code of ethics is something which really need not be learnt on pit patted. It needs to be practiced and imbibed. And to navigate this session in a most effective manner, we have an energetic moderator with us, CA Atul Bheda, with an energetic, equally energetic team of panelists. So I'll be introducing all of them, and then Bheda sir will be taking this ahead. They have also prepared a fantastic presentation which they have kindly agreed to share with all the participants. So it's indeed a pleasure to introduce here Atul Bhira sir. He is a practicing chartered accountant with the degree in law and information system audit. He is in practice since more than 34 years in the areas of tax, audits, computer software development, finance, corporate laws, and various other professional assignments. He is a person with strong interpersonal skills and has the ability to get along with the people. In the past, he has also served as non-executive director appointed by the Government of India at Yes Bank, member of Central Council for the period 2007 to 2013. He has been on various important committees and chaired many important committees, including Expert Advisory Committee, Information Technology, Disciplinary, to name a few. He was the core group member of the Chamber of Tax Consultants at Mumbai and also at the Bombay Chartered Accountants Society. He was a regular speaker on CNBC Awas, answering the online queries of the viewers on personal taxation. And he will be moderating this session, and he will be navigating his co-panelists, which includes CA Sanjay Nikam, who has that experience of 22 years in the practice in the corporate taxation, internal audit, and project finance. Sanjay ji in the past has also served the Navi Mumbai branch of WIRC as secretary and the chairman. He is actively engaged in various social activities through NGOs, and he has worked very ground level for working on eradication of leprosy and also on the welfare of leprosy patients, which is indeed really special. He has keen interest in IT development and been instrumental in creation of group of professionals doing study on impact of artificial intelligence. robotic accounting, and machine learning. So it would be a great knowledge sharing on his side on the panel on this topic especially. Welcome, Sanjay ji. Also, his co-panelist is CA Harsh Dedia. He is in practice since 2015. He has over 4 years rich experience in a big four assurance firm and finance service industry. He has professional interests in handling statutory audits, due diligence, valuation services, financial advisory services. Currently, Harsh is a convener of Bombay Chartered Accountants Society's Corporate and Allied Laws Committee. Welcome, Harsh. And now we have Chintan with us, Chintan Rambia. CA Chintan Rambia is a chartered accountant with more than 10 years experience. He is primarily looking after GST and has his own proprietary concern for audit services. He is a regular speaker before professionals pertaining on topics of GST and code of ethics. He has also been a group leader at various study circles and RRCs. He has been a coordinator for various lectures convened by WIRC. So, with this energetic blend of participants, Chintan has also authored various articles in professional journals, which I forgot to mention. So, welcome, Chintan. And now, over to you, Atul Bheda sir, for navigating this session ahead. We are really eager to hear from the entire team ahead. Welcome, sir.
Thank you so much, Amruta. First of all, Chairman of branch, immediate past Chairman Priti Savla, and all the members of the Pune branch WRC. I will not repeat the names. Priti Savla ma'am has already, addressed each one of them individually. First of all, I am really thrilled when you talk about sub-regional conference, because this concept of sub-regional conference was started somewhere where I was part of the team who promoted or who started or who thought this process, that why there should be sub-regional conferences, because the issues in the region and then the sub-region are different, and to address these issues and to have a common platform for the members within the region and within the part of the region. Somewhere I think in 1997, if my memory goes correct, we had a first sub-regional conference at Solapur, and I had I was fortunate to be part of that sub-regional conference, being a regional council member at that point of time. And I think since then, this particular concept has really, been developed, grown, and nurtured properly, and the members have taken full advantage of this concept. I could see what has been discussed yesterday. Amruta and Abhishek briefed me about a fantastic discussion which has happened yesterday, and then whole discussion which has to happen today. So, given this background, we as a panel, we as a team, we thought that this particular topic which we'll be discussing today about the ethics is generally the understanding of ours is that once our final CA paper is over, we have cleared the exams. I think we generally do not touch that green color book which was there in our final CA. I think after that, not many people must have gone through that, unless if their bad luck was there and somewhere some mistake happened, and if at all the disciplinary proceedings start, and then you go and search for that that green color book. I think now maybe there are few reasons for that, and I see a very positive reason is that probably that ethics is inculcated in this chartered accountants, and therefore you don't require a book to go and check, because what you don't know, for that you require a book. This is their your way of living. All chartered accountants, I believe, are absolutely ethical because of this particular ethics. Our profession is where it is today, and really I can tell you that across the country the value of chartered accountant is something absolutely huge, and therefore maybe the things which were there right from the inception of the act many of the things are still with the members. I think because of this ethics, that today also, barring few very, very, influential people like Prime Minister or President, whose signature is valid all across the country, I think this is a profession where the signature of a chartered accountant is valid all across the country. So even if you are chartered accountant from any part of the country, maybe Pune, maybe Kolhapur, maybe Nasik, and if you want to go and practice in Assam, if you want to go and practice somewhere in North, if you want to go and practice somewhere in South, absolutely no problem. You are allowed to do that and your signatures are accepted. Why? It is only because our forefathers were very, very strong in the ethics and they saw to it that any paper which the chartered accountant signs is really of a great value because they did not compromise on this ethics. And because they did not compromise on this ethics, probably today we are enjoying a similar facility or similar privilege which was there at the beginning of the act. Now it is our duty that we follow similar ethics, a better ethics, and we see that we give our next generation in inheritance the same privilege which we are fortunate to inherit from our forefathers, and therefore this becomes very, very important. So just giving a background, what we'll be discussing today, because 1.5 hours or maybe 75 minutes is really too short time to discuss, but we will try to put all important aspects of the recent changes and the things which people generally have issues on day-to-day practice. And therefore we have made a capsule whereby you get the blend of all important things. And what we have done is we have divided the presentation into three parts. First is the introduction part, and then we have some case studies that would be discussed. 2019, your code of ethics would be discussed. Also, the conceptual framework of the code of ethics. All these things are being put and mixed in such a way whereby it becomes very interesting, because just a lecture on code of ethics is absolutely very, very boring, because I have given a lot of lectures and I could see at times people may not be interested in the lectures. But as soon as when you start making this interesting by talking to them about how important it is in their day-to-day life, taking live examples, I think that the interest is created. And we have tried to follow the similar pattern. So what we'll do is, first we will have the introduction, then conceptual framework, and then Code of Ethics 2019. Maybe we'll complete this maybe 10 minutes or 8 minutes, whatever each panelist will give a brief on all this. And then thereafter we'll go on the practical case studies. They have prepared an excellent case studies, as Preeti ma'am has mentioned, that a lot of hard work has been gone by this team. A lot of brainstorming session has been gone, where at times even I was participate at this brainstorming session. I was amazed at the detailed calculations which they had made for the time, the actual issues which are faced by them, and they have sorted out, maybe they must have studied maybe hundreds of cases. From that, they have selected few cases, few case studies which would be of a great utility for the members of this region on day-to-day basis. So they have not picked up the cases which are very theoretical or which may not be of an utility to the members. So that is how our things will go. So I think we can directly start now with the introduction part of this code of ethics, and Sanjay would be taking it. Sanjay Nikam would be taking it. I think his introduction was very detailedly given by Amruta. So Sanjay, if you are ready, you can start with that, and maybe the PPT can also be started by sharing the screen. So Sanjay, can you start, Sanjay?
Yes, yes, sir. Yes, sir.
Okay,
Thank you very
okay,
much.
please.
Sanjay, before Sanjay starts, only one. I would also like to recognize the presence of our mentor, CA Zavre sir, over here. So thank you, Zavre sir, for being here for our session.
Javre sir, namaskar.
Are we able to see the screen share, sir?
Yes,
Yes.
yes, Chintan, it is clear.
Yeah, thanks.
So, shall I start now? Yeah.
Yeah.
Thank you, Atul sir, for giving me opportunity here. Good morning, one and all. Atul sir, it's a matter of honor and privilege for me to share such a big dais with you. Thank you very much for accommodating me. I am thankful to Pune branch of WRC and also the Western India Regional Council for inviting me for this sub-regional conference to share my views with all the members. I extend my gratitude and respect to Javre sir, Priti ma'am, uh, Amruta, Madam Ji, Abhishek Ji, seniors and other fellow members, including my fellow colleagues. Friends, now I'll start my presentation. It is on, I'm giving responsibility to introduce the subject. I think most of the members are very conversant with the subject. So just to introduce, I'll give a brief, I'll run through brief information about the Code of Ethics. First thing, next slide, please. Code of ethics, actually, before starting, we should understand what is the code of ethics and why it is so important for the professionals. So what is code of ethics? Ethics means moral values, accountability to one's conscience. In simple language, ethics are moral principles that governs the person's behavior and conduct. And what is code of ethics? Set of ethical standards regulating the relationship of chartered accountants with clients, employees, fellow members, and the public. And important thing that why this code of ethics is so important for our profession, we'll discuss that also. Every profession has its own code of ethics, so does our profession also. After enactment of MFRA, NAFRA, code of ethics has attained a greater importance in the life of chartered accountants. ICAI is very keen in spreading awareness about the code of ethics among the members. ICAI has made it mandatory for chartered accountant to secure minimum number of CP hours on subject of code of ethics now. Everyone is aware of this. So next slide. Friends, one may doubt as to why ethics when there is a law. The main objective behind it is to ensure credibility, which is foundation of our profession. As Atul sir rightly said, the value of our signature, that value and credentials of signature have we have attained that value just because of high standard of code of ethics maintained by the profession and institute. The stakeholders ethics are required to encourage people to maintain rightful professional conduct through though law is mainly to punish non-compliance of conduct prescribed. Ethics is thus more positive in character, and following code of ethics is prevention from contravention of law. Ethics form the basis of law. Friends, contravention to code of ethics are very serious now, and it will be penalized and punished by the institute. That we should keep into mind. So next slide. Ethics in accountancy. Ethics in profession of accountancy are valuable to the members of the profession and to those who rely on the services of members of profession, that is stakeholders. There are many stakeholders in the society like clients, credit grantors, banks, FIIs, governments, taxation authorities, employees, investors, and the business and financial community, and the general public also. International Federation of Accounts, IFAC, has established the International Ethic Standards Board for Accountants, ISBA, to function as an independent standard setting body. ICAI, being member of IFAC, has considered the ethics standards issued by the ISBA while forming code of ethics for CAs with suitable changes in accordance with the domestic law. Next slide, please. ICAI, now we will see our own structure. Uh, we have Chartered Accountants Act 1949 enacted by Parliament for regulation of a profession, and for the purpose of carry out object of the Act, Chartered Accountants Regulation 1988 was enacted. Chartered Accountants Act 1949 has two schedules wherein misconduct is defined. Next slide, please. So this is the whole structure of our code of ethics. We have two schedules. Schedule 1 is internal to the profession, and Schedule 2 is for where outsiders are affected. These schedules are divided into parts, and parts are divided into clauses. We'll go schedule by. First schedule is internal to the profession. Part 1 says professional misconduct in relation to CA in practice. We have 12 clauses for that. Part 2 is about misconduct in relation to members in service. There are 2 clauses for that. Part 3 is about misconduct in relation to members in general. We have 3 clauses for that. Part 4 is for misconduct in relation to all members generally. We have 2 clauses. Second schedule stands for where outsiders are affected. We have 3 parts for this. One is for CS in practice. There are 10 clauses to explain those. Part 2 stands for clauses relating to members generally. We have 4 clauses for that. And last one is part 3, residually clauses for other misconduct. Friends, I want to point out one important aspect here, that Code of Ethics has prescribed some punishments and penalties for contravention of the provisions and clauses of the Code of Ethics. And punishments and penalties prescribed for second schedule are more severe in nature, for obvious reason that this schedule is concerned with the relationship of chartered accountants with outsiders, and our reputation is at the stake. So one should keep in mind and should be very careful while dealing with the outsiders. Next slide. What is professional or other misconduct? It's an important definition. I'll request everyone to be very careful while listening this definition. Section 22 defines expression, professional or other misconduct shall be deemed to include any act or omission specified in any of the schedule, but nothing in this section shall be construed to limit or abridge, reduce in any way the power conferred or duty cast on director discipline under subsection 1 of section 21 to inquire into conduct of any member of the institute under the circumstances. Friends, you must have understood it is inclusive definition and covers wide scope. So next slide. While performing your duties as a professional, the knowledge of law and rules and regulation affecting a particular assignment is fundamental. It is basic requirement, friends. However, apart from the domain knowledge, one also need to constantly bear in mind the provisions of ICAI Act regulations, technical pronouncement of the ICAI, and also a few notifications of ICAI. Violation of this pronouncement also doubtlessly is a professional misconduct. So friends, you can imagine how broad the scope of professional misconduct is. So next, misconduct under any other circumstances. Misconduct under any other circumstances has to be determined case-to-case basis, keeping in view the facts of the circumstances of each case. Fraud, intention to deceive, committing an act which affect the public or society at large could be in the ambit of such misconduct. Following are few examples I'm giving. Conviction by competent court for an offense involving moral turpitude, retention of books, material misrepresentation, publishing ad with a mollified intention to malign any person, using objectionable and abusive language. Next slide, please. So now we'll come to the comparison between 2009 and I'm just giving brief comparison, 2009 and 2019 edition. Till 30 June 2020, we had a Code of Ethics 2009, which had 2 parts, A and B. Part A was based on the ISBA code as suitably incorporated, and Part B was based on domestic provision governing members. Since 1st July 2020, the new Code of Ethics 2009 has come into existence, subject to some relaxation due to this COVID period. We have 3 volumes now. Volume 1 is a revised counterpart of Part A and based on ISBA Code of Ethics 2018. Volume 2 is revised counterpart of Part B, and Volume 3 is a new one, updated relevant disciplinary case laws. Now, first time we have 3 books. which will help us, and it is categorically bifurcated. So next schedule, next screen. The basic structure, I'll briefly explain this. We have principally three parts. Part one, applicable to all professional accountants, complying with the code of fundamental principle and conceptual framework. Part two, professional accountant in the service. Part three, professional accountants in public practice. Now we have two more parts to it. 4A and 4B is related to international independent standards. 4A runs into 400 to 899 sections. Independence for audit and reviews, and part B runs into from section 900 to 999, independence for other assurance and engagements. So friend, this is my brief introduction to the subject, where for important clauses and parts, we have selected, as introduced to you by Atul sir, we have selected some practical case studies, depends on, based on the practical experience of the chartered accountants and queries raised by members. Those case studies we will take later. So at this point, I am concluding my first part. I will take some case study in next part. So I'll request Atul sir to add to my submission. If I miss something, I tried my best to justify the subject with my limited knowledge and experience what I had. So over to you, Atul sir.
Yeah, thank you, Sanjay. I think you've done the job fantastically well, because if I was just remembering yesterday's one-day 50-over match between India and Australia, but then I got to again reconcile. Now that one-day matches are gone, now the days are 2020, and I think you are absolutely great batsman of the T20. The way you have batted, the way you have done it, so many things right from the inception to what is happening today, right? 2019 Code of Ethics. I think you have covered the things fantastically. So just one or two, points just to add is, he talked about other misconduct. So just, I will, I'll give you a brief idea that as an institute, how the institute takes the chartered accountants' conduct so seriously. So I'm talking about one of the very recent case law which had been gone up to Supreme Court, and it is a reported case law. It is Council of the ICAI versus Gurvinder Singh, and reported in 259 Textman 31 Supreme Court. I'll just give you the brief facts maybe in a couple of minutes, and just try to impress that how code of ethics is important, and we talk about other misconduct, so not necessarily the professional misconduct. Here the case was that a chartered accountant got some shares which were there in his possession, got it transferred into his name. Then this came to the notice of the client, and client then started demanding, and she also realized that yes, there has been some mistake or some error some way, and therefore the shares were given back, transferred back to the client. Somewhere client complained this to the institute. The institute took this matter very, very seriously, and it inquired, and it held member guilty of other misconduct. So therefore the member went to the High Court, Delhi High Court, saying that I have not signed any paper, there is no signature, there are no documents, there are absolutely balance sheet or nothing, no reports, no opinion. So where is the question of misconduct? Moreover, whatever issue was there is already been settled. The person has already received. So therefore, I should not be guilty under any of the clauses, and I should not be there. So that was his argument, which Delhi High Court accepted, that yes, somewhere there is now no signature, there are no professional work which has been done, and therefore he should not be held guilty. Institute went to the Supreme Court because institute believes that the smallest misconduct of a chartered accountant is really disturbing the profession, and therefore in Supreme Court again the case was discussed, and it was then sent back to the High Court, saying that this particular aspect of other misconduct has to be looked into. Though there may not be any signatures, there not be any documents, there are not any opinions, there are not any reports, but in spite of that, the work which was done by the chartered accountants requires to be relooked in the light of this other misconduct, and somewhere indicating that yes, there was a misconduct and chartered accountant was guilty. So why I'm giving you this is that institute takes the smallest of small misconduct, any sort, professional, non-professional, very, very seriously. When we study the case studies, again, I will give some inputs, the practical tips on how it is happening, because believe me, being the chairman of the ethical standards board and also being thereafter being member of the disciplinary committee, I have seen many, many cases of the chartered accountants who are absolutely, I would say, neat and clean, but because of the small mistakes like this, they are trapped. I'll come to that a little bit later. So now we'll go to the next part of the today's discussion. That is the conceptual framework, some maybe fundamental principles, etc. So maybe Harsh, you will be able to take up that.
Yeah, yeah, yes.
Yeah, so Harsh Dedia would be taking us through this journey, and I'm sure Harsh is also an expert T20 batsman, though he's also a test batsman. If you give him the charge for a 5-day conference on this ethics, I think he will take line by line, word by word, and he'll be able to do that. But also all three of them, now they're expert in T20. So Harsh, please, you can start.
Thank you, Atul Bhai. At the outset, I would like to thank Pune branch for giving us this opportunity to share our views on this very interesting topic of code of ethics and marching ahead. What my co-speaker Sanjay Nikamji has done is he has set the ball rolling and have given a broad spectrum of what is code of ethics and why it was required. Let's see the conceptual framework of this code of ethics. Now, code of ethics sets out a fundamental principle of ethics reflecting the profession's recognition in its public interest responsibility. That is to say, this is a standard of a behavior which is expected from a chartered accountant by the stakeholders of the society. There are 5 fundamental principles: integrity, objectivity, professional competence and due care, confidentiality, and professional behavior. The part 1 of the code of ethics gives a description of all the 5 fundamental principles. Next slide. The first one is integrity. Integrity means being straightforward and honest, having a fair dealing in all the professional relationships and professional assignments. Second one is objectivity. That is, your opinion or a judgment shouldn't be biased or shouldn't be compromised because of undue influence or any conflict of interest. Third one is professional competence and due care. All the stakeholders of chartered accountant expect some kind of a professional competency, the required knowledge, the required skills that a chartered accountant should possess in conducting all its professional assignments. The fourth one is confidentiality. Confidentiality means not to disclose any information of a client to any third party without a proper and a specific authority, unless there is a legal or a professional right or duty to disclose. Just to give an example, our peer review process where you are supposed to share your professional files with your peers. Confidentiality is a required attribute not only at a professional accountant level but also at a firm level. The full engagement team should possess confidentiality and should never disclose any important information or not to use such important information for their own personal benefits. The last one is professional behavior. That is, an educated person like chartered accountant should behave professionally and should comply with all the relevant laws and regulations, not only revenue laws, but even domicile laws or to say, or even traffic laws. So these are the 5 fundamental principles on which code of ethics has been framed. Many a times there might be a situation where complying with one fundamental principle might conflict with complying with other fundamental principles. This gives rise to the threats in complying with fundamental principles. A code of ethics requires a professional accountant to identify, evaluate, and ultimately address these threats and apply a proper safeguards. So first of all, let's see what are the threats. The first one is self-interest threat. Self-interest means having an interest, financial or other interest, in the business of a client, in the enterprise of a client. Just to give an example, investment in a shares is obviously one kind of a financial interest. Sometimes even quoting a low fee just to get an entry into the group is also one kind of a self-interest threat. The second one is self-review threat. Self-review threat means reviewing your own work. In many small and medium practitioners firms, there are account keeping, bookkeeping team, and there are auditing team. And in most of the clients, the account keeping and auditing is done at the same firm level. This gives rise to self-review threat. So in such cases, your objectivity might be hampered. The third threat is advocacy threat. Advocacy means promoting a position or an opinion to the point that ultimately your objectivity gets compromised. Say, for example, representing the client in front of taxation authority, or lobbying in favor of a client, or sometimes auditing a financial statements, keeping in view income tax authorities or any tax authorities litigation point. So at such point of time, your objectivity might be hampered because you are advocating some position in a testing function. The next one is familiarity threat. It is one of the dangerous threats for small and medium practitioners because majority of our clients are due to our long association or because of our relation with the client. So many a times we become too sympathetic or too accepting about their work, and that's why sometimes our professional competence and due care gets hampered while complying such assignments. And the last one is intimidation threat. Intimidation is due to deterrence in complying with any fundamental principle. Say, for example, having some undue influence. If CA firm is auditing a political party and if it wants to give any negative remark, then there might be some kind of a deterrence in such cases, and this gives rise to intimidation threat. So first step of the threat is to identify threat. The next step is to evaluate and address such threats. So how to do this? There are safeguards which should be kept in place while identifying and addressing such threats. Now, it's not possible for me to address each and every safeguard in such short period of time. So what we have done is we have classified these safeguards into 3 or 4 sections depending on the level of safeguards. The first safeguard is created by the profession, legislation, or a regulation. This is at a macro level, which might be applicable to all the chartered accountants. Just to give some few examples, continuing professional education, that is the seminar which we all are enduring to right now. The CPE program is one such case of safeguard. The other examples are professional standards, that is standards on auditing, SRE, SRS, SAE. The standards which have been made by ICAI are also one kind of a safeguards to address such threats and how to ultimately address such threats. Some esteemed procedures of ICAI like peer review or quality review are also one kind of safeguards to address such threats. That is, getting external review by a legally empowered third party of all your reports, certificates, communication are also one kind of a safeguards to address such threats. Coming to the next level of safeguards, that is at a work environment level, that is from a firm-wide safeguards. The first thing is to educate all your partners, employees, and members within the firm about complying with the fundamental principles and acting in the public interest. That is very much necessary at a firm level. One good practice about safeguards at a firm level is designating a member of a senior management who will be responsible for the adequate functioning of the firm's quality control system. That there should be a team at a senior management level which might help in any of the incoming assignments or in any of the current assignments which can help you in addressing the threats. Also, independence of an engagement team is very much required in each and every assignment. So documenting such independence at a firm level is also advisable. Now, the best way to do this is to document these policies and procedures. Our friends who are in a hardcore audit practice might be aware that SQC1 also gives an example of documenting such policies and procedures regarding the safeguards and regarding such independence of all the engagements. I'm not going into detailing each and every policies and procedures, but the best practice is to document such policies and procedures at a firm level. Coming to the next level at engagement specific safeguards. Now these are safeguards which are specific to some engagement. Say, for example, taking a second opinion of another professional accountant is also a very invited move, invited safeguard, just to address any threat or any kind of independence hampered within the professional assignment. Uh, Discussing the ethical issues with those charged with governance is also one kind of a good practice. Those charged with governance means if audit committee is there in the company, then audit committee. Otherwise, with the board, the auditor has to share, or auditor has to discuss such ethical issues with those charged with governance. Also, rotating a senior assurance team personnel, partner rotation, what we generally call after some period of time, is also one good practice for eradicating familiarity threat. Coming to the next level of safeguards, that is within the client systems and procedures, there are some safeguards which should be imbibed in the client systems and into its internal control system. Just to give a classic example, appointment of auditor, appointment of any consultant or an auditor should be done by persons other than management. Appointment of auditor is generally done by shareholders and not by the board. That's why it is one of the very classic example of safeguard which can be applied. While giving a tax representations for clients, it's a duty of a professional accountant to check the competence of a client's employees, because to say that the professional accountant doesn't get into the shoes of decision making authority, and somehow that might be getting into an advocacy threat. This is a safeguard which tax representations professional accountant should be taken up. This is the last slide, just to give a pictorial flow chart what we have just discussed. The first step is to identify the threat. If the threat is identified, then we need to evaluate such threat by applying a proper safeguards. If by applying all the options, the threat is reduced to an acceptable level, then a person can accept that assignment. If the threat is still not reduced to an acceptable level, then it is the best professional practice to better reject that assignment and not get into any kind of a professional misconduct. That's all from my part. Now I would request Atul Bhai to throw some light on this conceptual framework.
I think Harsh, again, like Sanjay, you have also, done an great justice in a very, very limited time which was allotted to you. I think this conceptual framework about safeguards, threats, very detailed analysis has been made, and we, as a practicing chartered accountants, the experience is that we really do not follow this process which is set by the institute. I think all of us require to follow this principle very, very religiously. Especially one part, I'll not elaborate on all the slides which he has mentioned, because that will take a lot of time. But a practical thing which, we have observed is relating to documentation. Zaure sir is here with us. During our council days, we have been seeing in the disciplinary committee and in the council, when the matters related to small matters like audit of trust, audit of cooperative societies, audit of small companies, audit of partnership firms, this particular disputes between the members of the trust, or maybe members of the society, between the directors, between the partners, the chartered accountant is the first soft target, and they are directly complaining to the institute about a misconduct. Whether it is there or not, that is secondary, but the complaint happens. And what we see is, because we are also practicing chartered accountants, we know how the chartered accountant works and how the execution happens. Based on the facts which are available before us, we feel that yes, chartered accountants must have done all his work very, very diligently. But very unfortunately, many chartered accountants, we are seeing that the documentation part is really missing. And why it is missing? Because we are a community. We believe on people very, very, religiously. कोणी आपल्या मित्रांनी सांगितलं, अरे बाबा हे सोसायटीचं ऑडिट करून टाक, आपण करून टाकतो. कुठल्या ट्रस्टचं ऑडिट कर, आपण करून टाकतो. आणि त्याबद्दल आपण काय डॉक्युमेंटेशन वगैरेची काय काळजी घेतच नाही आपण. आणि त्यानंतर जेव्हा there is a dispute between the members, the chartered accountant is targeted. At that point of time, if you go to that friend who has recommended ki baba he karu de, and then you find out that he is also not helping, and this chartered accountant's file are not up, the documentation is not there, and in spite we feel that yes, he is a very very genuine real person, true person, but we are not able to help him because he is not able to prove the things because of the lack of document. So this important is the documentation. So I thought this is a very practical tip. Let me put some practical tips here, that please, 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 all of you be very, very careful in these basic fundamental things about our profession, because otherwise you don't know when you will be in trouble. Maybe last 15 years, 20 years, nothing happens and suddenly something happens. So you don't know. So let us have the proper process being followed. So I'm not going into the great detail about all these things, but yes, we have to be very very careful. So with this, I think we can move ahead because we do not have a lot of time, because a lot of case studies are there with us. So now we go to the next is relating to Code of Ethics 2019. So Chintan will be able to take us to this route of 2019. Chintan, if I can request you to make a little bit faster. I know I have already told you, I have already curtailed your time earlier. I am again requesting you to see if you can make it a little bit fast. Thank you, Chintan. You can please start.
Yes, sir. Thank you so much, sir. I will try to do it as faster, or as I'll try to give justice in the small time that I've been given. First of all, I would like to thank Pune branch to give me this opportunity to share my views and thoughts on the Code of Ethics 2019. Also to my co-speakers who have absolutely done great job to introduce the topic. Just what I've tried to do is to just in a nutshell, what are the substantive changes and the structural changes, major changes that have been coming in the 2009 code of 2019 code of ethics vis-a-vis 2009 code of ethics. So first of all, we will look at what is the major substantive change in the 2019 edition. The biggest change that has been coming in here is the provision pertaining to NOCLA, responding to non-compliance of laws and regulations. So a chartered accountant is expected to respond to any kind of non-compliance of laws and regulations, not only pertaining to the financial part of it only, or only the auditing that he is doing. He has to is expected to respond to any non-compliance, maybe environmental law, XYZ, etc., etc. So that has been introduced here in 2019 edition of Code of Ethics. Second biggest change is the restriction pertaining to taxation services provided to the audit clients. Earlier, there was no such prohibition in the taxation service provided to audit clients. Here, the major thing that has been introduced here is to stop the independence of the auditor provided to the audit clients, so that there is no threat to independence of the auditor. The third such change is pertaining to prohibition on management responsibilities to the audit clients. So an auditor cannot assume any management responsibilities to the audit clients, though he can provide some administrative services like just uploading a return or something like that. But no management responsibilities or no management decision can be taken by an auditor pertaining to the audit clients. The fourth change that I would like to highlight here is pertaining to 15% restriction on fees from a single client for a consecutive period of 2 years. So earlier there was a recommendation of 40% fee restriction on the fees received from the audit client. Now that has been reduced to 15%. That is coming for consecutively for 2 years. But the only duty that has been casted upon the chartered accountant is to communicate with those charged with governance. There is no restriction per se. If you increase more than 15%, if it exceeds more than 15%, a chartered accountant has a duty to communicate with those charged with governance. There is no problem if the fees exceeds 15%. It's just that you have to communicate with those charged with governance. Earlier, there was no provision pertaining to, if there is an unintentional breach of independent standards. Now there has been some new remedy that has been provided to professional accountant when there is an unintentional breach of independent standards. As Harsh pointed out earlier, that if you are able to reduce the threat level or the breach that has been occurred, then you can again obviously go ahead and do the assignment, or else as soon as possible reject the assignment and stop doing the assignment. There are certain concepts that have been introduced in the new 2019 Code of Ethics pertaining to key audit partner, public interest entity, etc. Those concepts mainly are applicable to those professional accountants who are doing auditing of listed entities. Uh, so these are the major substantive changes that have been occurred. As you are all aware that these all provisions pertaining to 2019 edition of Code of Ethics is applicable from 1st July 2020. But there are three main provisions which I discussed earlier. They have been deferred due to the ongoing COVID-19 situation. First is pertaining to NOCLAR. Second is pertaining to fees or relative size, that is 15% restriction. They have yet the particular provision has been deferred. Third is taxation services provided to audit clients. Again, that provision also is deferred. So bearing these three provisions, all the other provisions are applicable in the 2019 Code of Ethics with effect from 1st July 2020. The members are requested to go through the 2019 Code of Ethics with great detail. There may be many other changes that may not have been covered here, but the key changes that I thought and we thought that should be presented have been presented here. Now we come to what are the major structural changes in the 2019 edition of the Code of Ethics. Structural changes meaning what are the interpretations or what are the difference between the look and feel of the 2009 Code of Ethics vis-a-vis 2019 Code of Ethics. The first change that we feel is pertaining to independence of assurance engagements. So in 2019 Code of Ethics, the independence requirement for audit and review engagements and other assurance engagements are differentiated. As Sanjay Nikam sir pointed out earlier in his presentation, that there are part 4A and part 4B. Part 4A is pertaining to audit and review engagements. Section 400 to 899 sections are applicable to engagements of audit and review, and section 900 to 999 are pertaining to other assurance engagements. So before accepting any assurance engagements, we should know what the nature of audit that we are undertaking and accordingly apply independent standards. Here there was no characterization as standards for independence. Now these part 4 and part 4B are characterized as international independent standards in volume 1 of Code of Ethics. The drafting conventions that have been used in the 2019 Code of Ethics, most of the places the word should has been replaced with the word shall. The shall meaning that the provisions have to be mandatorily followed by all the professional accountants wherever it is applicable, to whomever it is applicable. So it is mandatory to follow all these, and it is not recommendatory to follow all the provisions. The structuring patterns of the sections are distinguished, wherein requirements of a particular section are designated with the letter R. Letter R meaning it is imposing obligation on the chartered accountant or professional accountant to follow that particular provision mandatorily. He is absolutely expected to follow that provision to the letter T. Uh, if there is a section meaning having a designated letter A, it provides context, explanation, suggestions for actions to consider. So if letter R is as a prefix to a section, then the professional accountant is to follow that particular provision, and letter A is just an application material wherein how to follow that letter R has been provided. And there is increased clarity provided for responsibility for compliances pertaining to firm, network firms, individual within firms, etc., etc. So there is an individual clarity provided to them. So this is just a brief snapshot as to how the sections look like. As I mentioned, sections pertaining to prefix R260.6. This means that this particular section is to be mandatorily followed by the professional accountants. And below section 266, 260.6 A1, 260.7 A1, 260.7 A2, these are the application material as to how these R260.6 has to be followed. What I've tried to do is just given a brief snapshot. Atul bhai, if you want to add something, I think in the really small time, I think I may have missed something, but yeah, these are the major key changes that have occurred in 2019 Code of Ethics.
Chintan, I think thank you so much for restricting, so many things which you have discussed with us and you wanted to present, but because of the time, you're not able to present. But yes, I'm sure you will cover up in the case studies when we discuss, and the utility of what has been discussed about the code of ethics. We will have further addition in the case studies. But just to give an example with the last slide Chintan mentioned, that institute is trying to give lot of spoon feeding. Like, yes, they have defined a lot of code of ethics and so many things. They're also giving you that, yes, what as a chartered accountant, as a member, I should do. So they are giving, okay, this is a requirement, and then what is the application? How do I fulfill this requirement? So I'm sure all of us are sharp enough to learn that and see that whatever which is required, how do we see that it should be done. And therefore institute is giving a lot of spoon feeding things. I'm sure many of us have not even known that there is a new book, 2019. There are 3 volumes. So all these are available on the website. At least download the soft copies of this particular 3 publications and go through that, because this is a very important piece. Because as the things are passing, all of us know today, any mistake if we are committing or our clients are committing, income tax is having huge amount of information. Similarly, because of online things which are happening, UDing which is happening, there are a lot of information which is available with the institute and which is available in the public. And you, not necessarily somebody has to complain. Even if the information is there with the institute, you can be under the scan of the institute, because institute, based on any information, can always start an inquiry against the vendor. And this information, as I said, is available with many things in the public domain, many things with the institute. So see to it that we try and follow along with other standards. We talk about auditing standards, we talk about accounting standards. Ethical standards are also required to be followed very, very religiously. So I think I will not take further time. Now we'll go to the questions. So if at all there are any specific questions which are there, the members can put it in the chat box, and we will try to address the questions which would be there. So to begin with, maybe I can request Chintan to take over first couple of questions, and then maybe others can follow with the other questions which they have framed, which we have studied, and which we feel would be of a great utility in our day-to-day practice. So maybe Chintan, can you now take up the case studies?
Yeah, Atul bhai, yes. So practical case study. So what we have done is we have extensively read the materials available on the public domain, and prepared a case law or case study wherein all those case laws pertaining to a particular topic we have done in a nutshell and tried to present a case study. So the first case study pertains to certification of projections. There are many questions that comes that whether a chartered accountant can certify a projection. So here is first case study pertaining to this. In order to claim benefit of section 115 BAB, ABC Private Limited was in process to incorporate a new subsidiary for its upcoming venture. Considering the substantial investment required, it approached banks for funding the said venture. And on the directions of the bank, ABC Private Limited approached Mr. Sachin who's a chartered accountant, to certify futuristic financial projections of new venture. Mr. Sachin certified the futuristic financial projections prepared by ABC Private Limited without mentioning any basis of such projections and without quoting of Huden. So what we'll try to do is there any standard on auditing or any standard on assurance engagement pertaining to this? Yes, there is a standard on assurance engagement SAE 3400. Subject line is the examination of prospective financial information, which is applicable to reports and projections and forecast issued on or after 1st April 2007. A chartered accountant can participate in the preparation of profit or financial forecast and can review them, provided in his certification he indicates clearly in the report the source of information, the basis of forecast, and he should also obtain sufficient appropriate evidence that the financial information is reasonable. Major assumptions while arriving at the forecast should also be mentioned, and he has to absolutely mention his certification that he does not vouch for accuracy of these forecasts. And similarly, the same opinion would also apply based on the hypothetical assumptions about future events and engagements which are not necessarily expected to take place. So this is a particular essay that we wanted to share. So regarding the case study, so here the Mr. Sachin did not do audit as per GAAP or auditing standards or assurance standards. He was supposed to comply with the auditing standards while issuing the certification. In the instant case, certificate was not issued without compliance of SAE 3400. Hence, he will be held guilty of misconduct falling within clause 7 and clause 9 of part 1 of second schedule. He also failed to quote Uden on the audit report. So a member is expected to comply with the guidelines issued by the institute. Mentioning of audit reports mentioning of Uden or audit reports or certificates is mandatory by the auditor. Hence, non-quoting of Uden would be considered as misconduct as per clause 1 of part 2 of second schedule. Now we move on to the second case. Second case pertains to charge of professional fees based on percentage of turnover. ABC and Associates was a CA firm providing auditing, taxation, valuation, liquidator, fundraising services, etc. to its clients. Whether ABC is guilty of misconduct for below fees charged by it to its clients. The first being, in case of audit fees, ABC used to charge its client based on the percentage of respective turnover of the client. ABC also charges its client 1% of total tax saved by a client under VSV scheme, irrespective of result of assessment made by the concerned authorities. With regards to fundraising services, ABC charges fees basis percentage of funds raised by its clients. While acting as liquidator, ABC charges clients fees percentage on realization of or distribution of assets by respective client. So whether charging all these fees are misconduct or not. So in terms of clause 10 of part 1 of first schedule, a chartered accountant or a chartered accountant firm is not permitted to charge fees on a percentage of turnover except in circumstances provided in the regulation 192 of CA Regulations Act 1988. As per regulation 192 of CA Regulations 1988, no chartered accountant in practice shall charge or offer to charge accept fees in respect of any professional works which are based on percentage of profits or contingent upon findings or results of work, except for few circumstances which have been listed in this regulation 192. What are those regulations 192? The exceptions pertaining to regulation 192. First, in case of a receiver or liquidator, the fees may be based on percentage of realization or disbursement of assets. In case of auditor of cooperative societies, fees may be based on percentage of paid up capital or the working capital or gross or net profits. In case of valuer for purpose of direct taxes and duties, fees may be based on percentage of value of property valued. In case of management consultancy services, as may be decided by resolution of council from time to time, fees may be based on percentage basis which may be contingent upon findings or results of such work. In case of certain fundraising activities, fees may be based on percentage of funds raised. In case of debt recovery services, fees may be percentage on debt recovered. In case of cost optimization, fees may be based on percentage of benefit derived. Any other services or audit as may be decided by the council. So there are a few services that have been added here, acting as insolvency professional and providing non-assurance services to non-audit client. So here we'll go through detail of what happened. So the chartered accountant charged audit fees based percentage of turnover. It is obviously regarded as misconduct and hence it is not permitted. He charged fees at 1% on total amount of tax saved by the client under VSV scheme, irrespective of result of assessment made by the concerned authorities. It is not regarded as misconduct. High Court of Himachal Pradesh said that it was held that fees charged is neither based on percentage of profits or result of the case, hence will not fall under the scope of section 22 with read with clause 10 of first schedule of the act. Fees for fund raising charged base percentage of funds raised. It is again not regarded as misconduct as it is covered by the exception of regulation 192 of CA Regulations Act 1988. Liquidation fees charged basis percentage of assets realized or distributed. Again, it is not regarded as misconduct as it is covered by the exception to regulation 192 of CA Regulations Act. So CA had arranged accounting bills raised by 16 parties amounting to 14.09 crores, made entries which were not genuine, commission was charged, and transactions for arranging accounting entries were charged, CA involved in arranging bogus bills, etc. The CA was obviously held guilty of professional and other misconduct falling within the meaning of clause 10 of part 1 of and clause 2 of part 4 of the first schedule of the Chartered Accountants Act. So with this, I would like to hand over the charge to Atul Bhai.
I think thank you, Chintan. I think we are really running short of time, but you have covered so many facts covering the practical case studies and also giving the case laws, also give the schedule, also give the clause. I think you have done a good job. Only one small observation, a practical thing which we have observed in our disciplinary matters or in the council, when we are seeing. This is related to your first case study about certification of the projections, and we have come across many such cases where the chartered accountants just, they have signed the projections for the project reports, for the project finance, for the bank finance. And when we asked, them or even informally when we talk to the members, many times there is a request from the clients. अरे बाबा एक काम करना ते काय बँकमध्ये ते सबमिट करायचं आहे 5 वर्षाचं प्रोजेक्शन जरा प्रोजेक्शन जरा तुझं सिक्का मारून दे ना त्याच्यावर बँक मॅनेजरने मागवले. Now banks somewhere, what I am seeing is for each and every small thing they want the chartered accountant certificate and they call it as in a very loose language, जरा तुझ्या शिक्का मारून दे म्हणून. What are we talking about? शिक्का मारून दे म्हणजे काय? What do you say? It is we are a professionals. We have spent a lot of hard work in achieving this degree, and we have to be very very careful for whatever we are doing. And we have seen such sort of balance sheets where it is a projected balance sheet for next 5 years, and chartered accountants have put their stamp, and at times there is a standard line which many of them they are right as per the books of account produced, or there are various other lines which they write. I think this is where the standard is there, that if at all you want to have a projections being certified, how to do that, let us follow that. Otherwise, don't go and carried away by the bankers who will just say go and get the certificate of the chartered accountants for each and every small things. Even for things like say audit report, if you give a Xerox copy, they said, you certified from chartered accountants. Many times, I say why we should certify it. It is already the original is there. Let bankers, take their responsibility. They check the original with the copy and let them put a stamp on that Xerox copy or a photocopy, that original seen and verified. Why they want the certificate of chartered accountant? It is because we chartered accountants, we just surrender to any sorts of requests and demands made by our clients. So here, only the practical tip is please be careful in this sort of things. I'll not take much time. Maybe the next case study can be taken by Sanjay. Sanjay, are you ready with the next case study?
Yes, sir. Yes, sir.
Yeah, yeah. Please take up, because again, this is a very, very crucial about advertisement and a lot of things on that. Please, Sanjay, start.
Thank you, sir. Sir, we have selected one exhaustive and comprehensive case study on advertisement, and it is very common with members of the profession. We use we indulge into very lightly and without any giving proper attendance to the code of ethics in such activities. So, clause number 6 and 7 of part 1 of Schedule 1 covers these aspects and advertising and solicitation of work. Clause 6 stands for solicitation of work, which is strictly prohibited by the Code of Ethics. And Clause 7 stands for advertising is allowed subject to some restrictions imposed by the Clause 6. So, sir, I'll narrate the case study now. There was one XYZ and company chartered accountant had completed 25 years of the profession in service. On occasion of Silver Jubilee celebration, firm decided to shift its office to a new premises. Celebration for celebrating Silver Jubilee and shifting to new office, they planned a large-scale celebration, and hence XYZ and company decided to send invitations to clients, friends, relatives, reputed people, and across various industries also. XYZ and company also decided to give a full-page ad in leading newspaper about the same. Uh, the invitation and paper ad drafted by XYZ and company contain information about Silver Jubilee in celebration, news about shifting to the office premises, and it also contains. Friends, these are the issues we should be very careful about. Kindly follow me. XYZ and company mentioned about services rendered by it, highlighting specialization services, information about various books authored and written by its partners are given. To mark Silver Jubilee of firm, a special logo of firm was designed and published in invitation and paper ad. As already mentioned, apart from clients, XYZ and company had sent invitations to non-clients also. Next slide, please. Further reminders were sent to all the invitees through SMS. A special video was prepared depicting the 25 years journey of the firm and highlighting its achievements. XYZ and company had paid extra amount to get a new address and new contact details printed in yellow pages and telephone directory. Whether XYZ and company is guilty of any professional misconduct. So friends, there are many issues we have elaborated, and we have tried to cover as many as possible aspects in this case law. So now we will go case to case, issue to issue. Whether sending invitation card for Silver Jubilee celebration to clients and non-clients and cards highlighting about specialization services of the firm are objectionable or not, we will see. Friends, clause number 6 and 7 of part 1 schedule 1 cover these aspects, and as I said earlier, solicitation is strictly prohibited. So this is misconduct under clause 6 and 7 because these services are mentioned there, and these cards and invitations, ad and invitations were addressed to non-clients also. So it is prohibited, and even High Court has upheld the decision of the council. So be careful. Next issue is full-page ad in newspaper having details of services rendered. Friend, this is also amount to be a solicitation of work to the public at large, and hence it is misconduct under clause 6. High Court upheld the order of council and observed following: advertisement put was a noticeable one. If soliciting of work is allowed, the independence, forthrightness of chartered accountant in discharge of their duty cannot be maintained. So it is very, very important about the integrity comment of the High Court about the integrity of chartered accountant. So we should be very careful. Next issue is information about books written by the partners. So friends, we'll see how it is to be dealt with. Mentioning details of services and books written along with the New Year greeting. Also, member in practice can't indicate a book or an article, author, contributed, published by him. his association with any firm of chartered accountants. It is indirectly decorating himself for solicitation of work, and hence it is prohibited. Uh, Next issue is designing special logo and printing it in invitation and newspaper ad. So friends, it is misconduct under class 7. Use of a special logo in visiting card or printing special firm logo in invitation card or ad is not allowed. We are allowed to use the logo of with a specification prescribed on specified places only. Anywhere we can't randomly use this logo. Our logo also, and a private logo is not at all permitted. Sending reminders through SMS. Uh, Sending SMS for information of our own client is okay, but it should not be amounting to solicitation of work and should not be sent to non-clients. So we'll read how it is misconduct. As such, soliciting work through SMS is not allowed and is considered as a professional misconduct in terms of clause 6 and 7 of part 1 schedule 1, and other misconduct in terms of clause 2 of part 4 of first schedule, read with section 22 of CA Act 1949. Next issue, next slide. Preparing special video depicting 25 years of journey. It is also like solicitation of work. Misconduct as per clause 6. Since party was to be attended by both clients and non-clients, preparing a special video highlighting 25 years of journey, a firm would be tantamount to solicitation of work. Solicitation of work is strictly prohibited, friends. Pay extra to get new address and new contact details printed in yellow pages and telephone directory. This is one kind of attracting people to yourself, and that is also some kind of solicitation of work. Dragging attention is also not permitted. Getting them, okay. Yes, thank you. Getting name published in telephone directory is permitted, but making special request of or paying additional amount to highlight the number in directory is not permitted. For the name must be published in chartered accountant section and also only in directory of a city in which firm is belong to. It must be in normal letters. Further publishing numbers and address in yellow pages, if result in advertising, not allowed. Next, please. Now we'll see next different issues now. Issuing printed circulars highlighting professional attainment, issuing circulars letter to other CS, circulation of letter to small group of client for solicitation of work or to person who are likely to require services of a chartered accountant. Specifically prohibited, sir. It is solicitation of work. Next issue, advertisement in newspaper seeking work from other professionals, advertisement for soliciting client under box number in newspaper. Friends, clause 6 will come into picture. It is strictly prohibited. Next issue, highlighting expertise in letter, prohibited, prohibited, prohibited. Writing letter to company highlighting expertise in various areas is glossification of the personality, not allowed, and solicitation of work also. Announcement in newspaper about changes in constitution of partnership or address, etc. Friends, it is permitted because you are informing your clients, but precaution should be taken. It should be limited to bare statement of facts. Next issue, application for impanelment of allotment of audit. Yes, friends, it is permitted, but cannot make reviewing inquiries as to whether such a panel is maintained or not. Tenders, responding to tenders is permitted. Friends, kindly go through carefully because shortage of time, we can't explain this, but we have institute has issued one guideline for this dated 7th April 2016. It is good manual, friends. You go through it for taking precautions while appearing for tenders. Next issue, publication of books or articles. Friends, permitted. Association with any firm or CA of CA should not be mentioned. Issue of greeting cards, issue of greeting cards or invitation, permitted. Can be sent to clients, relatives, friends. Designation, chartered accountant, and name of firm is permitted. Any other professional designation, status, qualification, etc. is not permitted, friends. Classified advertisement in journal newsletters of chartered of institute permitted, but only in journals and newsletters of the institute. Giving public interviews permitted, friends. Name of firm can be mentioned, but due care need to be taken. Next slide. Photographs permitted, provided no payment is made for such publication, no reference to the name of firm, signboard of the office. It is very common, friends, permitted, but use of glow signs or lights should be avoided. Next slide. Now we will taking some FAQs on advertisement and solicitation. Year designation along with the name of chartered accountant firm can be used on greeting cards or invitation, marriage, inauguration of office, provided such greeting cards and invitation sent only and only to the clients, relatives and friends. Members in practice engage in teaching, coaching activities in accordance with the general and specific permission of council should abstain from advertising of such coaching as it amount to indirect solicitation of work. Next slide. Friends, it is very commonly asked question, network other than those registered with ICAI like BNI, whether it is allowed or not, friends, it is not allowed. Logo use, for logo use common logo as I mentioned earlier, prohibit the prohibition on firm's logo. Sponsoring activities old, initially it was not allowed. Now in events of POU of ICAI or CSR activities allowed with prefix of CA. Sharing of educational video allowed, but reference of CA firm should not be there. Your personal, being a chartered accountant, I can share educational video, but not, my firm's credential should not be mentioned there. Movies, TV credits allowed, not differently from other person because it should be common with other. Next, size of a signboard. Appropriate visibility is allowed. Glow signs or neon lights are not allowed. Printing vision and values behind visiting card also not allowed. Expression ISO certified on letterhead is also not allowed. Photo on visiting card strictly prohibited. WhatsApp messages about services rendered not allowed. Next slide. Friends, we'll talk about the website contents. Para 3 and 4 of website guideline issued by ICAI prescribe that the chartered accountants and or chartered accountants from should ensure that none of information contained in the website to be circulated on their own or through email or by any other mode or technique except on specific pool request. Friends, this guideline is very clear and we should operate our data on the website on pool mode only. The website must run on pool mode and not on push mode. Passport size photo are allowed on the website. Name of clients and fee charge cannot be given. Next. Website and yeah, I'm continuing the same. Mentioning of catchword, catchphrases, for example, excellence in particular area, from having professionals of integrity, etc. of firm's website, on firm's website, letterhead, visiting cards is not permissible. CA can provide facility to the client to access its documents through logging in on the firm's website, subject to security and confidentiality of measures. CA logo background color on website cannot be changed. It must be as same as prescribed by CA friends. Next. So I have concluded, sir. I would request you to add any pinpoints or important comments from you, sir.
Yes,
sir,
yes. I think again, Sanjay, you have covered, so many things. पूरे सागर को आपने गागर में भर दिया पूरा, मतलब इतना बड़ा चीज था. You have given so many things, and which are of a great, utility, importance in our day-to-day practice. Just 2 or 3 observations. Again, practical things. When you talked about logo. Again, when we started at the institute that common logo of CA should be allowed, a lot of discussion had happened at the council. Fortunately, I was part of that discussion in the council. there also, apart from other specifications, the colors, if at all you are making it a color, the color specifications are also given. That is also to be mentioned. So you have to follow that color scheme itself, if it is color. Otherwise, it's black and white. So great guidance is given that how you can use that logo. One very important thing, Sanjay mentioned is about clause 6 and clause 7. I think this is where, where one clause says that, okay, advertisement is not allowed, but then subject to some guidelines, this advertisement is allowed. Now, if this advertisement is allowed, and clause 7 says, was this, sorry, solicitation is not allowed. So what is, so again, we had a very detailed discussion in council that once we are trying to say that advertisement is allowed because of that guidance, how do we, balance between this clause 6 and clause 7? So because it specifically prohibits the advertisement. So then to create a balance, it was discussed and decided in the guidelines that the advertisements are allowed, but the solicitation of the work is not allowed. So very thin line. So wherever that guidelines in the advertisement, you follow that. Nowhere it should be forming part where you are soliciting the work from others. If that comes, even if you are following all the guidelines, immediately you will go into the misconduct. So there is a very thin line between this clause 6 and clause 7, which I think Sanjay has brought out very well. I thought I'll just put some addition in that. Before I go to the next case studies where Harsh would be taking it, there are 3 or 4 queries which I thought I can answer at this point of time. One is from Bhupendra Harshe. He talks about, there are a lot of private websites which are doing tie-ups and tax consultancy, etc. And they share the fees earned with the chartered accountants after keeping their share. So let me tell you, the sharing of fees by the chartered accountants is generally not allowed. Now there are some specific professions along with you can be partners where you can share the fees. So there are 5 or 6 such professions, maybe like company secretary, maybe like cost accountant, maybe advocates, maybe MBA. There you are allowed to share your fees and you are allowed to become the partner. Otherwise, you're not allowed to share the fees. So therefore, if somebody is doing that, up till the time he is not caught, he can, be the scot-free, but otherwise the misconduct is happening. The other suggestion is that, has ICAI taken any action on online services by CS through this website? Whenever this sort of things, any misconduct, if it is coming before the council, before the institute 100% takes the actions. Our good friend, our past colleague Chandrakant Pawar from Nasik, he is suggesting that this is becoming a hurdle for the professional, because if this percentage fees is allowed, probably the profession may grow up. Yes, maybe at few places, as he has mentioned in his query itself, in bank branch audit, we are being the percentage on the advances is the fees. So his suggestion is that this should be allowed. Yes, CV, you can surely talk to many of us, maybe, and see where it is required. A detailed representations can be made to the council. And we are fortunate that we have people like Mr. Zavre and so many others who are there from the grassroots. They understand the issues of the grassroots practitioners, and they raise these issues in the council appropriately. So maybe CV, we can work on this, and we can, whatever is there in your mind, make a note of it. We can work on this with the council members, with the president, with the vice president, see how we can improve. Because at institute, what we have seen is there is a very leadership, and all the council members are very open to the suggestions, and a detailed discussion has been done. So whatever your suggestions are there, I'm sure it will be heard properly. We have one query from Satish Peshwani. He says, what is the level of punishment for the advertisement misconduct? Satish, just to tell you, the punishment would be depending on the graveness of the misconduct. It could be anything, if at all. The first thing is that whether you are guilty or not guilty. So if you're non-guilty, there's no question of punishment. If you're guilty, it could be starting anywhere from just a reprimand, that is just giving you a warning. So that is also a punishment, and it could go up till anything. So as far as the misconduct of advertising is concerned, the gravity of the same has to be seen. It could be, maybe, striking of the name for 15 days, 1 month, 4 months, 6 months, something of that could be there. But there is no specific guidelines or specific clause where it says advertisement misconduct इतना दंड करो, ऐसा कुछ भी नहीं है. It is depending on the disciplinary committee that how exactly they will take it and what is the punishment which could be recommended. The next question is it okay to, it is by Abhijit Joshi, is it okay to give firm profile mentioning details of services rendered by the firm to the prospective client? So here, yes, it is allowed, absolutely not a problem, but it should be not an generic, communication. If a specific client asks you, yes, you are allowed. Even, Sanjay was talking about advertisement and the website, and, there a very important distinction has been made in the guidelines about a push mode and a pull mode. So what is allowed is pull mode is allowed, push mode is not allowed. What is this pull mode and push mode? Pull mode is that if the client requires, if the user requires, you can pull out the information from the website. And what is not allowed is the push mode. And what is this push mode? Nowadays, we generally see websites or we see the mobiles, and suddenly some, advertisement is popped up. That is push mode. So whether you require or you don't require, whether your permission is not taken, just it is pushed. That sort of, detailing is not allowed. If somebody wants, let him pull out the details. So from the facts, what you are mentioning, Abhijit, I feel that should not be a problem, because a prospective client has requested you for, yes, give me that, what is that you can do for me. I think that should not be a problem. So maybe these are the few questions which are there in front of me. There are, I think, 1 or 2 more questions. So when do we write to that question will come here, I think. Let us first go to the communication to the previous auditor. I think that is in the next case study. So let that case study be over, and if it is not addressed, I'll take up these issues. So maybe we have very limited time already. 10 minutes have been crossed. So Harsh, can you take up the next case study? Is Harsh is there on the line?
Yeah. There is. Hello.
Yeah, Harsh, please start. I am able to hear you. I think all of us are able to hear you.
There is some bandwidth issue, so I'll put off my video as of now.
Yeah, you switch off your video.
So going up to the next case study regarding communication with previous auditor. Mr. X, chartered accountant, was approached by a client for appointment as a tax auditor under section 44 AB. Client informed him that previous auditor was out of station. Client was in a hurry to file the return before due date. Mr. X accepted the audit and commenced the work within 2 days of it. While going through client financials, in the list of sundry creditor, fees of previous auditor was shown payable. Mr. X did not check that how the fees was paid. Before signing the tax audit report, he sent communication to previous auditor under certificate of posting without any acknowledgement. So let's see what all misconduct he has occurred in this case. First of all, communication to previous auditor was not done before the acceptance of audit. First of all, let's understand what is the intention of communicating with the previous auditor. Professional courtesy is obviously one of the reasons. The second reason is for the incoming auditor to ascertain whether there are any circumstances which warrant him not to accept that appointment, or probably to safeguard his own interest. So as per clause 8 of part 1 of schedule 1, the communication to the previous auditor should be given before accepting the appointment. And in the cited case, as you can see on the PPT, this was a professional misconduct on the chartered accountant. Second issue is regarding positive evidence of communication was not there. Certificate of mere posting of a letter cannot warrant a positive evidence. There has to be an acknowledgement which is of a communication given to the previous auditor. In the cited case, this was a misconduct. This was even upheld by Rajasthan High Court also in the same case. Coming to the next issue, accepted the audit where undisputed audit fees was not paid to previous auditor. As per the Council Guidelines 2020, incoming auditor should not accept audit assignment when the undisputed audit fees is not paid to the previous chartered accountant. Undisputed audit fees means the audit fees which is disclosed in financial statements and which has been attested by the management and auditor. So whenever there is a undisputed audit fees payable, the incoming auditor should not accept that assignment. Only exception to this rule is when the appointment of auditor is done by a SIC unit. SIC unit has been explained very well in the council guideline. Seeing some other factors regarding communication with auditor. See, first of all, this communication should be done for all the audit assignments, not only statutory audit, not only tax audit, even GST audit, stock audit, all type of audit assignments. Such communication is a healthy practice to be given to the previous auditor. In certain cases, in case of special audit and bank audit, where the acceptance and the communication to the previous auditor, the time limit is very less. Say for example, in the current year, all those who have done bank audit in the times of lockdown and social distancing norms, they might be very much aware that the time limit given was very less. So in such cases, the council has given an exemption that a conditional acceptance should be given to the client, stating the fact clearly to the client that this is just a conditional acceptance and the full acceptance will be given once they get a proper no objection from the previous auditor. Secondly, a term has been coined as NOC from the previous auditor. First of all, is there a necessity of getting an NOC? The Code of Ethics, nowhere it says that there is a requirement to get an NOC. What is required is just to get an acknowledgement due, just to get a acknowledgement of the communication which is sent to the previous auditor. Thirdly, what is a reasonable time period? Reasonable time period can be from 15 days to 30 days to get the acknowledgement due from the previous auditor. A new amendment has been made in the revised code of ethics that a duty has been casted on the previous auditor. Now, what is this duty? Is to provide a proper known information and facts which according to the previous auditor is very important and supposed to be known to the incoming auditor. He should give a free and frank opinion about the client to the incoming auditor. The revised mode of deliveries as per 2009 Code of Ethics and revised Code of Ethics are, earlier there were only two means of giving a communication. First one was registered acknowledgement due, that is AD, and the second one was by hand. Now in the revised Code of Ethics, there are two more means to communicate with previous auditor. A very welcome change which is done by the revised Code of Ethics is acknowledgement of the communication via retiring auditor's email address, which is registered with the institute or a very last known official email address of the previous auditor. So email communication is also now accepted mean of communicating with the previous auditor. There are FAQ which have been issued by a council regarding email communication with the previous auditor. The revolutionary change in our profession since last 2 years is the UDIN. The fourth way of communicating with previous auditor is through UDIN. Actually, the separate guidelines have not been issued as of now by council, but once this comes into fray, majority of the problems relating to the communication with previous auditor will get solved. Some other comparison between old and revised code. In situation where premises is being logged of previous auditor, in such cases, office found logged written on the AD shall also be deemed as delivered communication. But in such cases, just to keep in mind, courier is not allowed. Only registered AD is allowed. Second case, form not found at the given registered address. Even in such cases, the no such office exists at the address is also deemed to be delivered unless the retiring auditor proves that it was not served or he was not responsible for such non-service. It is a better professional practice that as a professional courtesy, both the auditors, incoming auditor and previous auditor, should work jointly in case of such transition. Short time limit for accepting the audit, as I earlier said, that in such cases of special circumstances, conditional acceptance should be given to the client, stating the fact clearly that this is just a conditional acceptance, and final acceptance will be given once he gets the NOC from the previous auditor. So this was regarding communication with previous auditor. Coming to the last case study of practicing chartered accountant engaging in other business. Mr. A, CA in practice, was the Karta of HUF. In his capacity as a Karta, he was undertaking derivative transactions on stock market. He also took sub-brokership from a stockbroker, enabling his clients to trade on stock exchange. Let's see what all misconducts or what all issues he has occurred. As per clause 11 of part 1 of schedule 1, any practicing chartered accountant is not allowed to do any other business. Keeping the dignity of the profession, council has actually decided to restrain members in practice to carry on with another business. So carrying out a derivative transaction is actually not allowed. Now, there are some businesses which council has segregated as a general approval business. That is, such businesses can be done by practicing chartered accountant without taking approval. The approval is broad based. It is given generally to everyone. There are some businesses for which a specific and a prior approval has to be taken from the council before getting into such business. Now, carrying out a derivative transaction is one of such business, and a prior approval of council was supposed to be taken, which in the cited case it was not taken, and that's why the member was held guilty. Some issues regarding CA in practice, being a Karta of HUF and holding other businesses. These issues are actually cited in volume 2 of Code of Ethics. It has been properly defined as the business in HUF which is carrying on. It must be a result of inheritance, succession, or a partition. It should not be a created business of a CA of a practicing CA. Obviously, I said earlier that a specific and a prior approval of the council is supposed to be taken, even if it is done as a Karta of HUF and not as a practicing CA. One very restrictive rule is given to a CA, that he should not be actively involved in such business. That is, no attestation of any document, any check signing is not allowed by such practicing CA as a Karta of HUF of that business. Many doubts were raised against the council regarding. They wanted to clarify whether HUF is just doing an investment business, and such investment business is out of its own funds. So can CA pump in his own funds? Council restricted that practice, and it is very well implied that if he makes investment from the funds pertaining to HUF only, then such investment function is allowed. The CA in practice cannot pump up his own funds as a Karta of HUF in that business. Coming to some other cases of CA in practice becoming eligible to become a director in the corporates. So first of all, managing director or a whole-time director, the permission of a council is required. That is, a specific and a prior approval is required to become a MD or a whole-time director. As far as promoter or a promoter director is concerned, no such permission is required. There is a term coined in the Code of Ethics as director simpliciter. It has been explained now in the revised Code of Ethics. It has been clarified that who is a director simpliciter means a director is not a managing director or a whole-time director. He is only required to attend the board meetings. He will not be paid any remuneration except the sitting fees for attending the board meetings. So he should not get into any day-to-day function or any attestation function of the business. Only then he can be termed as a director simpliciter. If a CA in practice is becoming a director simpliciter, there is no need of a specific permission or a prior approval required from a council. Now, in such cases, a special care has to be taken, especially in a private limited company, and especially in small and medium-sized companies where any CA in practice just get into the directorship position, and sometimes unknowingly he might sign documents or might sign checks on behalf of a company, and he might get into trouble in such things. Next slide. uh, yeah. Just taking the last point, again the doubts were raised against the council that if there is a director simpliciter for a company, can there be a similar position with regard to LLPs? So again, a clarification has been given by council that a member in practice cannot become a partner or a designated partner, whether working or non-working in an LLP, not carrying out the professional work. That is, if it is a non-professional LLP, strictly it is not allowed for any CA to become a designated partner or a partner. But as far as if it is a professional firm, that is many of our CA firms are LLP firms. So in such cases, he can become a designated partner or a partner. Yeah, so that's all from my side. Atul bhai, if you want to add something.
I think yes, you have covered all the queries and all the practical tips. We do not have any further time because we already crossed the time which was allotted to us. So just what I will do is a couple of questions which are there, which are already covered. I will not take up that. I think most of the questions which are there, it is relating to either BNI network or just dial or I think everything is covered. So I think most of the questions are now covered here. So I can directly now give back this session to the coordinators. So Amruta, you can take over because we are running short of time. So I think we are through.
Atul sir.
Yeah.
Just one suggestion. This is
Please.
Q&As. If you can, if any panelist can answer the question by typing the answer, so otherwise, or can give the reference of slides also, if it is possible.
Yeah. So this is I have gone through. See, there are 10 questions which are there, and I think most of them are been either I have addressed or in the course of discussion just covered. So that is what I was saying. So in case if there are any questions which are left out, we'll see. But I don't think any questions which are left out.
Okay. Okay, sir.
Yeah.
Okay. Amruta, are you there? I think so. Amruta. I think so. Amruta is not there. Yes.
Yes. Thank you so much to the entire team of the panelists. Actually, I had lost the connection in the interim. Sorry for the delay. I really thank you, Atul Bheda sir and his team, Sanjay ji, Chintan ji, and Harsh. It really means a lot for sharing the insights. It was a wonderful knowledge sharing session, and definitely the participants have benefited. Simultaneously, you were addressing the Q&A tab also, which was flowing throughout the session, and there are a few other questions also. So may I please request you to please address them so that the participants would be more than delighted. It's a humble request. And of course, I hand over the further proceedings to my colleague Kashinath Pathare. I welcome Zavre sir and the next team also. Over to you, Kashinath. Kashinath, please unmute.
Thank you, Amruta. We are immediately starting second session now. I welcome CA Sumit Seth. I think Milind Kale sir is there. Abhishek?
No, he would be joining in the post-lunch session.
Okay.
Yeah. Zavre sir would be addressing now, and then we would start with the Sumit sir session.
Okay. I welcome all of you for second session. Today is very interesting session. Topic is Global Reporting Initiative in Emerging Trends. Today we have CA Sumit Seth. He is a partner and leader in capital market and accounting advisory services. He is also practicing chartered accountant. He has worked at various committees like CII National Committee in Financial Reporting, ICAI ENDS Implementation Group, ICS ENDS Transition Facilitation Group. He is a special invitee to ICS Accounting Standard Board. He is a partner in assurance practice of PwC and has over 23 years of experience providing professional services to public and privately held companies in various sectors, including emerging and large multinational companies. He is leading PwC CMAS practice in India and has extensive experience of working alongside companies on a very wide range of transactions, including IPO, capital market transactions, acquisitions and disposals, mergers, group regulation, etc. Additionally, he is also involved in gap conversion engagement. He is providing learning solutions and accounting advice to clients. He is currently the National Technical Leader for US GAAP and US GAAS reporting for PW. In this role, he advised the firm in client across a wide range of topics. He has also been National Technical Leader for IFRS and ENDS reporting for PW and part of PwC's global IFRS accounting consulting services team. He has worked at PwC London office. His significant experience multiple financial reporting framework, Indian GAAP, IFRS, US GAAP. He is a key expertise in capital market and accounting advisory at various international clients. He have published an editor of the firm publication titled Reporting Perspective. He is regularly quoted in the Indian media on matter related corporate financial reporting and a regular speaker on matter of professional interest in seminars organized by various professional bodies. He has actively participated in developing and delivering training in the area of accounting and auditors in India, Middle East, US, Central Europe, and America location. Uh, I welcome you, sir. Uh, Before starting session, we have Anand Beast. He's a Anand Beast. He's a Bajaj Alliance manager. Uh, Before starting session, I request Anand Beast to give your product information. Over to you, Anand.
Ashinath, I'll just take 1 minute over here. We have with us here Dr. S.B. Zaure, sir. He's a chair AOSSG. He has another meeting to join. He was actually waiting since 11:30. Sir, if we may request you to please give overall perspective, global perspective about financial reporting, as you are heading almost 27 countries as AOSCG chair. So we would be really delighted if you can share the thought. You are one of the apt personality to have on this particular topic. Then we would listen to Sumit ji after his address. Over to you, Zaure, sir.
Thank you, Abhishek. Am I audible properly?
Yes, sir.
Very good. Thank you. First of all, I congratulate Pune branch as well as Western India Regional Council to hold this sub-regional conference at Pune on virtual mode because of the corona pandemic. Congratulations to WIRC as well as the Pune branch team for holding this regional conference. Today's speaker for the global reporting is C.A. Sumit Sheth, from whom I have taken a lot of help during my tenure as a chairman of the Accounting Standard Board, and he continued to help even the subsequent time period also. He is an expert faculty and certainly he will give the justice to the topic as such. Still, as opening remarks, I will give the little information. See, when I'm talking about the global reporting, I'm primarily talking on financial reporting, because there can be auditing reporting also. General purpose financial statements, namely balance sheet, income statement, cash flow statement, statement of equity, serve the purpose of understanding financial position, financial performance, cash flow, changes in shareholders' equity. Now, financial reporting standards primarily aims at the primary user. There was a discussion at ISAB, that is Accounting Standard Advisory Forum at ISB London, that for whom the financial reporting standards we have to prepare. And then it was divided into two parts, the primary user and the secondary user. Who are the primary users? Primary users are investors, existing as well as potential, lenders, and other creditors. That means the main focus of financial reporting standard is on primary user, even though the secondary users like employees, analysts, customers, government, they may take the benefit of general purpose financial statements. Other stakeholders do get benefit out of these general purpose financial statements. Worldwide, globally, the financial reporting is divided into two parts. One for public interest entities and number two, other entities. Who are the public interest entities? Public listed companies, even the subsidiaries, associates and joint ventures of that public listed companies. Even it should be government corporations. Even the large borrowers from public system, even the large cooperative societies, and even large trust and societies who are using the public funds. Globally, the public interest entities are interpreted as listed companies only. In India, we have taken a little broader view, not only the public listed companies, but even the non-listed companies with reference to threshold criteria of net worth. Now, still in India, as a chairman, I tried, why not to cover the government corporations which are incorporated under the state enactment or under the central enactment, even the large cooperative society like Amul, because the robust financial reporting standards, what we call as Ind AS converged IFRS, these are applicable to the public interest entities. However, the negative worth corporations as well as large cooperatives, corporations even are excluded from applicability of Ind AS. And then we talk about other entities, proprietors, partnership firm, etc. Primarily, public interest entities, there has to be a robust financial reporting. And for other entities, there is a local gap or the local standard. You will agree with me that what is the objective of financial reporting? Tracking, analyzing, reporting financial performance, financial position, cash flow position, and in addition, the global trends are starting from the Mao Coro earlier, that additional business information, additional information about environment, additional information, we are now talking about the business commentary, social corporate commentary, management commentary, environmental commentary, sustainability reporting. Actually, the IFRS Foundation London has recently taken a topic, the trustees, whether sustainability reporting should be a part of financial reporting. We are talking about integrated reporting or the non-financial reporting. So anyway, in the recent meeting of my AOSAG annual meeting 2 days before, even before the International Accounting Standard Board, I said it is very important that companies are presenting few financial ratios which are favorable to them. Ratios are also not worked out in a proper manner. You will agree with me that earning per share, now there is a standard. Earlier it was calculated by different way, and therefore I presented before the IASB vice chair and IASB members, then why not to take a project by IASB of standardization of financial ratios? Anyway, what are the essentials of financial reporting? Essentials of financial reporting is availability of contents from the books of accounts, effective business communication, understanding by the common man, easy comparison, relevance, analytical presentation, promptness. And therefore, my friends, in this direction, global financial reporting is taking place by two ways. One is by IFRS Foundation and the International Accounting Standard Board by way of IFRS and Financial Accounting Standard Board FASB as a part of the US GAAP. The IFRS Foundation or IFRS are the principle-based standards, while I can say, Sumit can comment further, that the FASB, the standards of the under the US GAAP are principle-based plus rule-based standards are there. FASB is right now working with IASB to establish compatible standards worldwide. And there are common projects like revenue from customers, even the leases, insurance contract, fair value, consolidation, business combinations, and so on. I hope in the long run, there will be only one standard setter body in the world and not the two. And whenever I attend the meetings in London, at that time, the representatives from US are also present, and I hope in the long run, they will join together. Finally, I can say how the financial reporting standard should be. And I say this I talked 2 days before also, and it is very important. I said standard should have characteristics of speed. It should take a speed. What is this speed? First, S stands for simple, P stands for practical, E stands for effectiveness, E stands for economical, and the D stands for duplicable. With this initial remarks, I'm sure that CS Sumit Sheth will do the justice for the topic of global financial reporting. In the meantime, thank you, Atul Beda. You are asking CV Pawar that give the reporting to Mr. Zavre. Then in that case, I'll have to contest my central council election, ensuing central council election, enter the council and give the suggestions for changing code of conduct. Anyway, thank you. Over to Abhishek.
Thank you, sir.
Yes.
Thank you, sir, for a word of wisdom. Before starting, I request Dheeraj Datlani. He is a manager of Bajaj Alliance for this our sub-regional conference. This possible because sponsorship of Bajaj Alliance. I request Dheeraj Datlani to share your presentation within few minutes.
So good afternoon, Mr. Patare. First of all, a warm, heartfelt thank you on behalf of my organization for giving us this opportunity in this prestigious forum to make this presentation. I think it's a great honor to be out here. The idea today is we thought we would want to share what are the business opportunities present in the market for life insurance and how is the life insurance market changing and how do we see it evolving over the next 10 to 15 years. So, but before that, I thought, let me just give you an overview. See, LIC as a company was formed under the LIC Act almost 60 years back. And since then, obviously, they have been working clearly on an advisor-based model because we did not have the sufficient funding to ensure that we could have employees everywhere. And if there was a deeper penetration required, it could have been done only through a variable model. And that's where the advisory model came into play. But this model has evolved. About 15 years back, all of them realized, see, bankers are very nice. Bankers are people who have more information than a normal advisor has to give. And therefore, the quality of advisory that can be given by a banker could be superior when compared to a normal advisor. And that's how bank assurance model was formed. Here we are again after 20 years, after bank assurance was launched, or rather 17, 18 years after it was launched. And now we are saying chartered accountant is the most qualified person according to us to give advisory. He already knows, because the banker knows only कि मेरे account में जो पैसा है वो कितना है मेरे पास, मेरे customer का. But the inflows, outflows, seasonality of business, the responsibilities, the risk-taking appetite is known only and only by a chartered accountant of a person. And in today's era, it's not possible for one person to, go for audit to one person, taxation to a next person, GST to the third person, life insurance to fourth, and mutual funds to fifth. So here is where we are seeking that if chartered accountants could take up this advisory model. The quality of advisory that can be given by them to the investors would be really fantastic. So that's the preview of what I wanted to talk about. And with this, I would like to share a small presentation that we have right now. I hope this slide is visible to all of you.
Yes, sir.
Yeah, thank you so much. So in two chartered accountants, I'll try to finish off in 9 minutes and maybe earn 1 rupee profit. Yeah. So pardon my simplicity, but I know chartered accountant's role is very, very, it's not only inclusive, it's something which is very, very broad. But if I have to look at this role, broadly, if I look at it, tax planning, tax assessment, income tax filing, GST registrations, so on and so forth comes under tax planning. Accounting and auditing, obviously, bookkeeping, registration, financials, risk management, advisory on the financial statements, all that comes into play. So, and obviously, a chartered accountant also plays as a facilitator, taxpayer and government, which helps us help the government achieve the targets through collection of taxes. Now, again, as I said, this is very simplistic. I'm giving a very, very simplistic review from a realistic, from a retail perspective, not from a corporate angle. And obviously, some of the other questions that you face are, what will be the shortfall in ATC? How to reduce corporate tax or company tax? Are there any additional benefits in creating a HUF? And where do I invest my money? Because we know that the investors come back and says, sir, paise kahan invest karu? And there is a lot of informal advisory that is given by the chartered accountants because of the sheer knowledge and the expertise that they possess of this field. So you are providing, your advice definitely matters. This is what we are trying to tell you. And it is better that somebody with financial expertise, financial knowledge, and knowledge of the entire risk profiling of the financials of a person gives that person advice. The quality of advisory will be much, much superior. What we are saying is, do what you love, you continue your advisory, but what we are saying is you're already you're already a one-stop destination for individual taxation, company taxation, and risk mitigation. What we are saying is point number 3. We are saying if you could also give advisory on life goals planning. Now, life goals planning is something as a concept which Bajaj Allianz is very, very close to. What we say is we don't want to give advisory like a normal life insurance advisor. What we want to say is we want to understand what kind of life goals does every person have. The life goals could be, wedding of a child. It could be education of the child. It could be my retirement. It could be business expansion going ahead in the future. And what kind of risk appetite that the person has. And based on the inflows and outflows that based on the outflows that the customer would want, the investor would want, we would want to plan only according to those life goals. We don't want to give a shortcut advice, which we don't want to give an advisory which is very short term and does not help in planning of the life goals. We also definitely want to ensure that the risk mitigation is done at the optimum level whatsoever out here. Here, obviously, as we said, if we get support, life goal planning can be done. Business insurance is something definitely all of us understand that in today's today's scenario, succession scenario, succession planning. If you lose a key man of the business, what are the implications? So business insurance is something that would cover that. Risk management and planning, obviously, if heavy loans are taken, are the key men of the people covered to ensure that we have a succession planning done, or the financial implication that could hit us tomorrow? Have we actually planned for that? And yes, obviously, for the advisory, there are certain monetary benefits. So these are the 6 broad things that we suggest, or we have seen some of the chartered accountants we are associated with advise their customers. One is employer-employee. Second is Hindu undivided family, how it can be used, how insurance can be used out here. Partnership insurance, keyman insurance, Married Women Property Act, very, very critical for proprietors and partners, wherein there's only one thing which can, in case of any litigation, in case any there's a court decree, Married Women Property Act is the act if you make a life insurance investment under this act, this money cannot be attached by any court of law or by any creditor. It's a more than 100-year-old act during the from the British era. I think this is very much required looking at the uncertainties that the businesses face right now and looking at how these partnerships and partnerships model act. There is typically a one or a two key man, to that particular thing. You will see, if God forbid, in case of the death of the owner, I'm sure creditors will rise, but debtors will run away. So Married Women Property Act can protect the family from any attachment. So this is something which is very, very necessary. And NRI insurance. So I should also thank the Honorable Finance Minister for keeping life insurance tax-free, because obviously I believe she understands that India does not have social security unlike America. So this is the way they are supporting in life insurance industry to, help customers save them for themselves so that there is a good retirement corpus available to them and the money is tax-free on it. Now, these are certain trends of the life insurance industry in the world that I would like to share. If you look at life insurance penetration, and we are just looking at Asia, we are not even looking at the developed economies like America or UK or France. Our life insurance penetration is just 2.7% of GDP. Whereas if you looked at Malaysia and Thailand, which we could equate economically to be close to us at 3.3, 3.6. But if you're looking at some of the advanced countries like Japan and Singapore, life insurance penetration is 6.2 to 6.7% out there. Hong Kong and Taiwan are at about 17%. So that is the global opportunity. We are sitting at, unfortunately, only at a 2.7% penetration. The second table, if you look at it, is per capita. This is the life insurance density. $55 is the only amount that each person in India pays as life insurance. Compare that to Hong Kong, which is $6,750. So people who have, first is penetration. The second part is the quantum of insurance that people are taking is extremely, extremely low. They are not realizing that maybe 1 crore का value ही नहीं बचा है. आज अगर मुझे कुछ हो गया, 1 करोड़ मैंने बैंक में डाला, मेरी फैमिली ने डाला मुझे होने के बाद, बैंक एफडी 5% ही रेट देगी. They will get only 5 lakhs annually, and that too would be taxed. So we need to make them realize what is the opportunity out here. What we are seeing also is the life expectancy going up. In 2015, it was 67.6. By 2035, we are expected to go to almost 72, and 2055 it will go to 75. And what is interesting is the population, the working population is actually will move up from 2015 to 2030 by 26%. And that's a massive, massive population that is earning today and will have to save for their retirement for tomorrow. So there's a massive opportunity in terms of life insurance business for us. And these are certain things that we'd like to show. So we carried out a survey through Nielsen, and we had some interesting things that came out. That 70% of the customers actually said that retirement is the highest priority on their mind. Now, if you actually look at this, the aging population will go from 2015, which was 9% to 19% in 2050. So the younger lot of us, we'll be retiring in the next 30 years. So we will come in this population. We will have to save up for this. As I said, post-retirement, 20 years we have to at minimum take care of if we have to look at it, because life expectancy is going up. Another sad thing out here is, while government employees have very good support in terms of their pensions, but private companies do not have that. They get money and then they are supposed to do the planning on their own. And this is where your advisory would come into place. Just look at the pension assets to GDP ratio. We are at only 4.8% of GDP. Only 4.8% of GDP, which means people were, the individual business owners and the salaried people are not saving for themselves. They may be saving, but it's not with a specific goal. इतना पैसा मेरा एजुकेशन में जाएगा बच्चे के, इतना पैसा मेरे बच्चे की शादी के लिए जाएगा, और इतना रिटायरमेंट के लिए जाएगा. We need to make them aware of this thing, because if they don't save separately for this, their other wants and needs will eat up their savings money. If you have to look at Indian economy, obviously we saw very bad turmoil, not only in the Indian economy, but the world economy as well. March, we had the corona outbreak, and obviously the markets dilly-dallied and they fell down. But the good news is markets have rebounded. We can always debate on kaisa tha, kaisa nahi tha, and so on and so forth. But the good thing is, if we look at it, our FDI inflows are growing very, very strongly. If I even just compare them from 2015 to 19 period, the growth rate was 12.83%, but now we are at 18.32%. Indian consumption is increasing. India is becoming more and more a consumption economy right now, which will yield to higher production capacities, manufacturing capacities. And obviously, this is because of disposable income and the income levels going up. Again, if you look at this thing, obviously GDP is in negative growth right now, but in 2020, by 2022, we are expecting the GDP growth rate to move up to 8%. And the early signs are seeing the first quarter degrew by 23%. Quarter 2, we've degrown by 8% as an economy. But quarter 3 and 4, we are poised to make a very, very strong bounce back. That's the spirit of India. So early signs, as I said. Why Bajaj Allianz? I'm so happy you've given us this chance. And I'm sure due diligence would have been given before giving us this chance. This is a simple slide which basically explains the needs of a customer with respect to his age. When he starts off at the age of 20-30, obviously he will need, it's his first job, he will need medical care, buy a new car, maybe get married. 30 to 40, he'll buy a home. Medical care is something which is constant, but here he has to start worrying about his child education. When a person goes up to 40-50, everybody's taken a loan, but how to pay off this mortgage? Again, retirement planning has to start. So early 40s, this has to start. Medical care continues to be very, very important. And 50, what's his net worth and how will he retire with? And that is the way we, offer our products, and that's the way we, that's the recommendation we have. So if you look at it, health is something which is health, savings and investments. If you look at the chart below, these are something that will be very, very constant. Protection by protection, I mean pure term plans. Term plan initially when my net worth is not much, because I've just started earning and I've taken up liabilities of buying a car, buying a home. I need to have a pure protection plan which will cover my family in case something happens to me. And retirement planning, as I said, is something that post 30-35 is something that we should plan. And this is how we recommend. Our product recommendation chart also goes to the customer. These are some of the offerings that we have. If you look at our our debt fund returns or participating fund returns, the returns have been very, very strong. The bonuses that we've given over the years, even last year we've given as high as 7.7%. All of you would appreciate that the fixed deposit rates right now are very close to 5%, which are again taxable. And here we've given a bonus of 7.7%, which is completely tax-free. So the kind of offerings that we have are very, very, beneficial to the customer. Now that is as far as the traditional products are concerned. But if we go ahead, we also have unit link plans, because today's generation, there's a lot of awareness, there's a lot of knowledge, and they say, I am ready to stay invested for longer, but I want to look at returns which are stronger. And I'm very, very happy to announce that we have very good unit link plans, and they have been rated by Morningstar. Morningstar is a British agency which rates all the funds of life insurance houses and the mutual fund houses. And they have rated all our equity funds either 4-star or 5-star. In fact, 3 of our funds are rated 5-star and 1 fund has been rated as 4-star. And you can look at the comparison against the benchmark of the Nifty. Over last 10 years, while the Nifty is given 7.5% return, my pure stock fund, which is my 5-star rated fund, has actually given a 12.4% compounded annual growth rate. So please understand what kind of a return we are talking about. This fund has been in inception since 2006, which has been 14 years. 14 years, the CAGR has been 14.5%. All of your chartered accountants, all of you know the power of compounding. So rest assured, the kind of advisory that would be given by you would be very high. But let me also assure you, the company that if you tie up with us, the kind of products that you have to offer to the customers or suggest to your customers would be brilliant. And these are something that, these are world class, and we are leading big time. Just something to tell you about our company. All of you know about Bajaj, founded in 1926, headquarters in Pune. Allianz obviously is a very, very old company, 130 years, founded in Germany. 74% stake in Bajaj Allianz is Bajaj Finserv, 26% is Allianz. Head office is Pune, and as we said, we started operations in 2001. And all of you know the track record of Bajaj Finserv and Bajaj Finance in the share market and the kind of CAGR they've been giving. We are a part of their company. We are their child company, and similar kind of growth rate is something that we aspire for as well. Again, some of the synopsis of the company. The net worth of our company is 9,731 crores. We've grown 10% vis-a-vis last year, whereas the economy degrew because of bad March or went very flat. But as a company and the industry, we've grown. So the industry is growing and we are growing even better. Our renewal premiums, because we pride ourselves on what kind of renewals we get back. Because if customer does not pay me the renewal, then unfortunately he gets a loss. I don't want the customer to make a loss. I don't want to make a profit that way. I want to make a profit by ensuring that his renewal premium comes in. Assets under management 56,000 crores, which you must appreciate is a very, very big amount. We have covered 3.44 crore customers as of now. Solvency ratio, which is a benchmark set by the IRDA, to be at about 150-200%. We are very, very strong out here. We are at 745%. So we are the best in class out here by a very, very big margin. We have a huge distribution of 556 branches. These are some of the, proud moments for our company, if I may say so. We provide death claim within 1 day, provided obviously there is no material disclosure which has been hidden from us. Our overall claim settlement ratio is again world-class, 98.02%. Solvency, as I said, so 745%, world-class, by far the best. And we are AAA rated by CARE. And if you look at the most trusted brands amongst life insurance, first is yes, LIC. Second, if you look at it, is SBI. So these are government-backed organizations. But amongst all the private organizations, if you have to look at it, we are number 1. We are number 3 overall. But we are a brand which is trusted by our investors big time. These are some of our noteworthy recognitions. 44th annual insurance summit, we won the award. Online user experience, we invest heavily on technology, and we really appreciate customer moving to technology and having a platform where he can sit at home, comfort of his home, and get all the servicing that he desires out there. Best innovation award we won. We got a Guinness World Record, but this is for a social activity that we had done. Business Today has again given us a Money Today Financial Services Award. We've also won the Best Product Award multiple number of times. Top 75 most valuable Indian brands across the industry, not only across the industry, so across sectors we are present out there. As I said, we have a lot of digital enablers. So any of our partners, any of our customers has multiple platforms where all his issues can be resolved. The advantage is obviously there is no investment besides time investment and earning potentials. The advantage is it's a booming industry. There are international training convocations wherein we would have faculty as senior as we have out here. In this forum, we'll have the stalwarts of the industry who can give us a better insight in these forums. Knowledge and skill, extra advantage of business insurance, and I believe it's a noble profession, because so many times you would have seen, especially in the Corona times, that we've been talking about life insurance, but some of our near and dear ones had not taken a cover, and unfortunately they have to go through a tough time. So I think covering somebody and ensuring his family's or his or her family's social security and financial security is something that we can, we should really look forward to. So this is all I have to say. Thank you so much for the time given. I believe I finished within the time allocated of 10 minutes. And again, I, thank all of you for the opportunity. And so Anand, if you want to, say something or you want to contribute something, I would just welcome you forward for that.
Please unmute Anandji. I think it's not good.
So,
I won't take much time. I will have to skip this opportunity so we can let them take the session ahead.
Sure. Okay. So thank you so much for this lovely session. We will pass on the details to you later on. And if you're interested in partnering with us and you have any further doubts, please do not hesitate to call us. I am sure it will be a very, very meaningful partnership that we can carry on going ahead. Thank you so much for this lovely session. And a special thanks to Zavre sir. 20 years, I am seeing you 20 years later. I used to be a part of your coaching classes, sir. Thank you so much.
Sir, please unmute. Zavre sir, please unmute. Zavre sir, unmute.
Thank you.
Thank you so much, sir. Pleasure.
Bye.
Bye.
Thank you. Thank you, Neeraj, for giving sponsorship. Thank you.
Thank you. See you. Bye.
Now I request CA Sumit Seth to start the session. Sumit ji.
सर कॉल करते मी त्यांना.
Kashinath, Sumit has joined or not joined?
Joined, but not able to see. We are able to see on screen. He's joined already.
Hello.
Yes, sir. Sumit ji. Hello. Sumit ji. Sumit ji.
Hello. Hello.
Yes, able to hear.
I'm finding it difficult.
Sumit, we are able to hear you. Please continue.
Hello.
Sumit, you please continue. We are able to hear you. Kashinath, what is happening?
Sir, actually, he's not speaking for.
Hello.
Sumit?
Hi, can you hear me?
Right, yes, absolutely. Zavre here. You can.
Hello, Mr. Zavre. How are you?
Fine. Please start the session.
Good afternoon. Good afternoon. Yes. Okay. All right. How much?
Opening remarks.
Sorry?
I don't know whether you heard my opening remarks.
No, I couldn't actually. Unfortunately, I couldn't.
I already congratulated you. And
Okay.
what you have given to the Accounting Standard Board, and I talked about global financial reporting, IFRS, as well as US GAAP and little comparison.
All right. Okay. Thank you, Mr. Zavre. Thank you so much. So, how much time do I have, Mr. Zavre? I'll accordingly, plan the presentation.
Kashinath.
Sir, you can take time. 1 hour.
Okay. All right. Okay. So let me just share my screen. Can you see the presentation?
Yes, sir.
Hello?
Yes, sir.
Okay. All right. First of all, good afternoon, everyone, and thank you very much for this opportunity to be able to come and talk to you. And I hope everyone's well. As the topic goes, global reporting initiatives and the emerging trends. So, what I've attempted to do is try to put together, some of the key developments which have been taking place at the global level, and clearly in the areas of financial reporting, audit and assurance. What are the regulators, global regulators, looking at? And followed by the next new topic, which is ESG reporting, and I'll talk some bit about that because that's something which is gaining a lot more prominence now. And finally, of course, the opportunities for our chartered accountants, which is, I think, a fantastic discussion. So with that, let me move and I'll move to the next slide. So just to kind of set the context here, clearly, in terms of the global reporting initiatives, I think there are two important themes. One, in terms of how do we make the financial statements relevant, decision useful for users, and therefore what else can be done there? I think that's one broad theme. And second theme, I would say, is the trust expected from us as chartered accountants and auditors in terms of providing assurance and, I would say, credibility to those financial statements. So that is in the context of the themes and activities which have been undertaken by the assurance standards and the assurance standard setting boards. And I guess the third is, the global regulators, and they have an important role in terms of monitoring and trying to enforce these financial reporting standards and auditing standards. So I'll talk a little bit about that. So I think the first one, is out here. What's happened over the last, I would say, 1 or 2 years. Clearly, the biggest change was IFRS 16 leases, and I think we all know about that. It's adopted globally. India is not far. It adopts, quite concurrently as the global changes take place. In India also, we adopt the standards. In fact, over the last few years, and, as Mr. Zavare has been also previously the chairman of the ASB, we have been responding from the institute side, on these exposure drafts when they are in that stage, as opposed to maybe waiting for the final standards, because we also adopt these standards immediately. So leases was the big one. Coming to that, in the context of the COVID situation, there were some relaxations or concessions which were given to lessees because of some renegotiations, waivers, etc. So that was another aspect, and I think we will see some of that, as this year-end's financial statements get finalized. Some of it has already happened in the interim reporting. The other change, I would say, impact has been on income taxes, dealing with uncertainty over income taxes. So typically, tax positions which may be challenged by tax authorities. How do you account for that? How do you disclose that? How do you consider for financial reporting purposes? So there's a specific guidance on that, and again, that has been adopted globally and in India. The other change which came about is with respect to definition of a business. And again, this is as part of the IASB's post-implementation review of the business combination standards. It was felt that preparers and others were finding it difficult to apply the definition of a business. So as part of the standard setting activity, IASB made some changes to that. It actually tried to simplify it in a way, bringing in one is a concentration test, which is if predominantly or substantially all the assets value is concentrated in a single asset, then it's more like an asset purchase instead of a business. This is important because the accounting for an asset acquisition versus a business combination is quite different. When you acquire a business and you do a business combination accounting, there is goodwill, as you would know, whereas in the case of an asset acquisition, there is no goodwill. And of course, there are many other differences. So that was one important change. The expectation is that this could impact maybe real estate, sector and to some extent the pharmaceutical sector, because some of those acquisitions may not be treated as business, but probably could be assets because the amount is really concentrated in a single asset or a group of assets. It's also made some other changes where previously you would typically for an acquired set of activities and assets to be a business, you should also have outputs, means be able to provide goods or services in the form of outputs to customers. Now that requirement has been done away with. It's not necessary. But if in situations like those when there is no, I would say, existing outputs, then there's an additional requirement to see whether the processes which are acquired are those substantive, and also whether there's an acquired assembled workforce which can be used to convert the inputs into outputs. So there is some guidance around that. So I think this would be an important area to look at as we move along and as companies make acquisitions. The other changes, I would say, amendment is the definition of what does material mean. Actually, it is that way supposed to be quite simple. But the ISB has clarified that, amended that to say that information is material if it's omission, misstatement, or even if it's obscured, and that could impact the economic decisions of users of financial statements. So I think that's a change, which is including the word obscure. And it's pretty interesting when you say obscure, means they've given some examples of obscure. That is, the descriptions or disclosures are vague or unclear. If there's a lot of scattering of information across the financial statements, if there's disaggregation of similar items and aggregation of dissimilar items, so those types of examples have been given. I think the intent is to make the financial statements again, concise in a way, but again relevant and useful to the readers. So I think that's one change. And also this concept of materiality then is across the standards, consistently used, and across the conceptual framework. An interesting point is that they also define who are the primary users of financial statements. And that is important, I thought, and that's defined to be existing investors, potential investors, lenders, and creditors. So those are the kind of primary users of financial statements. The other area which we will see is the interest rate benchmark reforms. Now, as you may know, the LIBOR and similar other interest rate benchmarks across the world, they will phase out because some of the issues which were identified over the last few years in setting up of these rates. So, for example, by end of 2021, the LIBOR will be phased off. Similarly, in India, we have something called MIFOR, which is the Mumbai Interbank Forward Offered Rate. Basically, this MIFOR uses LIBOR as an input, to determine its MIFOR rate. And accordingly, if LIBOR gets phased out, your MIFOR is being will need to be updated. The reason this is important is because from the latest what I read, there are some $300 billion of financial instruments in the Indian context, which may either have LIBOR or may have some element of this MIFOR. And what that means is, these would need to be updated, and therefore it has consequential accounting implications in the context of hedge accounting, in the context of modification of the loans, bonds, etc. Right, valuation. So I believe RBI is also working on this, but this is again an important area for all of us, preparers, investors, auditors, all to be aware of. So that was one. And the last, on this slide is clearly COVID-19, right? I mean, how can we not talk about that? It's been a difficult year for all of us, and it's personally, but obviously from a financial reporting perspective, of course, there have been consequential challenges. So ISB has recently come up with some guidance on how do you apply IFRS for the 2020 year end in the context of COVID-19. I think it's a pretty good 7-8 pages of summary. I think I would encourage us all to read it. But the key out there is their comment to us is there of course is a difficult environment, the external business environment. Obviously, with that environment, it comes along with uncertainties, challenges, the expectations of business performance where management obviously is changing continuously, and information is imperfect in these times, and it will keep changing. So the kind of theme from ISB is in these situations there will be I would say more challenges and difficulty in considering estimates, especially because those are the ones which could be volatile, could get impacted, and areas such as impairment of fixed assets, forecasts for assessing going concern assumption, fair value measurements, liquidity type matters, right? Though there will be difficulties, but management preparers would have to consider that, have to make use of best available and supportable information, should make sure they have a robust process to develop that, report that, and make appropriate disclosures again, so that users can consider that in their decision making. One of the important comment was that these times we should not freeze our estimates to pre-COVID time, because that may not be a good answer, but instead disclose it and appropriately report it. And it's all right if, like I said, the information is imperfect. It's better to be reflected and reported than to just keep it at some arbitrary pre-COVID level, which may not reflect the reality. And again, they said they understand that there will be changes, so preparers and others should not worry about being second guessed, so long as they have done their best. I think that was kind of overall theme, but I would encourage others to read it. It's a very nice summary, from the ISB. Not to mention, not to forget, our own institute has done a fantastic job of coming up with elaborate guidance, both from an accounting and auditing perspective, on COVID, and it's out there on our website. So I'll move forward. The next slide, again, I thought I will cover this because this is something which will impact us in the future. This is something which, the board, ISB is reviewing and working on presently. And again, a lot of this is in response to feedback from investors, feedback from, users of financial statements as to, again, what is it that makes it, more decision useful. So I'll quickly go through it, and again, I would encourage you to go to the details of this if you get a chance. And also, our institute, our CA Institute in India, is responding to many of these. Some of them have been, some are in the process. So I think it's again an excellent initiative also from the institute side. I'll quickly go through it. The first one, again, a very controversial topic globally, which is about goodwill and business combinations. I think the key point here is, should goodwill on acquisitions be amortized or should it continue to be accounted on an impairment only model as is done presently? That's one question which is out there. Again, ISB is looking at it. FASB in the US GAAP is looking at it. The second point here is, can we improve information which is being provided on acquisitions which companies make in terms of metrics and other information to evaluate whether the objectives of acquisitions continue to be achieved, not achieved, etc. More like a stewardship function, stewardship aspect from management as to when they said and when they bought or they acquired a company, is it really achieving the objectives? That's the second kind of aspect which is being considered out there. And again, I think both the boards are looking at this, and you will see more of this in the coming time. Even the institute will respond to this as part of the discussion paper. So that was one, I think, a very big item. Second is, which is again, the presentation and disclosures in financial statements. So presently, if you see the format of the income statement is the Schedule 3 format. Now, ISB is looking at a very broadly to really overhaul and change this, presentation format from Schedule 3 kind of situation to a, it will be like a certain items on the income statement, for example, operating income, financing income, and investing. They've asked for suggested some subtotals to be given so that this can be more consistently compared, across companies and also maybe industries. So this is going to be again a big change, I would say. It also has a concept of what is unusual items. It also has some requirements to, provide reconciliations between any management performance measures which companies use vis-a-vis the corresponding IFRS total. So I think that's again a big topic. Could change the presentation of income statement quite significantly. The other two topics here, business combination, a common control. Again, based on investor feedback, there's been diversity in practice globally as to how one would account for a common control business combination. That is, whether you use the carrying value or the book value method, or the acquisition method, which is based on fair value. So again, ISB is looking at this and coming up with certain approaches as to how one should account for it. Again, they're looking at it from the perspective of the users of the financial statements, i.e., if it's a public company, if it impacts the non-controlling interest holders, etc., then you would account for it based on the fair value method or the acquisition method. Else, it would be the book value method. So again, something to watch out for, which could have impact going forward in the context of the common control transactions and group restructurings. Moving forward, the other often debated area has been when you have financial instruments issued in the form of, let's say, shares, equity shares, preferred shares, convertible debentures, etc. Always the important question here is this equity? Is it liability? Is it a compound instrument? And it's quite complex. And there are rules around that. So again, ISB is looking at this to provide some very conceptual type guidance as to what is a liability, what is an equity, trying to also align it with the conceptual framework to an extent. So I think that this is again an important area to watch out. The next I would say is sustainability reporting, and again I have a few slides later on this, but the ISB trustee, the IFRS Foundation, they have come up with a consultation paper as to whether there should be an independent sustainability standards board, which should look at reporting of non-financial information, because ultimately even that is very important and relevant for users. And when I mean non-financial, it means covering topics such as environment, social aspects, and of course governance. I'll talk a little bit about that towards the end of my session, but that's a consultation paper out there. Again, this is a very hot topic, and I think we all should try to become a little bit more aware on this as part of our profession. And finally, I'll say, they have started now again as after issuing standards, ISB, and even the US FASB. They look at how the standards are actually being applied. What's the feedback? Is it really meeting the intended objectives? So they do a post-implementation review. So some of these topics about goodwill and common control transactions, that all came as part of the post-implementation review of IFRS 3. Now the ISB is doing an implementation review of IFRS 9, which is classification and measurement of financial instruments, and also IFRS 10, 11, 12, which is the suite of consolidation standards. And so let's see what comes out from there. On the right side of the slide, I thought I will pick up two important themes. These are the IFRS Interpretation Committee, the agenda decisions. As preparers and others have some specific questions on complex matters, they write to the ISB. The ISB then decides to take it up and provide some guidance and issue some agenda decisions on that. These two topics, I thought I will briefly cover it because this is, quite could impact many companies. The first one is supply chain financing arrangements. Said differently, reverse factoring. Now, typically, these have been there have been some concerns around these as to more importantly the disclosure of these arrangements in the financial statements, because these do have its own I would say nature and also its own risks in a way. So I'll try and quickly maybe just give a brief introduction of what this is. Typically, this is a situation where an entity procures goods and services from its customer. The entity has got to make payment to its supplier, not customer. The entity has got to make payment to its supplier. But what the entity does, it actually enters into an arrangement with its banker or a financial institution. And instead of the company making the payment to the supplier, the bank or the financial institution makes the payment to the supplier on the due date, and the company would then make payment to the bank at a later date in time. So in a way, instead of the company making the payment to the supplier on a due date, the bank pays and the company then has to pay the bank. The question really is, this arrangement when the bank makes the payment to the supplier, the amount which is payable now, is it really a trade payable, or does it become like a financing liability or a borrowing? Because both have different characteristics. They've got different risks, I would say, and it has been important for investors and users to know whether the entity is actually engaging in some supply chain financing arrangements. So I think the ISB has looked at this and it has come up with some guidance as to how to present this, including implications on the cash flow statements, because there are some non-cash aspects to the transactions, and more importantly, the disclosures around liquidity risks, etc. So again, an interesting area. There's a lot of discussion around this in the I would say the global community. The other is, of course, leases. I will not get into the details of these, but leases with the new standard. There have been some interesting topics around sale and leaseback. One is where it's through a subsidiary, and the other is when there's a sale and leaseback with the variable payments. So there's some very interesting discussions. Again, maybe something to look out for. What I will talk about is the middle one, which is the lease term and the useful life of leasehold improvements. I think that's a one which may have more widespread impact. Here, the matter was really, where you have a cancelable lease which can be renewed, but you also have leasehold improvements, let's say substantive, non-removable leasehold improvements. The question is, how do you determine the lease term, and therefore how do you determine and then consequently how do you determine the useful life of leasehold improvements? ISB looked at this, the IFRIC committee looked at this, and they provide some guidance as to how you would look at the lease period, especially when you have significant leasehold improvements which are non-removable, because that may impact the lease term itself. You would have the lease term maybe up to the useful life of leasehold improvements, because else there may be a significant penalty, to terminate the lease or to shorten the lease. So I think that was a interesting area. And again, they said once you've come to a lease term, then the useful life of the leasehold improvements should not be more than that, even though the economic life of leasehold improvements could be longer, but you would restrict the useful life for depreciation purposes up to the lease term. So again, I think the interaction between lease term and leasehold improvements, that was pretty interesting. I'll move forward to the next slide, and this is where again, between US GAAP and IFRS, as we may know, of course, some time ago, both the boards came up with a convergence agenda. They did some good work on many projects which were quite converged, substantially converged, I would say, like business combination, like revenue recognition, leases, pretty much, though there are some differences. So what both the boards, FASB and ISB, they do have joint meetings and discussions where they share their own experiences, educational material, research, just to see, are there common topics, to see, what both the boards are learning from their research so that it can be used effectively, because the intent obviously is that divergence, should be minimized to the extent it can, because that is obviously helpful to the users. But obviously now there's no clear intent that it always has to be converged, but I think they do discuss, because if similar topics have similar results, then that's useful to the users. In this meeting, there was a meeting on 19th November, and just recently, and both the boards discussed these 4 topics, and I've spoken about these actually just now in my previous slide. One was it's the goodwill and impairment as to whether it should be amortized, not. If you decide to amortize, what's the useful life, what information to be disclosed, etc. Leases, there was discussion around the sale and leaseback accounting, especially when you have variable lease payments, and how do you account for that. COVID, obviously, discussing how the standards, are being quite effectively used, for reporting purposes, and also, both standard setters are providing concessions wherever needed. For example, the leases is the one which we saw. And finally, like I mentioned earlier, the whole discussion around supply chain financing, which is the matter being discussed by both the boards. And I think the users want more information on this, as to in terms of the quantity and the disclosures around the extent of supply chain financing and so forth. So I think that was the quick summary of, I would say, financial reporting matters or accounting matters. I'll move quickly to the global audit reporting updates. And what I'll try to do is, again, you may be familiar with some of these, but I thought I would reiterate. Clearly, the expectation from everyone is that, the credibility of financial statements ought to be enhanced. Clearly, there's more expectations from auditors, from us chartered accountants as auditors, and therefore there are various changes which the assurance and auditing boards are doing, and including our own ICAI is doing in line with this. So I think the key the ask from investors and users, and how as an audit profession we are responding. I thought I'll put it out here. What's happened, what's happening, and what's likely to happen. What has happened, of course, key audit matters, in the under the ISAs. Similarly, critical audit matters. US auditing standards have critical audit matters. We saw the changes which were required because of ISA 720, which is the auditor's responsibility relating to other information. Again, the intent was to build more credibility of the information, other information like the board report, etc., accompanying the financial statements and what auditors ought to do. Clearly, because the COVID, the IASB, has provided some guidance on what is to be considered, in the context of audit reporting, from going concern perspective, from an emphasis of matter perspective, key audit matters, and so forth. The other area which I would like to talk about is, the ISA 540, which is auditing accounting estimates and related disclosures. So this has always been, an important area. This has been a difficult area always. One is, of course, for companies and preparers to make their estimates and then to report it. And I would say equally so for auditors as they audit this, right? While they audit procedures. So this ISA is helpful. It kind of brings about the concept of, I would say, uncertainty, subjectivity, complexity. How do we as auditors make risk assessment, inherent risk assessments of these? How do we consider control risk? And of course, the final conclusion that these, are reasonable, supportable, and they are disclosed in the financial statement. So I think it's a good, relevant guidance, expanded guidance. Hopefully, it will help us as auditors in auditing this difficult area of estimates. And I think the last one I'll talk about is, the FRC has come up with. IASB has come up with the discussion paper on fraud and going concern, and this is in response to concerns. I would say, in a way that there is an expectation gap between what the stakeholders think or believe auditors do, and what the auditors do as per the auditing standards, right? The intent of this discussion paper is to get feedback, from various stakeholders as to what else can be done in the context of auditors' responsibility with respect to fraud and going concern. It very nicely puts across some concepts as to when we talk about, the expectation gap. It puts down kind of certain components to it. One is the knowledge gap in terms of what these stakeholders think we do as opposed to what we are doing, on that. Secondly is the performance gap, which is what the auditors should be doing as per the auditing standards, and do they really end up doing that because of maybe complexity of the standards or for other reasons. And third is the, I would say, evolution gap, like they say, that with the changing business environment, technology, etc., should the auditors now be doing something more? So I think the reason I put this in the slide is just to, it's a again brief document, but interesting read to see, what could be the future of these auditing standards with respect to fraud. So, for example, should auditors be, as we know, auditors' responsibility is to consider or address material misstatements, including those from frauds, right? Now, this paper is looking at as to whether auditors should be looking at non-material frauds. Should auditors be looking at frauds which may not necessarily impact financial statements, but impacts, for example, reputation or other qualitative aspects like cybersecurity incidents. Should auditors be involving necessarily forensic experts and IT professionals while auditing, etc. Right. So I think it's kind of looking into these aspects. Similarly, going concern, as we know, going concern is to be evaluated at least for a period of 12 months. So there's discussion out there as to whether auditors and preparers, of course, should be looking at more than 12 months. Should there be more disclosures around that? Is the concept of material uncertainty well understood by auditors and preparers, etc. Right. So I think the point I'll make is, these are two important topics. It's been there for very long. It continues to come up again and again. But the reality is that we do see these issues. So the standard setters, across the globe will look at this, are looking at this, and probably we will see, maybe some changes based on the feedback which comes in. I'll move forward. This slide was more to kind of, just to give you an idea as to, the important concept of key audit matters. This was actually a survey done by Audit Analytics, and you can find it on the website. I thought this was good and helpful that, how are the key audit matters being considered globally. And if you see here, these are the top areas. The average number of key audit matters are now 2.6. They have increased in 2020. I mean, partially could be because of COVID. I don't know, but I think there's a slight increase. But an average is still around 2.6. On the right side of this slide, if you see the key areas, and it's not a surprise. In my experience, I would find these, which is impairment, assets impairments, recoverability of those, revenue recognition, valuation of investments, etc. Right. So I think these are not uncommon, but I thought I'll keep it here so you also get to see this, as you kind of look at your coming year-end reporting. I thought the next slide, the US PCOB, again, the US auditing regulator, in the US, they call it critical audit matters, but it's pretty much the same. I would say very similar. Again, the key findings from the PCOB is that, generally auditors have made significant investments to support the initial implementation of the CAM requirements, which is good. Investors have liked it. Their awareness is improved, and they're reading the information. They find it beneficial. So I think that's a good thing. And again, this was in response to the needs of investors, because investors wanted to hear directly from the auditors. They wanted to know where auditors spend most of the time. They wanted to know where auditors found which are the difficult areas, and so let them tell others, right? Instead of just a boilerplate pass-fail type opinions, which were previously issued by auditors. So I think again, it's a good summary. If you see the key areas, so pretty much the same. Revenue recognition, goodwill, impairment, and business combination. So again, not something new, which I would have expected. I'll move forward. Now, what I thought I would cover is, some of the kind of reviews and the comments from the regulators in the global context. And both, in the US, you have the US SEC, which reviews annual reports, in quite detail, issue comment letters to the companies, seek responses, If they find it satisfactory, all right. If not, they actually ask companies to restate the financial statements. Similarly, FRC, the Financial Reporting Council in the UK, does a pretty similar process. What I thought is, what is happening in the global kind of stage? What are these regulators when they are doing their reviews? What are they finding? So I thought I'll share that with you all. And the first one is, and this is just has just come out. The Financial Reporting Council, when I think last year they reviewed some 216 companies. They actually sent out inquiry letters on the accounts to almost 50% of them, 96 companies, and based on their reviews, 14 of them, so maybe a little less than 10%, had to restate their financial statements. So I think that's actually the number is low, which is good. But the point is, the inquiry letters means that obviously there's some substantive comments which the regulators are finding in the IFRS financial statements. These are all UK companies. So again, what are the key areas? If you see that these are the top 10 areas of comments, means they found that the companies had not appropriately applied IFRS in these areas, and they being judgments and estimates. And actually this has always been an area where the IFRS require companies to disclose the significant judgments they make while accounting for a transaction, event, etc. And also the information about estimates, especially the changes to estimates which may occur over the next 1 year, which may have a material impact. So the information around that it was missing, I would say. That's something to look out for, even in the Indian context. Impairment of assets, again, the types of comments were, impairment is assessed at a CGU level, cash generating unit. They found companies doing it at a segment level, a higher level, which may not have been appropriate. They looked at companies who, their carrying value of their net assets were actually much higher than the market capitalization, and therefore they questioned why no impairment or impairment analysis. They would like to see more information about the disclosures around impairment in terms of the recoverable amount, etc. So I think this has been an area of comments from regulators always, and especially when the headroom between the recoverable amount and the carrying value is very less. That requires more, I would say, disclosure in the financial statements. So that was one area. The other is revenue from contracts with customers. Again, always an area which generally you see comments. This is the comments this year were, for example, identification of multiple performance obligations. That was one. Determining the method used to recognize revenue, which is over time versus point in time. How progress is being determined if it's over time. How variable consideration is determined, etc. What principal versus agent analysis and judgments around that. So those are the areas. The others I would talk about, of course, financial instruments. The observations were more. One was around the supplier financing, which I spoke about earlier, and also about expected credit losses. As to how they were developed. What are the factors or triggers when there's significant increase in credit risk, etc. So that was some of the observations. The other items were around the strategic report, because like we have the board report, the UK you have a strategic report. There were some observations around that, and also alternative performance measures, which are again management performance measures. For example, you may have adjusted EBITDA, you may have items you adjust to kind of show your performance. So there's some comments around that. In the statement of cash flows, there's some interesting points. One was netting, where items like borrowings, receipt and payments should have been shown on a gross basis, but they showed on net. So that was a question. There were some questions around cash equivalents. When you have investments which have an original maturity of more than 3 months, then they do not qualify as cash equivalents. So there were some questions around that. And there were some just basic errors in the cash flows, which the FRC identified, in terms of reporting. So, for example, derivatives. When derivatives were taken for, maybe operating activities, financing and investing, then they should be kind of split. But they found that it was not done appropriately. The other areas were on provisions and contingencies. Again, this is were 2 or 3 points I'll make here from what I read. One was whether the disclosures around the amount, timing, and the risks of these provisions, right, as to disclosures around that. There were some comments around recognition of restructuring provisions as to whether it really met the criteria for recognition. And the third interesting point was on insurance claims receivable. Now, typically in the IFRS, you would recognize an insurance claim receivable only when it's virtually certain. So it wasn't clear in some of these financial statements as to whether that criteria was met. And finally, on fair value measurements, I think there were lacking disclosures of the inputs, assumptions used, in specifically with respect to level 3 items and the reconciliations around that. And for business combinations, the questions were around whether the intangible assets have been appropriately considered, whether group reorganizations should they have been at carrying value basis and not business combinations. Something should be an asset purchase and not a business combination. So matters like these, right? So if you see, these are kind of observation comments, from the UK authority. So I thought this would be helpful for us to know as to what the UK regulator is looking at. Similarly, and I won't get into the details of these. This is, the comments, the top 10 areas of comments from the US SEC. And again, if you look at this slide and the previous one, not very different. You've got non-GAAP measures, you've got revenue recognitions, MD&A, which is like the strategic report over there. The interesting one here is segment reporting. And again, in the US SEC, they always, question determination of segment, as to how that is being identified. And they would like to understand that, especially when there are any acquisitions or dispositions, etc. So that segment reporting means identification of segments is always an area, in the US concept, in the US context. And something more which I see here, which was not there in the UK, was around the debt, equity, and quasi-debt matters. So you see the trends, generally have remained similar, but they have increased actually for segment reporting and the MD&A, and they have decreased for revenue recognition over the previous year, so which is good. That means the standards are being applied well. So this is what the regulators were doing globally. I'll move to the last topic which I thought to cover, which is ESG reporting. And I thought I'll spend a little bit of time on this. And this is again, in the global context, a very important topic. It is gaining a lot of attention, and I would say even in the Indian context. Clearly, attention from the investor community, the policymakers, and so forth. So you will probably hear more of this, over time. So the point is, what is ESG reporting? And it is clearly factors involving environment, social factor, and governance. in the context of a company. Obviously, each of these have, there are some risks involved, there are some opportunities. The key is that the various stakeholders which are involved with the company, now they're not only interested in knowing how profitable the company is. Of course, that is important, but they also want to know how those profits are being earned, and therefore, how the company is engaging or is impacted by its environment. What are the social type policies of the company with its suppliers, with its people, customers, etc. And of course, the governance aspect of it, right? As to what is the governance profile of the company. So what I've tried to do is, put here a kind of a pictorial representation of what does it mean and what could be included. Clearly, some of the things, climate change, because that has an impact. Stakeholders want to know, what's the company's carbon footprint? What are they doing in terms of, reducing carbon emission? What are they doing in terms of investing in, new green technologies? How are companies dealing with their waste? How are they dealing with their maybe environmental obligations? How are they sourcing their raw material, for example, sources, from countries, etc. So, again, how is the basically company impacted by, and how is it engaged and, dealing with the environment, right? So that's the broader stakeholders want to know this actually, right? Similar on social aspect, what are the human resources policies, pay policies, health and safety measures, how the companies are digitally upskilling their people, how are companies dealing with, again, sourcing of their employees, and practices around that, safety of people, etc. Right. So on the kind of social aspect, are they being socially responsible, if you will? And the third pillar is, of course, governance. In terms of diversity, is there board diversity? Is there inclusion? Clearly the business and ethics policies, anti-corruption policies, tax transparency, etc. Right. So this is the kind of again a very evolving, dynamic area. No one, I would say, rule around it, but broadly it covers this. The point is, if you look at these, there are risks which the companies may need to consider, have, kind of processes, policies to deal with it. And there are also opportunities. So, for example, if a company is engaging in producing products which are environmentally superior, which and they can say that and they can differentiate that. If companies are able to invest in technologies which are more efficient, if companies are able to reduce their, let's say, for example, energy costs, right? Those are opportunities, correct? Which can benefit the company and, of course, the environment. So, I mean, the ESG, I would say, whether you call it business responsibility reporting, sustainability reporting, integrated reporting, which is there. I think the to kind of, instead of getting into all of that, I would say just these three aspects in different ways. People may say different things for this, but this is what I would say is gaining a lot more attention in the global, I would say, platforms, and clearly in India also. I believe even in the institute, we are looking at it, or maybe Mr. Zavre can touch on that. We are setting up a sustainability type of board, committee board. So we will see, I would say, more of this, and you should look at maybe reading something more, because this is again will be a good opportunity for chartered accountants. And this is just, what does it mean? Clearly, ESG is just not about reporting. Ultimately, of course, you will report some of these aspects, not some, many of these aspects in your annual report, maybe on the website. But the key is, how do you embed this, in your business, in your operations, in your strategy, so that you can really create value for, obviously your business stakeholders and, others. I think this is, the key. If you see, ask right now, there are various, I would say, frameworks actually. There's a global reporting initiative. There's the IRC, which is integrated reporting. There is in the US, there's Sustainability Accounting Standard Board. There is the climate financial disclosures task force. So there are many actually, I would say, organizations and entities who are looking at this. I guess this is one area where we will see more. I learned just a few days back the US Sustainability Accounting Standard Board and the International Integrated Reporting Council have decided to merge, to form a combined entity. So I think we will see more. The like I said earlier, the ISB is looking at forming a sustainability standards board. So I think the question would be, how do you bring about consistent and comparable information using appropriate frameworks? That is point number one. Look at what are the benchmark available. Look what the others are doing, and then think about it. The second thing would be to see that the information which gets presented, these are typically non-financial information. Is it really investment grade? Is it subject to the the processes and controls around that? So the second thing, and of course, these aspects need to be embedded through the organization in the business operations, cross-functional manner. Requiring even board oversight. So some of those integration aspects, would need to be considered, and hopefully, this would be, like I said, in addition to financial information, this information would become quite, I would say, important, going forward. And so let's see, how we'll probably see more of that. Last slide for me before I end this session. Always, what are the opportunities for chartered accountants? And of course, there are many opportunities. I think, like I tell people, with INDAS in India, INDAS is almost, I would say, converged, aligned with IFRS, except for very few carve-outs. So we, chartered accountants, once we are familiar with IFRS, INDAS, we are automatically, we know IFRS. And IFRS are fairly aligned with US GAAP, I would say. So our ability, right, to understand the global gap, I think, is not limited at all now. So I think that's a great opportunity for us. Clearly, we are seeing a lot of collaboration between our Indian institute and other global institutes. So I keep reading it. It's whether it is Australia, Canada, UK, etc., South Africa. So there's a lot of collaboration anyway, which is happening. There's alignment of auditing standards. So our Indian auditing standards and again ISAs are, I think, pretty much aligned, except for maybe one or two areas. I think group audits could be one. I can't remember anything else. So that's again, we don't have to learn new auditing standards. What we know is what is done overseas. And it's a great opportunity for us chartered accountants, to work with companies which have global operations, global companies having Indian operations. As companies look to oversee markets, I think again an opportunity. And like I said, the ESG reporting will be, an important area where we could, play a good important role. So I think there are many things which we can do. Something which I have not put here is, the last thing which is quite close to me is, the whole technology and digital transformation. Which is again, I see a lot happening, and I think our chartered accountants have a very good role to play in that area. So with that, I've come to an end of my session. Again, thank you, and I would be happy to take questions.
Anyone have any question, please write down in question answer box. Sir, I think there will be no questions from participants.
Okay. Okay. Thank you then. Thank you very much.
I sincerely thank you, sir, for wonderful insights in global accounting. Thank you, sir.
Thank you.
Thanks all participants. Our next session will be starting at 3 p.m. Now we have lunch break. Thank you.
So, good afternoon, everyone, participants. I welcome CA Arpit Kabra, the RCM, and CA Nipun Singhvi, the speaker, and CA Mahadev Birla to this conference. I welcome all the participants. I hope we all are back after the lunch session. So before we start with our next session, let me give a brief introduction about our speaker, CA Nipun Singhvi sir. He is an FCA CS LLB LLM certified forensic IFRS bank auditor and qualified independent director by MCA. He has been serving as the member of the World Bank Insolvency Group on Train the Trainers jointly with IBBI and IPF, all the three institutes, CA, CS, and ICMAI. He's a regular faculty at ICAI, ICSI, many nationalized banks, C&AG, and a regular author of various corporate and tax journals, majorly in Taxman, Corporate Professionals Today, Economic Times, Tax Guru, and many similar platforms. He is an expert on corporate, commercial, and insolvency law, and he has handled many insolvency cases having debt worth more than 1 lakh crores, and important cases during JP Infratech, Lanco Infra, SR Steel, etc. He is also a financial activist and a social activist, and he has filed numerous PILs in both these areas. He is also an RTI activist. Disclosure of willful defaulters by SBI for the first time, RERA tribunal appointment, NCLT members, etc. I welcome you, sir, and I request you to kindly start with the session on this important topic of prospects in RERA. Thank you, sir.
Thank you, ma'am, and thank you, my Pune committee for calling me. It's wonderful to be here in Pune again virtually, almost I think exactly after 2 months. It's really wonderful that Pune committee and members have been loving me and calling me again. So once it resumes physically also, I think that would love to visit Pune again. So this is virtually, I have been coming to Pune second time in this year. So that's wonderful of you. Thank you very much, committee members, for the love and affection shown. And today I am going to take a different topic. So as per our theme, it would be more on the knowledge side and the prospects which this law carries with us. And I would be supported by Mahadev Billaji, who's my colleague, and he's a real estate expert. He has been able to handle real estate projects, a number of real estate projects across India. both on the business side as well as on the legal side. Ma'am, can you please enable my share screen? I would like to share my PPT. It's disabled as of now. Okay, now it is allowed. So Arpit ji, can you see the PPT? Is it visible? Thank you. So friends, today our topic is prospects in this new law, Real Estate Regulatory Act. And I would like to share with you all, this act is again a new act, not a very old act. The act came in 2016. Practically, it came in 2017. And today it is almost 3 years that this act has been into place.
Sir, can I just
Yeah.
interrupt you for a second? I'm
Yes, ma'am.
sorry, I just missed something. Sorry, Arpit sir. CA Arpit Kabra had to address the second session before we start, sir.
Surely, ma'am. Surely, please, please.
Yeah. Sorry, sir.
No, I think Nipun bhai, please continue. I think it is much more, you come with such a superb experience. And I just want to acknowledge that, you have been, you really helped us even draft the IBC manual this time for the WRC referencer. So, it's just amazing to have you on board on this panel and, more happy to listen to you, sir. No problem, Neha madam, please continue. Nipun sir, over to you.
Thank you, Arpit sir. And I would also I forgot to mention that recently I had actually filed a PIL because RERA tribunal was not there in Gujarat state. And High Court had directed the formation of Real Estate Appellate Tribunal. So with very glad opportunity, I would like to tell you that by High Court order, it got established within a period of less than 10 months. And last week, it has retired High Court judge has been appointed. So that is also a very good thing which has happened in real estate. So I have been connected to insolvency laws, as Arpit bhai had already said. I had been part of insolvency lawmaking. And again, this law today, RERA, is again very near to my heart because recently we got a tribunal established in Gujarat. So thank you, Arpit bhai, for that kind words.
Yes. And Nipun bhai, I believe this lockdown, this pandemic has really ensured that all of us should really now start looking at just beyond compliances. I mean, we should not be just glorified compliance, consultants. We should really go into something more deeper, which makes our existence much more important. See, you see the audits would be dying soon because of robotics and because of blockchain, because of technology. And we've already we have seen big audits being done by blockchain in just hours, in matter of hours. And largely we will see a dramatic shift from true and fair based view to instead of just expressing our opinion, it will be more like an exception reporting, and where we'll have to justify the exceptions that are being observed in the system, because everything will be system drawn, processed. uh, Recently you will see there has been empowering ideas in the economy by having auditors in form of a monitoring agency by a stakeholder. Now that is a very, very strong, what I feel, according to me, according to my sense, this will mark a new era of auditing, of auditing a company or a entity through somebody else than management. So the entire idea of appointment of auditors by management and relying upon those auditors would also take a backseat to an extent if these stakeholders, these lenders, these regulators get in charge, get power of appointing auditors. Now, as a special monitoring cases of accounts of 250 crores and above, you already have monitoring agencies in place. Now, this versus the statutory auditors versus another overviewing bank and their auditors and everything that would come into picture would make our reporting, our roles very robust and very, very thoughtful.
So I think we have to move beyond just mere checklist audits to something more, something deeper, and find out those real existence in terms of whether there are any frauds, diversions, or for that matter, utilization of funds. Propriety is the word that we are looking at now. As a chartered accountant, our role would become very, very sincere, disciplined, and very serious in times to come. And I think of some of the unconventional practices that we talk about, RERA is going to be a big opportunity. And with Nipun Bhai, I think, all of us today would have a fantastic insight, because he comes from a very profound thought process, being an advocate himself. His idea is more inclined towards. So I've seen him work towards in the drafting of the IBC. If you'll see the IBC code, the IBC section that has been drafted in our manual also, it contains a lot of thoughts. It contains a lot of procedures. It contains not just an act or reproduction of an act. That is what makes it more important. That is what makes it more sensible. So I congratulate once again the entire fantastic dynamic Pune team with Abhishek Bhai, Samir, my dear friend, Kashinath, and Ruta Madam, and Agrawal ji. They're doing an amazing job, and bringing all this. It almost feels like, yes, technology has made such a critical role in all our lives. This regional conference has become such a huge success and is so powerful now that we can really sit with a pen and paper and understand each and every context. Only thing that we are missing is networking. So I'm sure with the signs like these are promising signs. With the signs like these, very soon we would also do those networking in a very meaningful manner. And I am hopeful that we restart the entire process very soon. So thank you once again for inviting me and being here. And Nupun Bhai, it's a pleasure to hear you. I look forward to listen to you and your insights on this RERA.
Thank you, Arpit Bhai, for your kind insight and words. So, friends, now this particular new law, see, I refer to it as a new law because it's only 3-year born. But otherwise, this law has become a very big area of practice for professionals who have recently joined. So mostly what I see in RERA is very less senior members and more of fresher members, I would say. But in my view, with the time to come, this area of practice is going to be one of the biggest area of practice. And what is the reason? The reason is real estate, as the words also suggest, it is a big ticket size estate. It's a big value transaction. And now people are very scary, but because when previously they used to put money, and if the builder was not a good character, good repo person, he would not deliver it on time. Because of this economic downturn, now COVID situation, many real estate projects have got stuck. So this particular, in my view, this particular phase of economy would give rise to serious litigation in the field of real estate. And this particular law is an umbrella law which now deals with many issues vis-a-vis the buyers, whether they are home buyers or whether they are shop buyers. Normally, there is a myth that this law is only for home buyers. So let me clarify that it is not for only home buyers. It is for anybody who is purchasing any property, whether it is commercial or residential. So as we progress in the presentation, that will become clear. But this law is going to be the next big thing. And as Arpit Bhai referred, that now we need to look at the new areas. So recently I was just reading that new code of ethics for our members, and I came to know about a new concept called NOCLAR. So when there is a non-compliance of any laws and regulations, as a chartered accountant, as a statutory auditor, you need to refer what is the non-compliance directly to the regulatory authority. So today, suppose you are auditing a real estate company and you come to know about some violations under this law. So it becomes statutorily, legally responsibility of the auditors to make a mention to the regulatory authority. So you can understand the importance of a particular law when you are doing an audit. So it is now not simpliciter that we are sitting with a checklist and just doing it. We need to understand the regulatory environment in which that entity is working. So just a brief background, just for 2-3 slides, I would just like to tell you what this law is all about and how does this law have a perception across states. See, today when I'm talking about RERA law, I'm not referring to Maharashtra RERA law or Gujarat RERA law or some state RERA law. I am referring to RERA Act, which is made by the Parliament. Now, this is very interesting. Something like GST. In GST, we have a central law, we have a state law. Whatever center does, state just replicates. They have made a constitutional amendment whereby the GST law, which is the central government enacted law, is actually implemented by state. And whatever is decided by the GST council, in which center and state both sit together, that is implemented across India by the voting percentage. But it is not so in this particular case. Real estate per se is a subject of state. So just like law and order is a subject of state, real estate is also subject of the state. Therefore, till 2017, when this law actually came into force, everybody was thinking that real estate is an unorganized sector. Why unorganized sector? Because it is a state subject, only state can deal with it. Every state has number of laws relating to real estate and the buyers. Basically, this is a buyer-based law, buyer-oriented law. Though I will make some myths bust that it is not only for the buyers, it is also for the builders, it is also for the developers, it is also for the brokers. But broadly speaking, this law is a consumer-oriented law. Whoever buys real estate, he should be protected. That is the objective of this law. But the difficulty was, can Parliament make a law for states? So this, because of this issue, the matter went from 2019, 2009 till 2016. It gone through so many committees, and in fact, whether a law can be made by Parliament or not was a very big legal issue. However, after a consensus with the Parliament, they came out with the model RERA law. So whatever law which we see today has been gone under various deliberations through different parliamentary committees, standing committee. In fact, if you see, so many bills were made. Ultimately, when the act came, it was passed through almost 5 filters. Today, even today when we are talking, RERA Act has not been implemented in all the states. Let me make it very clear. And some states have chosen not to implement the RERA law. So there is no binding that if central government has made a law, state has to compulsory follow. But the tradition is whatever center makes, state is taken into the confidence and state is said to implement that law. For example, West Bengal, they have made their own law. They have not implemented RERA Act. They have made their own West Bengal HIRA, we call it West Bengal Housing Industrial Regulation Act. So that is, West Bengal state has not adopted RERA Act. So when somebody asks you whether RERA Act is implemented in all the state, answer is no. RERA is made by central government, yes. RERA can be implemented only by state because it is a state subject. If suppose tomorrow this law has to be implemented by central government, it would require a constitutional amendment like GST. So they are not ready to give away their rights. Therefore, anything related to land is within the purview of state. So that is first a point which I have seen across all the professionals. There is a myth that it is something of center. No, it's not something of center. It is completely under the control of state. Center has made a committee to smoothly implement it in various states. However, it does not mean that whatever decision is taken in that committee is compulsory binding on all states. So answer is West Bengal is an example. They have not implemented. Now, Supreme Court has said that because this is a good law and as a goodwill gesture, all the states should implement and all states should create a RERA authority. Now, if you will ask me then why West Bengal has not adopted, that's a political issue again, less of a legal issue, more of a political issue. But yes, they have made their own law, they have made their own authority, and their law is just 1/3 of the total RERA Act. So that issue we can discuss some other day. But broadly speaking, all other states have tried to implement RERA, but till today, every state has not adopted. How it has not adopted, you can see the statistics on your screen. 5 states have not only set up the RERA authority, 30 states, 25 have set up regular authority, 5 have set up interim authority. Some authority was already existing, they have delegated the power to make RERA there. RERA Act is same wherever they have adopted, but they have made their own rules. So today Maharashtra RERA rules are different from Gujarat RERA rules or UP RERA rules. So there is a variation in the rules. Some power which is coming from the act has been modified in state to state. In fact, last month, uh, Madhevji and me were together there giving a lecture in Telangana state. So it is a new state. Interestingly, they have made all the rules pro builder. So the ethos, or I would say the spirit of the law, is not being followed in the state of Telangana. However, in Andhra, the same law is in a better way. The rules are very clarified and pro-consumer. But in Telangana, it's exactly the opposite. In fact, most of the rules when we read, we said that if that particular goes to the court, probably they would get struck down. So leaving those controversies apart, let us focus on what is the act saying so, and whether the liberty is there with the states to make amendments. Yes. So if you friends want to do practice in RERA law, you will have to pick and choose in which states you want to go for, because RERA rules vary from state to state, and there is a variation. Sometimes there is a minor variation, sometimes there is a huge variation. So Punjab RERA rules and Haryana RERA rules also differ. UP RERA rules also differ. In India, the best law implementation state, I would say, is Maharashtra, because highest number of cases in RERA are in the Maharashtra. Second, according to statistics, I have come across the number of cases and disposal is of Uttar Pradesh. Then it is of obviously of Gujarat. Now, UP, Punjab, Haryana, Delhi, being an NCR area, number of litigation has increased because of this COVID pandemic. So if you want to focus on the statistics, these are the states which are, you can say, cherry picking states. If you go to South, so Kerala, they have just made the authority not long back. I think only in January they had made. Karnataka RERA is very slow. It's not that fast. So southern states, they are trying to copy the RERA law, which is there in northern states. So those who are practicing in northern states, they have a better opportunity in southern states also, because southern states do not have an idea of implementation. So I have seen most of the northern practicing RERA professionals, they have started going to southern states, because now everything is online. So that is one good thing. Then before RERA, very importantly, as a chartered accountant, we can appear, as a company secretary, we can appear, as a cost accountant, we can appear, as an advocate, we can appear. All 4 professionals are permitted to appear before RERA authority. They are also permitted to appear before RERA tribunal. So this is again a very good opportunity of representation. Just like in income tax, we have a higher grip. Similarly, I would say as a chartered accountant, we have a better and a higher grip to appear before authority as well as appear before appellate tribunal. Point is, this is a law where money is very important. All the real estate transaction involves huge money. And to explain the end use of money, to explain whether the money has been accounted for properly or not, I have seen in my personal experience, chartered accountants are outshining even the advocates. That is what my practical experience is. So friends, I would request you that you can focus on this particular law and develop a good practice as far as RERA professionals practicing is concerned as a counsel before authority. Now, Before authority, there are, I would say, two types of cases. One is before adjudicating officer, one is before the authority member. Now, what is adjudicating officer and what is authority? RERA itself gives formation to an authority. Just like we have SEBI, a regulatory authority, we have RBI. Similarly, in RERA, it's a regulatory authority comprising of members. So there would be chairman, there would be secretary, and there would be other members. Now, this particular authority have the right to adjudicate whenever complaint comes to them. But they have carved out 4 things which only adjudicating officer can do. So that I would explain in detail how that adjudication process is. But broadly speaking, RERA has 2 areas of litigation, one before authority, another before adjudicating officer. So one avenue which I am going to talk about is litigation and representation before authority. Second area is of compliance. So that Madhevji, my colleague, would be addressing on what are the compliances which as a chartered accountant we can focus on to increase our practice. Now, the object of basically why we are coming to RERA is that whenever the money is given, we are aware that in real estate, not now, but a few years back, there was a huge involvement of black money or on money. Normally people call it on money. So now this particular law has protected you as far as that is concerned. Secondly, people used to give money and sometimes builder were not giving them possession on time. Secondly, if they were not giving on time, they were not also paying them delayed possession interest. So there was no compensation. For claiming compensation, people used to run from pillar to post. They had only 2 ways to recover that particular compensation. One is going to a consumer court, second was going to a civil court. Now, both those courts do away with when RERA has come. So RERA is a one-stop solution for the buyers. Now, I'm using the word buyers because this is applicable both to home buyers as well as commercial property buyers also. So suppose somebody has taken a shop in a mall, it's not delivered on time, he can also go and file a complaint to RERA. So it is not the case where only you are buying a home or a flat or an apartment, only then you can go to RERA. No, it's not like that. Any property, so I will go by the definition, any property, any apartment, any plot, any flat, any real estate you are buying, you can go to RERA authority if it is not delivered on time. Can you go and ask for refund? Answer is yes. Can you go and ask for possession? Answer is yes. If it is a delayed possession, you can ask for compensation. All 3, you have the power. Secondly, when we are buying a RERA registered project, 95% I am saying you can be sure that the title is clear. If the title is not clear and subsequently some litigation comes that there was a defect in title, again you are entitled to compensation. So that is a very good thing that for a defective title also there is an express provision for compensation. Now sometimes people used to go for soft launch. Builders used to say that this is a very big builder and he is doing a pre-launch, a soft launch. That means that I do not have a building or a civil structure. Still, I am saying that this is a piece of land and I am selling you that I will make here 15 flats and sell you. So please give me money. So that was the way they were trying to project. Now this law has made it very strict. If they want to give an advertisement, even if they want to solicit that they are going to make something, they have to get it registered in RERA. So RERA is even applicable to somebody who is doing a pre-launch, a soft launch. That is also compulsory. So nobody can advertise, market, or sell a property without RERA registration. So these are the broad objectives. Now, I would say how this law can be divided. This law can be divided into 3 buckets, which I usually say. builder, buyer, and broker. So this law has three perspectives, or I would say 3B. So one is builder side, one is the buyer side who is actually buying the property, and third is the intermediary, that is the broker, who is facilitating the transaction. Interestingly, and I would say this is again a myth, that brokers are never on paper. RERA says and recognize broker as a separate category, and broker also has to register under RERA. So if tomorrow I come to you and say, see, is Loda Developers is good, and you, if you want to buy there, I can get you a good discount because I am a broker. I am an authorized broker of Loda Developers, means you can find my name on the RERA website and in the real estate project, that in this project, Mr. Singhvi is a registered broker. So brokers have to register, and their name will also be there in the agreement to sell and sale deed. So it's all official. It's not unofficial. So that is very interesting part of RERA law. Many of the chartered accountants I have seen, they are only doing the registration and compliances of brokers. So that is again a very big area of practice. So it's not that only builders need compliance, brokers also need compliance. And brokers would be officially charging brokerage. So there is nothing unofficial. And they are accountable. If they make a misrepresentation, they can be taken to court. That is very good provision as far as RERA law is concerned. So now on builder side, broadly speaking, under the law, there are four things. One is when they need to register, whether old projects would be registered or not, whether if today I am having any grievance towards a builder, can I go to RERA? So I would answer all those questions. Point is whether the registration is compulsory or not. Simply speaking, registration is an yardstick. Even if a builder is liable under RERA law, and if he is not registered, even then RERA can take action. Just like if we do not have a PAN card, but if I am having huge amount of black money, can I say tomorrow that income tax department cannot come and do search and seizure because I am not a registered income tax payee? No. So similarly in this case, if a person is doing all those activities which otherwise he was to be done only when he was a registered SSC under RERA, then all the provisions would apply. So even if somebody is not registered, even if somebody has not done compliance, even then action can be taken by RERA authority. Second is, there are some duties of builder and there are also some rights of builder. Rights are very few in number, duties are very high. Because again, I told you the law's objective is to safeguard the buyer, the consumer. Now, buyers have been protected on all the three stages. That is, when they are thinking of getting booking done in a project. So as I told you, sometimes it is soft launch, or you get avid when you read in Times of India that this particular project is coming. When you read on website or a Facebook page that this advertisement has come and therefore this project is coming. Can I complain if that advertisement is false? Yes. You have the power to complain on Facebook advertisement of builder also if that advertisement is having any false statement. Second, if there is an advertisement and the RERA registration number is not mentioned, again a penalty can be imposed. You would wonder that Maharashtra RERA has imposed a penalty of 5 lakh of rupees on a very big developer for not mentioning the RERA registration number. And his advertisement had featured on the first page of Times of India. So that is the level of regulatory compliance which RERA is doing. If I'm not wrong, it was Piramal reality. I think when Madhevji would take, he would discuss that judgment also. Second is post booking. So once a buyer buys the property means he has paid some money. So the law says if let's say it's a 1 crore worth of property and somebody has paid 10%, that is 10 lakh, then more than that he cannot accept, the builder cannot accept until agreement to sell is executed. So it is mandatory that he executes it. So that is post booking. And whenever that agreement to sell would become a conveyance deed, again the format is given in the law. So that is very good that the RERA rules prescribe a format. In that format, when the possession will has to be given is specifically mentioned. So if that date is breached, you can trigger the RERA law. Then broker has to do a registration, as well as he has the duties to disclose broadly all true and correct facts of the project. Now, I was using the word again and again, buyer. Now see, as per law, that buyer is called the allottee. Now, allottee means any person who is buying a property in that particular project. So, whether that project can be leasehold project, freehold project, that is not important. Important is that he is called an allottee. So, his name would be treated as an allottee in the books of accounts. Very important. One of the chartered accountants was penalized because the money which was received from allottee was in the balance sheet not shown as money received from allottee but as loan. So that is incorrect classification, and RERA authority imposed cost on the chartered accountant. So that is a Gujarat RERA judgment. If you get time, you can just Google it. I will not give citation because then I don't want to malign the name of a professional. But this is the seriousness of this particular law. Now, some of the definitions are very important, but I am not going to take all the definition, only important one. So normally in real estate terminology, we call it first buyer and second buyer. So first buyer, normally we think that the person who has bought directly from the builder. But suppose I have bought from a buyer who had bought it from builder, whether I will be entitled to the rights? Answer is yes. I have all the rights which the first buyer has. The only thing is I will have to check up the law whether I am falling in that timeline or not. Broadly speaking, the timeline is 5 years from the date of becoming an allottee, the first allottee. If you are subsequently taking 5 years, you can go for any type of structural defect. Otherwise, there is no other grievance. Normally, after taking the possession, the grievance at the best could be that there is a defect in the structure. Or second, as I told you, title defect can come. Otherwise, normally all the grievance are before taking of possession. Those all grievance could be not giving me timely possession, not giving me facilities, not completing, let's say, lift is not completed, flat is completed, electricity is not there, water line is not there, occupation certificate is not there. All those grievances are before the possession. Now, interestingly, again, this is a Bombay High Court judgment. It was with regard to Lavasa Corporation. We all are aware about the Lavasa city. So, in that, they were given allottees a lease. So, they said that we have not given a sale transaction, we have done a lease transaction. Now, the lease was for 99 years. So now the court interpreted that this lease is as good as sale, therefore RERA provisions are applicable, and if you have not delivered on time, we can impose penalty on you. So this matter went till High Court, and High Court has settled the law that even if your lease agreement is in such a fashion and for such a period that it tantamounts to as good as sale, then you are an allottee. So allottee does not mean only someone who has bought it. If he has taken on lease, also then RERA can be invoked. If I have taken a lease of 5 years, answer is no, you are not an allottee. 10 years, not an allottee. Substantial period like 99 years, yes, you are an allottee. Now, just for the sake of our general understanding, when we are talking about a real estate, it means any apartment. So apartment would include office, showroom, shop, godown, anything. So what broadly we are saying is immovable property, whether it is for residential purpose or is it for commercial use, any type of use will not change the rights under the law. This is very, very important, because under consumer law, it was being said that only commercial property is not included, only residential is included. under Consumer Protection Act 1986, provision only supported home buyer, not commercial property. But under RERA law, we have both the protection. So that is very important. Suppose I have taken a unit in Maharashtra Industrial Development Corporation. RERA law is applicable? Yes, it is applicable. So it is residential, commercial, or industrial. It is covered. Advertisement, I have discussed, but just for the sake of reference, any type of advertisement. Facebook page is also an advertisement. Website is also an advertisement. Brochure is also an advertisement. All these advertisement has to have some of the parameters are given in section 11 that has to be complied with. So if today, suppose I in the morning open the newspaper and I see an advertisement and the RERA registration is not there, RERA website is not mentioned, then I can file a complaint and a penalty will be imposed on the builder. And damages can be given to us also. We are not an LOT, we are not a buyer, but we are a prospective buyer. So it is something very interesting that a person, like in the case of IPO, a person who reads the prospectus but actually does not buy the share, but he comes to know a false statement in the prospectus, he can file a complaint with SEBI, and SEBI will penalize the company, and they will also give damages to this person who could have applied for shares. So prospective buyer is also included. So therefore advertisement information is very, very important. And RERA authority is penalizing like anything on advertisement. 5,000 till 5 lakh, I have seen the penalties being imposed for wrong advertisement, false advertisement, or misleading advertisement. So that is very important. Now, another important terminology is common area. See, I would put it very, very simply. What is common areas? So, wherever apartment, flat, or plot we are taking, obviously that is our right. But we also have a sharing right. What is sharing right? Like staircase, lifts, common playground, clubhouse. So all these facilities are nothing but common area. Like terrace. So that is a common area. Play area, parking area. All these are common areas. Again, if something is deprived, you can go to RERA. So very importantly, kindly see the brochure which the builder is giving to you, as well as match it with the brochure submitted to RERA authority. Now, if they have given you a wrong brochure, actually those facilities are not mentioned on RERA website where they have to compulsory put it, then you can file a complaint. In fact, we were handling recently a case where the builder had uploaded on the website a brochure, let's say 10 facility, but he gave only 5 facility. So for the deficit 5 facility, penalty was imposed on the builder. Why? Because let's say he said that I will give a swimming pool, but he did not give a swimming pool when actually he handed over the project. He scrapped the swimming pool, so he can't do it. Whatever he has promised, he has to deliver. So this is just I'm skipping so that you can read it because it's general, more of a general nature. Now, whether can I convert an existing building into development and whether it will be covered under RERA? Yes. Can I develop land into plots or apartments, whether it is covered under RERA? Yes. Intention to sell is important. That is very important. If you are saying I am developing this particular plot for my purpose, or I am making different plots, but everything I am selling to my father, mother, sister, yes, no problem. If you are selling it to a third party, to public, you are covered under RERA. That is how this particular law is structured. Now, what is a real estate project? I would just skip this because I have broadly explained what is the project. Now, in this law, they have specifically mentioned carpet area. What was happening in different states, different terminologies were used. So here now there's a standardization. What is carpet area? They have explained. So that is net usable area. It includes the area by internal partition walls. That is very important. Carpet area means आपको actual में कितना मिलेगा. You can see there is an explanation which says exclusive balcony or veranda area would mean net usable area of the apartment. That is only for my purpose. If there is a common balcony for me and my neighbor, that is not my area. If it is only exclusively for me, then it is my area. So that is very much important because most of the advertisement were misleading on the carpet area. So they have very categorically defined carpet area. Then second, obviously similar terminology, saleable area. It includes carpet area plus all those veranda, balcony or terrace which are meant for the LOT plus proportionate of common area that builder and buyer agrees. So that is very important that if you are giving me a common area and common passage, that is included here and he is charging for it. If he is charging, he cannot give it to somebody else. Now, a common question which normally people ask us, that when we are given the property, are we given right of the common area? Answer is yes. How it is given? You are given an undivided portion of land together with common area. That common area is normally transferred to the society in which the particular housing society in which you are going to live. So suppose we have a block. So say, let's say A block. A block, we have, let's say, one flat. That flat is nothing but an undivided portion of land of that block A plus common area of parking, common area of garden, which is being sold to us in a package. However, that common area may not be registered in our name, but when that society is completed, means that area is completely sold, the society is handed over the charge of common area, like the balcony, means the terrace, the parking area, the garden, the clubhouse, the gym, the swimming pool, all these are common area. So they are commonly given to the society. No specific block can claim right over it. Very importantly. Now, another important definition, which I think is very much important for you all, is promoter. So promoter means a person. I would just simply tell you what is promoter. If let's say I am the landowner and Mr. X is the developer, who is the promoter? So whether I will be promoter, whether he will be promoter, or whether we both will be promoter. Answer is we both will be promoter. Strictly speaking, answer is we both will be promoter. So who construct or causes to construct? So the contractor who construct, maybe the developer or the landowner who says you come and construct, I am causing it to be constructed, converts an existing building into apartments for selling, a person who develops land into project, whether or not that person is making it for the purpose of selling or not. Any authority, means the government is also promoter if they build it for some LOTs. So these all are promoter. Simply putting, landowner promoter, builder promoter, developer promoter, all are promoter. In some states, I will tell you what is the issue in some states. In some states, they have categorically said in rules that landowner will not be promoter in such and such situation. Only in some states. So I'm not talking in Maharashtra, but in some states they have mentioned it. So if they have mentioned, it will go by that rule. But if you interpret the act, the moral or the spirit of the act was to cover everybody. But because of litigation, some of the states have excluded the landowner. Reason is, in those states, the practice is the landowner is giving the complete land to the developer to construct and sell. In that case, landowner actually relinquishes his right. But that practice is only in some area. Otherwise, all are responsible. Now, 350. Second important issue is of registration. So who should be registered? Who should not register? If you are not making any sales, if you are not making any booking, then you need not register. You are not publishing any advertisement, not doing marketing, you are out from the ambit of registration. If anything you are doing in these aspects, you have to be registered. Now, registration also has two parameters: less than equal to 8 units, not required to be registered. Less than equal to 500 square meters, a particular unit, no need to register. Now, these are exempted category of registration. There is a huge controversy that whether these two conditions should be together met or individually met. Now, the debate is from state to state. Some states have conjunctly put this condition, some states have relaxed it. So, I'm not going into that debate. I'm just giving you simply two conditions. If these two conditions are there, no need to get registered. You are exempted. This I've already explained. They should not advertise, market, or sell if they are not RERA registered. These all are details which are required to be given during registration. Now, this is very important. Ownership of land lies with the person who is giving you this particular thing on sale deed. So this is very important. Undertaking from that person, maybe that landowner is selling you, developer is selling you, they will have to put an undertaking to the RERA authority. Now see, if they give a false undertaking, this will become a criminal case. So this is very important. Ownership of land or property, he has to give an undertaking. Second undertaking is with regard to bank loan. Bank loan says that undertaking has to be given that there are no encumbrances on this particular property. So they have to give an undertaking to RERA when they are taking a bank loan that there is no encumbrance. Whenever they create an encumbrance, they have to inform to RERA authority that this is the encumbrance which we are giving. So that if I am the buyer, I am not aware whether that land is mortgaged or not. And it can happen in number of cases. Multiple cases where the land was already mortgaged to the bank and the builder had sold that same property to a buyer and took the money. In case of he defaulted, the bank would come before and sell the land, and the buyer will be left in lurch. So in such a situation, they have now expressly said that he has to give an undertaking. Whenever he creates a charge, he has to update on RERA authority website. So this is very important. If he does not timely comply, again his undertaking would be breached. So whenever, suppose I have taken a completion date of 31st December 2020, and I know because of COVID I will not be able to complete it. What will I do? I will go and apply for extension of my project. So that is very important, that whatever closer date I am giving for timeline, that has to be adhered to. Then RERA registration, if today somebody applies, it has to be processed within 30 days. If there is no processing, means there is no approval, then they have to reject with a reasoned order. If they do not reply, then it will be deemed after 30 days that they have accepted my application, and after 7 days they have to compulsory give login ID and password so that that person becomes a registered RERA person. Now this is, I am telling you, not happening. I have seen many cases and I have been fighting such cases where a builder applied for getting a registration. They did not reject, they did not approve, and keep on asking queries and queries for 6 months or maybe 1 year. Now, in those cases, this particular section, this is section 5.2, which can be utilized of deemed approval. We have a similar section in GST also, that once an application is made and we do not hear anything from the department, it will be deemed to be registered. So this is a good point, and good case laws are existing today also where deemed registration is given. Second and most important nowadays is this COVID situation. As of the advisory given by the ministry and also being followed by many of the states, including Maharashtra state, where they have extended the period of registration. That means the date of completion has been extended, and this particular COVID has been counted as a reason of force majeure. Now again, force majeure is something which is normally we call it act of God. Paresh Rawal's movie, we all know, Act of God. So this particular act of God is nothing but force majeure. This COVID has also been considered, and 6 months to 1 year, different states have extended the timeline automatically. So 6 months to 1 year has been extended in some states, and if you want to extend it further, you will have to apply under this section. So again, an opportunity for those builders, for those developers who will not be able to complete it on time. Extension can be sought in under section 5. So one extension has already been given by the government. Further extension can also be sought by the person concerned, and it is bound to happen. The situation which I am seeing, it is again going to extend. So section 5 is for extension of registration. Again, if there is a violation, they can obviously revoke your registration. So I am not going into revocation. I am jumping on this particular compliance, which is very important and very important for us also. So on the website, what they have to give is the RERA registration number, they have to mention website address of the RERA authority has to be mentioned in every advertisement. So if there is a prospectus, if there is a brochure, if there is a website of the developer, everywhere these things has to be mentioned clearly. If not mentioned, penalty is imposed. Second, more than 10% they cannot accept without executing agreement to sell. So this is the responsibility of the promoter. I've explained you the meaning of promoter. Now it is also the duty of the allottee that if I am as a builder saying that now you come and get the sale deed executed, you can't say no. You will have to come and give the execution of sale deed. So sometimes this also happens. Nowadays we have seen the allottees are not interested in getting the execution done and paying the balance amount. In that case, the builder also has a right to go to authority and ask for a direction against the buyer. So this is a very interesting point, that a builder also has a right against the buyer. Now, the important provision that suppose I have taken the possession 5 years, if there is a structural defect, a case can be filed by me. So even after taking possession, if suppose I see that the building is the water is coming in my terrace, let's say the sanitary pipes are getting damaged, whatever, if I can prove that it is a structural defect, from the date of possession till 5 years, case can be made before RERA authority. Maximum cases which we receive nowadays is section 18. Now what is section 18? Section 18 is simply, if there was a deadline and possession has been not been given to me, I have the option of getting a refund of the total amount plus the delay compensation. So assume that I had to get the possession in 1st January 2020. I have not got. So I would trigger section 18 for refund. So I will get the refund of total amount from 1st January 2018 and the interest compensation for the delayed possession. So assuming that they are making the payment today, they will have to pay me the delayed amount. So this is section 18. So I'm not going into the nitty-gritties of section 18, but broadly speaking, section 18 is this. Now, section 19. So I'm just going to tell you what are the opportunities in this. Section 18 was refund and compensation. Now, section 19 is they have the right, the allottees have a right to ask for everything. Sanction plan, layout plan with the competent authority. Now, in some cases, it could be UIT, it could be development authority, it could be your municipality, whatever is the development authority. In different state, in different taluka, different district, authorities are different. But as an allottee, I have a right to get all those plans as per RERA law. Second, I got just 2 days back a Pune-based one of my friend asking me that whether I can file a complaint. Yes, the law says there was a stage-wise completion. Now, what is stage-wise completion? I complete 20%, you pay me 30%. I complete 50%, you pay me 70%. I complete 100%, you pay me 100%. So stage-wise completion linked with the payment. So allottee will have to make the payment on the basis of completion. If suppose as a builder, I do not complete the percentage as decided, obviously I cannot ask for the payment. So stage-wise schedule of the project, I am having a right to ask for it. Old cases where it has not been implemented as per RERA, even then under section 19, you can ask for the same. Yes, you have a right. So refund I have already discussed. Okay, this is one more important point, that you have a right to mutually decide to decrease the compensation. Sometimes the builder may approach and say that it is going to get delayed. You please revise the date, and let's say this is the compensation 5 lakh. Please agree on 2 lakhs or 3 lakhs, and I will give you possession by so and so date. You can waive your right to compensation. You can reduce the compensation. You both can decide mutually, buyer and builder, to do the same. Such negotiations are obviously done in the presence of professionals like us. So a chartered accountant can definitely help in such negotiation. So who can be the aggrieved person? The person obviously who has bought the particular property, who is an allottee. Or in one case, I've told you, in case of advertisement, a person who is actually not bought it, but he was a prospective buyer. Third, after a project is made, only a society can file a complaint. An individual cannot file a complaint. Only an association of allottee can file a complaint for common facilities like clubhouse, like swimming pool. An individual will not have a right, then society is made. So society can file a complaint. Now, these societies, when I'm saying the word society, does not only mean cooperative society. In some cases, Section 8 companies are also made. Nowadays, there is also a trend of making LLP. So they all are allowed to file a complaint. So broadly speaking, two categories I told you, AO and authority. So AO has limited view of only 4 sections. So if there is a veracity of advertisement, that means wrong advertisement, false advertisement, misleading advertisement, then compensation will be adjudicated by the AO. If there is a structural defect, 5 years I have told you, again section 14.3, power is with the AO. Delay in giving the possession, section 18. Section 19 is refund and interest. So complete refund and interest, it will come here. So in these 4 sections, AO is responsible. AO is a retired district judge. So please, when you appear before RERA adjudicating officer, kindly be dressed just like a court. So you will have to wear a tie, shirt, coat, not fancy obviously, our dress code of ICAI, when you are going to represent before AO. Very strict, because he is a retired judge, so he does not give you liberty to appear in any formals. You have to be dressed as per our code. Otherwise, he will not hear the matter also, I have seen. Section 56 of the RERA Act gives us power to appear. Okay. Second question is, when you are appearing, whether I can appear without any authority letter? Answer is no. You will have to have a authority letter. Normally, professionals are given memorandum of appearance. So let's say somebody is authorizing me. So he would say, I so and so authorize, let's say in the capacity of chartered accountant so and so, membership number so and so, for representing my case before authority. That is section 56 requirement. CA can represent, CS can represent, advocate, they will have to have a wakalatnama. So they have a different authority because that is prescribed under Advocate Act. So authority you will have to take. These all complaint issues I have told you broadly, we have discussed everything. Just for recapitulation, if there is a title defect, power is with authority, not with AO. Authority member will hear your complaint. If possession is not given on time, RERA authority will decide delayed possession. But the compensation on delayed possession will go to AO. So if it is delayed, it will be decided by authority, and then the compensation will be decided by AO. So this is the procedure, it has to be followed. If agreement to sell has not been done or sale deed is not being paid, then again authority has the power to decide. If there is a poor quality of construction, authority has the power to decide. So these are normally the complaints which come to RERA authority. So it could be against any of these. It could be against builder, it could be against developer, it could be against broker. We have seen recently a case where even the builder, means the developer and the landowner, got into a dispute, and therefore it could not be delivered to the allottee. So such type of disputes are also coming to surface. So both becomes liable in such a situation. Now, this authority normally has two members, one chairman, and this is the setup normally. On the other hand, the adjudicating officer is normally a district judge, qualified district judge, or a retired district judge. So you have to be following all the rules of a quasi judicial authority. So that is very important because both of them have civil court power. So CPC basic knowledge you will have to have, how the pleadings are made, how the petition is drafted, reply is drafted. So one is complaint is normally called the plaint or the plaintiff. The other side is called the defendant. Then they would have a right to reply. The petitioner or the complainant will have a right to rejoinder. So that means a reply to a reply. It's called rejoinder. So this is normally the practice which is followed. They are having the power of civil court, so they can ask for summoning any third party. So I'll give you an example. Recently, we were for a home buyer. So he had taken funding from State Bank of India, and the builder, even after getting the payment, 80% payment, he did not give the possession. So we filed that he should give a possession before the authority, and delay possession, the payment of compensation should be made to us. So when we filed it, he disputed the amount being disbursed by the State Bank of India. So RERA authority summoned the State Bank of India manager, and the manager came to court, gave an affidavit that this is the money which we have directly disbursed to the builder's account. So builder was not disputing the payment, but he was disputing the one letter given by the bank manager. So there was a typographical error. So just to buy time, he raised an objection with regard to that letter, and ultimately we won. But these are all time buying tactics by the builders nowadays. I'm not saying all the builders are wrong, but broadly, when you go in the litigation, it is always normally against the builders. Complaint procedure, I have told you how it is. Petition, obviously someday we can also take a class on how to draft a complaint, but broadly speaking, this particular are given in the rules. So facts of the case, whatever relief you are asking. So let's say it was a delayed possession, so we ask for a relief that we may be given the possession, and we may be also given the interest and compensation. So interest is delayed interest, and compensation is for mental harassment, legal cost. You can ask all of those. What is the interim order? Yes, this is very, very important. When I am aware that he is not going to give me the possession and I am going to fight a case, you have to get a stay on the property. So in interim relief, you have to pray that that particular property which is in question should not be sold in until the disposal of this application. So your relief has to be drafted in a very perfect manner so that you do not feel the grievance afterwards. Because sometimes I have seen you are fighting a case, in the meantime the builder sells that property to somebody else and then says to the court that, sir, I am ready to pay the amount I have already sold. When this happens, let's say you had bought a property at 50 lakhs and that valuation of that property has increased to, let's say, 60 lakhs, 70 lakhs. So builder, just to make profit, he sells it to somebody else and he just pays you the interest amount. So basically you are at a loss. Therefore, this interim prayer is very, very important. In case of adjudicating officer, your relief is replaced by compensation. So that is very important. You have to mention the compensation which you are seeking. This, I've already explained that all these four sections you have a power of AO. Now, if somebody has filed a case in consumer and it was pending for long, you can withdraw that case and file it before RERA if it is falling under these four sections. This is the only provision of section 71. Now, appeal from the order of AO or authority can go to appellate tribunal. Now see, appellate tribunal, I will say how it looks like. It looks like NCLT. It looks like DRT. What is in income tax appellate tribunal? All appellate tribunals are normally the same. So they are one judicial member, one technical member, and one chairperson. This is the constitution of 3 members of appellate tribunal. So majority is a judicial member. Judicial member is more than 15 years of legal experience. Technical is 20 years or more. Now here, as a chartered accountant, we can be appointed as technical member. Similarly in ITAT, similar in NCLT, similar in various other tribunals. Now, interestingly, what I was discussing with you, and my citation is also there, we had challenged the validity of the tribunal in Gujarat because it was only one judge who was sitting. So High Court directly gave a direction that you appoint 2 members. It should be as per this qualification. So we succeeded in that, and there are now series of judgment on which we relied, which were in respect of NCLT. I had also challenged NCLT constitution way back in 2017. So that also I have given a citation. So basic crux is there has to be 2 members, technical and judicial. If 2 members are not sitting, then that court itself becomes unconstitutional and illegal. So that is very important. Now, when you are appealing before appellate tribunal, see, this is your last chance for facts and law, because appeal from this order will only lie to High Court on law point, not on factual point. So therefore, appeal to appellate tribunal has to be drafted meticulously. And suppose you are appearing for a builder and penalty has been imposed by AO or adjudicating authority or maybe the RERA authority, then you will have to pay the pre-deposit amount at 30%. And recently it was challenged in High Court, and High Court confirmed that you have to deposit. There is no way out. So appeal becomes very important, very nicely drafted. Otherwise, this is the last chance. Because in High Court, they will not consider the facts, they will only consider the law. So some other day, probably we can also take the drafting of appeal. But broadly, I think this is a very big area where chartered accountants are giving a tough competition to lawyers who were predominantly doing the tribunal practice, and therefore this area has become very lucrative, and good remuneration is being given to all the professionals at this level because it is just before the High Court. So I will suggest you all to go through this appellate tribunal issue. And now I think that we are left with only 30 minutes or 25 minutes. So I would ask Mahadev ji to throw some light on the compliances part. Mahadev ji, can you hear me? So Mahadev ji, you are going to show your screen. Should I stop sharing?
Yeah. Please allow me to share the screen.
Neha ji, are you there?
I think.
Yes, sir.
Yeah, madam. Can you please share screen of Mahadev Birla ji?
Yeah, 1 second.
Nipun bhai, in the meantime, you can see the Q&A block. There are some questions there. So you can see those questions and we could, take them.
Correct. Mr. Anil Jain has asked, 5-year timeline is applicable for construction identified after 5 years. Sorry, sir, you have only 5 years to identify construction defect. And basically, these are called structural defects. If beyond 5 years, you can make out a case that it was previously existing, then you will only have a consumer court. You will not have a RERA court because they outrightly reject anything beyond 5 years. Practically speaking, this law is only 3 years old. So it is more of an academic question. Practically, this situation won't arise.
I would like to add more things into that. That this 5-year structure defect is counted from the date of the possession. So I think Anilji has written some construction work also. So suppose today I buy any property and that project is ready possession, and today is 20th November, and so my structure defect with period will counted from today onwards. Suppose after 1 month somebody else buy the property in the same project, for that particular allotee the structure defect period will be counted from the next month. So this 5-year structure defect will be counted from the date of possession. It is specified specifically mentioned under the section 14(3) of the RERA Act. So
His question was, Madhevji, that beyond 5 years, if he finds out the structural defect, can he go to RERA?
so I think he has not mentioned that 5 years from which date.
Which
So
date?
yeah, so I specifically told that if he's talking about the construction completion, then it is not there. It is start from the date of the possession. So when the project is completed, suppose in the today itself, when you buy the property after 2 years in the project, for that the structure defect will be counted from the date of the possession. If it is a new allotment.
Next question is, for a structural defect, can individual member file a complaint or a society has to file? Also, does it require structural audit must be done before filing complaint? Mr. Ashwini Lakshman has asked this question.
So there is no requirement of a structure defect audit. If it is your individual house, there is a structure defect. Obviously, the individual customer can file the complaint before the RERA authority, and he can seek a compensation under section 14(3) of the RERA. Because what section 14(3) requirement is that first you have to give the notice to the developer that there is a structure defect, and if it is a structure defect, it is the duty of the promoter to rectify that structure defect within a 30 days without charging any amount. So that is the free of cost promoter has to rectify the structure defect. In case the promoter fails to rectify that structure defect, obviously the allotee can seek a compensation from the adjudicating. He can file an application before the adjudicating officer to seek a compensation for the structure defect. But it is compulsory that you have to give a notice to the developer.
In fact, his second question is that whether structural audit should be done or not. So I think that structural audit is not required if you can show it. Normally, authorities are appointing engineers from their own pool, or if there is a dispute, they can also appoint an independent person for structural defect.
If you have any, government like any engineer who is registered and something like that, and if you want to put a record before the authority, that will give you additional proof for that. But that again depend on the authority to accept that as a proof or evidence or not. So, but there is no such requirement as far as RERA is concerned.
Then another question, Mr. Ashwini, is there any detailed guideline for bike or car parking allotment in RERA Act or guidelines?
See, Nipunji has explained you the definition of the common area. So if you talk about that, if you read the definition, it is clearly mentioned that the promoter cannot sell the open parking area. If it is a covered parking area, and that can be sale, but open parking comes under the definition of the common area. And there are various judgments of the Maharashtra RERA authority also in respect of that, which clearly says that the open parking area cannot be sold to the any allotee. However, the covered parking area can be sold. So any another question?
Yes, two questions from Mr. Shamal. He's asking completion percentage is the total project or the building in which we have bought the unit or unit itself?
I did not understand.
I also did not get it because he's saying completion percentage. As such, I don't think there is requirement of any completion percentage to file a complaint. You can file a complaint if you are not getting the things delivered on time. There is no requirement to check any completion percentage because milestone are already given in agreement to sell. Then if the builder is not allowing site visit, though 90% payment has been made, what rights are allotted? Definitely you can go to RERA if he is not allowing you to inspect because 90% payment is a substantial payment. So Mr. Shamal, if he is not allowing you, you can definitely file a complaint. In fact, if you are ready to take heads on, then you file a complaint directly for refund because then obviously he will come and tell you please visit.
Even RERA Act says that Nikunji has explained you the right and duties of the allotee. It clearly says that it is the duty of the promoter to show you the stage-wise completion details also. So anyway, if it is not available with you that how and when the project will be completed, then also you can file the complaint before the RERA authority.
Now another question is very interesting, Madhevji. Structural defect right is also applicable to SRA or development of old chawls. I think this belongs to Mumbai because SRA is mostly in Mumbai, slum rehabilitation
Only the
schemes and
question is
areas.
that that project is registered under the RERA. first you have to see that point of whether this is registered under the RERA or not. If it is registered under the RERA, I think you can go and file the complaint before the RERA authority for the structural defect. That is the important part.
Normally, almost all the SRAs are covered under RERA. Normally, they are covered. Only in some exceptional cases, it is possible that they may not be covered. But mostly, I have seen from my personal experience that SRA are covered under RERA. Then whether RERA is applicable to industrial premises cooperative society, land is in the name of promoters. So that I think this we have covered. It is applicable to industrial units also. RERA is applicable. Then only last question, compensation is understood, but even if granted by the authority, the builders are insolvent and not able to pay. What is the remedy for this situation? So if the builder is not having money to pay, obviously this is a very difficult situation. In fact, from last, I think 3 years when we have been practicing in this new RERA law, and Madhevji would agree with me because he is from a real estate background. I think more than 10 years he has been into the real estate industry. That if the builder is not having money, in fact, today when we are also buying something, we always advise that you buy a ready to move in property rather than under construction property, because if he turns insolvent and he does not have money to pay, who will complete the project? And in some situation like in JP Infra and all, Amrapali, we have seen that even after paying 1 crore, they are not able to either get a project nor get the money refund. So that is very difficult situation.
That is correctly said by Nikunji. Even I am from the real estate background for 10 years. I know the real estate developers. From I have worked very closely with the real estate developers. But whenever come today, anybody asks whether I want to buy this property, we always suggest you go for the ready to move property. I have been to Mumbai for 5 years, and now many my CEOs are there. I have heard from them. They have bought the property even before 5 years. They paid entire amount. Still, they are staying in a rented property and they did not get their property. So it is always advisable to buy a ready to move property, right? So now I think
there was one more question in the chat section, that is RERA applicable to rural India projects? Someone had.
If we see the section 3, it clearly says that if the project is under the planning area, then that project is to be required. Registration is required under the RERA. So the planning area may be differ from state to state. So we have to check whether that area is falling under the planning area or not. If it is falling under the planning area, then whether it is a rural or urban, that project is required to be registered. So that is the registration requirement part is there. As for your grievances, and Nikunji already told that even the project is not registered, you can file a complaint before the RERA authority. So I think we'll move this, some compliance part is there. I will quickly move because Nikunji has already explained very well the litigation part. But in short, I will explain what is the role of a chartered accountant as far as the RERA law is concerned. So there are a very important role of a chartered accountant, not only in a compliance part, but they have a very other important role also. So the first part is that we can understand that is the compliance and the certification part. So what is the compliance and certification part is that any project, so in the RERA, if we see that project registration is required. So role of a chartered accountant comes at the time of or since beginning of the registration of the project. While the chartered accountant is going to apply for the registration of the project under the RERA, he can play a very important role for estimation of the project cost also. He can play a very important role in estimation of the cash flow statement, cash flow planning. So these are the very important role as far as the compliance is concerned. Because when the promoter or for the this application for registration of the project is to be made, a chartered accountant has to look after and he has to verify a lot of things as far as books of accounts is concerned, because they have to give what cost is incurred, what amount they have paid, what is the estimation of the cost, how the sales and the cash inflow would be there in the project. So the chartered accountant has very important role as far as the registration of the project is concerned. Even apart from that, when the project is required to be registered, the chartered accountant has to give a CA certificate also. So there is a requirement of the certification also. Yeah. So there is a requirement of the certification also. A chartered accountant, as per the section 4.2 LD of the RERA, when the project application for the registration is made, a chartered accountant has to give the CA certificate. There is a specific format prescribed by the every state. Even apart from that, that section 4.2 LD says that for any withdrawal from the bank account, that is a specific RERA bank account is there. When promoter withdraw the money from that RERA bank account, a chartered accountant has to give the certificate. So if we can say that the future of that project, if we in depth, if we say that the future of the project, of the future of the LOT is entirely depend on the chartered accountant certificate. Because first the engineer give the certificate, architect give the certificate, and the final certification is given by the chartered accountant, which certified that the whatever the money is collected from the LOT, that money can be withdrawn from the separate bank account. Because the chartered accountant has to ensure that the money is utilized for the construction of the project. If the money is utilized for the construction of the project, obviously project will be completed on the time. There will be no delay in completion of the project, and the LOT will get his plate on time. So we can say a chartered accountant has very important role. Chartered accountant role is when there is a requirement of the quarterly updation of the project status. At that time also chartered accountant can play a very important role, because they have to update all the information in respect of the project, like they have to update the booking status, whatever the approval is taken from any competent authority, what is the certification requirement. So there is also role of a chartered accountant. So from the registration, quarterly updation, estimation of the cost, cash flow statement, plus another important role of the chartered accountant is that generally whenever everybody talks about the audit, we say that there is a RERA audit. However, according to my view, there is no audit under the RERA. There is a certification of the annual statement of accounts, and every state has their own format for the certification of the annual statement of accounts. Section 4.2 LD again say the proviso that within 6 months from the date of from the end of the financial year, every promoter has to get his account audited and has to submit a statement of annual accounts certified by the chartered accountant. So again, the role of chartered accountant comes in the Gujarat. There is only, sorry, in the Maharashtra, there are only 2 specific requirements that chartered accountant has to certify what amount has been collected till the date and whether the amount is utilized for the project or not. However, if we talk about the Gujarat, there is a detailed form 5, detailed statement of annual accounts, which required that chartered accountant has to certify a lot of things, like whether the promoter has taken a money more than 10%, whether he has executed the agreement to sell, whether the bank all the money is deposited into the RERA bank account, is there any change in the RERA bank account. So there are a lot of requirements which chartered accountant has to certify as far as the RERA is concerned. So again, the role of the chartered accountant is very big as far as this compliance is concerned. Again, the chartered accountant can play a very important role in scheduling the project also. How the project will be scheduled, how the work, because now chartered accountant's role is not only limited to verification of the books of accounts. We are even again being a businessman, we can play an important role also, where we can analyze the business situation of the promoter and we can help and advise the promoter in respect of the project scheduling. Now, this is the, in brief, I am telling you only the role of the chartered accountant as far as the compliance and certification is concerned. We can discuss the provision of the RERA also. Now, what is the other part of the chartered accountant? Because Nipunji has already explained that the chartered accountant can appear before the real estate regulatory authority and he can appear before the RERA appellate tribunal also, where he can represent himself as an advocate and they can fight a case. So now the again consultancy and advisory services is there, where the accountant can play important will be done. So what kind of the structuring of the project can be there? That, like, joint venture, joint development agreement, co-development agreement, whether the investor is coming or not, whether there is an investor requirement is there or not. So these are the roles a chartered accountant can play. Apart from that, even chartered accountant can play the role in drafting of the legal document also. Huge role of the chartered accountant is there in drafting of the allotment letter, drafting of the agreement to sale, drafting of the sale deed, drafting of the joint development agreement, drafting of this another, how to deal with the investor and the investor agreement. So such kind of role is there as far as the chartered accountant is there. So these are the important role where chartered accountant can play, and he can help the promoter in this project. Now we'll deal with some case laws, very important case laws. In short, I have explained this role of the chartered accountant. Now, because Nipunji has already explained the legal part, so we'll discuss some case studies. This is the very important judgment of the Bombay reality judgment, that is the advertisement effect under the RERA. Hope we are within the time limits. Nehaji, can you confirm, please?
Yes, sir. You can take two to 5 minutes more.
Okay. So import this one judgment of the Bombay reality judgment is the Maharashtra RERA Appellate Tribunal judgment is there. I will discuss that within 5 minutes. Then we'll conclude, and any question answer is there, we will take this. So this was the judgment. In respect of that, there are two issues were there. Obligation of the promoter in respect of the veracity of the advertisement or prospectus. So the issue was there whether this prospectively or retroactively applicable. Another issue was there whether the allotee can ask for the refund along with the interest and compensation. The main issue was that the promoter, when he started his project, he made an advertisement that, and in that advertisement it was mentioned that the project will have so much huge amenities, 8 acres of the land, and they have mentioned that the particular amenity would be there into the project. So these kind of the advertisement were made by the promoter. Now, when apart from that, they have mentioned that the project would be completed before 2017. However, later on, when the project was registered with the RERA authority in the Maharashtra RERA, the project timeline wise decided that it would be in 2018, and later on, again, the project registration extension application was made and the revised timeline was declared as August 2019. So because as per their advertisement, the promise was made to give the possession in 2017, and even some amenities were promised, the promoter did not comply with that advertisement and he changed the amenities, and even the possession was not given in 2017. So all the allottees, there was 11 allottees who filed the case before the Maharashtra RERA authority, and the Maharashtra RERA authority has rejected the complaint, and they said that if the refund would be granted, then there are 520 customers into the project, and then all the allottee will file the refund application. So there would be stress on the project and the promoter will not be able to complete the project. And they advise the allottee that better you sign an agreement to sell or register the sale deed as per their terms and condition, and you will get a possession of the property. Agreed with this order, all the allottee filed the appeal before the Maharashtra RERA Appellate Tribunal, and the Maharashtra RERA Appellate Tribunal has considered the appeal and they have decided the case in the favor of the allottee, where it was held that the section 12 of the RERA is applicable retroactively, not retrospectively or prospectively. It is applicable retroactively. So they have given the judgment in the favor of the allottee, and it was held even though they have referred the case of the Nilkamal realtor also, and it was decided the allottee will get the refund because there was a failure, there was a non-compliance of section 18(1) there was a non-compliance of section 12, which talks about the veracity of the advertisement. Section 18, one talks about the failure to give the possession as per the agreement to sale, because the agreement was made to give the possession in 2017, but the promoter failed to give the possession. So there was a non-compliance of section 12 and 18, and the matter was, this appeal was disposed of with the order that the promoter has to give the refund along with the interest. So this was the very important judgment, and this is very important role now. This judgment is very important in Maharashtra RERA, because there are very projects which are got delayed, and the promoter has promised for the various amenities, but they could not give that amenities. Even they failed to give the possession as per their timeline declared in agreement to sale. So this is the only judgment. I think it is already 4:40. So if you allow, I can.
Sir, there are just two questions. If one of them is as suggested by the panelist, only ready to move property should be bought. It means that RERA won't protect the interest of all types of buyers.
This
So
is
you
our
are,
personal view,
yes.
and we do not advise as a professional, but all people, our friends and family friends, when they ask, and even we also think when we buy the property, they're looking towards the situation. We advise in a this way. Otherwise, always RERA is there to protect the interest. Nikunji can highlight some more points.
I would share a interesting incident. See, whenever you speak, nowadays we have freedom of speech, but we all know that only Arnab gets bail and we don't get bail. So that is how it is. So there is law to protect everybody, but you know how law is enforced and it takes time. So if you don't want that your money may be stuck, then we are suggesting this. However, we will try to correct the suggestion. Not only ready to move, let's say 80%, 70% it is complete, then 20-30% risk you can take. But if it is not taken off on the project, let's say 10%, 20% construction is only there, then it is definitely a risk in this COVID period. We have seen that economy is going down, COVID is there, money is not there. In such a situation, if you buy, probably there can be a difficulty.
Nipun sir, sorry Neha madam, there was one
Yes,
more
yes.
question that I have received from one of the participant, and I'm just taking this liberty to ask this question. So what has happened due to this pandemic? People have not been able to fulfill their obligations of payment. You know, they've gone back homes and everything, and so they have made that early 20% of payment, and then no agreement has not been registered, and payment obligations have been delayed. So the builder is now asking for interest due to delayed payment. What should be the recourse? I mean, is there any recourse available due to this pandemic? They've not been able to pay. They're ready to now pay and everything, but he's not ready to register the agreement unless they pay an interest amount.
Madeji, I think Maharashtra RERA had come out with a circular on this, no?
Yeah. Even Maharashtra RERA has also come out, and Gujarat RERA has also come out. They have given their flexibility that the timeline of the making the payment is also extended in case of the allotee where the project is not completed, because they have extended the timeline to complete the project and to give the possession of the project also. So that is same applicable, and I think this RBI circular where that they have extended this, they have given the moratorium period. I think that is similarly that is applicable for this real estate developer also. Apart from that, there is no condition that agreement to sell cannot be registered. See, once you have paid a 10% amount of the flat price, as per section 13, you have to register the agreement to sell. If promoter is not registering the agreement to sell, obviously you can file a complaint before the RERA authority.
If sir, I think what you have asked was 20% they have paid.
20% yes, they have paid upfront. Yeah.
20% they have paid. Now, obviously, more facts would clarify the situation. But suppose they want to pay the next amount and he's not giving a waiver on interest, then obviously he can write it because, sir, 6 months moratorium automatically is given by all RERA authorities. So for that 6 months interest, he can fight and he can definitely win in the court. That much we can say. But beyond 6 months, probably there will be a difficulty because law is not giving any support to interest.
Okay, but it would get to I don't know the timelines, but lockdown itself is now 8 months. So if it is like a period of Feb, so automatically there will be additional 2 months, but they were ready to pay. They've traveled all the way from, from other states to honor the payment and register the agreement. But he has not put down his demand of interest.
No, sir. As Madhevji told, law says if 10% is paid, agreement to sell is compulsory. So if they have paid 20%, ATS is compulsory. Builder cannot deny the agreement to sell. We are talking about sale deed, which is subsequent to agreement to sell. So for sale deed, obviously you will have to fight for the 6 months interest, because sir, 6 months is provided in the RERA law.
Okay.
COVID period is relaxed for 6 months as per the act.
Okay. Oh, is it?
Yes.
Interesting. So, and do you feel, so the follow-up question is, do you really feel it is positive that we go and fight out in RERA? I mean, does it really helps?
Sir,
Or-
because you see the closure date of the project is extended by 6 months automatically by
Yes.
RERA.
Yes.
So when they are given a 6 months extension, why we are not given? That is the point. So they will definitely win for 6 months. That much we can say. But beyond 6 months, it will be difficult, sir. Because you may see that RBI also went to Supreme Court. The Supreme Court said that you give them 6 months relaxation. Now again for 3 months they went. We don't know what will happen. But as of now, RERA law is only 6 months relaxation.
Sure.
Even apart from that, you have to check that what interest amount they are charging. That is also the important fact also.
Correct.
Even you go beyond the 6 months, and if you are ready to pay the interest, whether as per the RERA Act says that whatever the interest promoter is charging from the customer, that should be the similar what he will give when he fails to give the possession on time. So there should be a same rate of interest. So that is also important factor to be checked.
And there are two more questions. So Dheeraj Dharmawat has asked, RERA applicable in Gram Panchayat areas? Many projects are illegal.
See, again, sir, section 3(1), if that Gram Panchayat is falling under the planning area, that you have to check state by state. And even like, if we talk, it is better always to go suo moto and say the RERA authority that our project is in so and so place, whether you suggest whether it is falling under the planning area or not. So if it is falling under the planning area, RERA authority will say that you register the project and take a letter from the RERA authority that this is not under the planning area, so you do not register. Even we have seen in a lot of cases the promoter automatically goes to the RERA authority and they say this is we have a confusion, our project is required to be registered or not. So RERA authority has automatically said no, your project is not required to register.
Sir, I would just like
one question only. Can RERA authority can take sumo action against illegal construction?
Absolutely, sir. In fact, RERA is highest.
Because we are seeing many NBFC also doing funding for illegal flats. Flats also registered.
Yes, sir. Suo moto action is the highest number of action taken by RERA. In fact, there are less number of complaints and more number of suo moto action. That is what practically is happening.
One more question comes. RERA applicable to plotting projects?
Yes. Answer is yes. It is applicable to plotting projects. Anything where intention is to sell, RERA is applicable. Even residential, commercial, and industrial, all three types are covered. In fact, sir, one more question has come. Mr. Ashwini has asked, if builder mistakenly accept more than 10%, he has to refund amount above 10%. This has happened with me. Sir, law is very clear. Above 10%, if he accepts without agreement to sell, there will be penal consequences. So if you are advising builder, obviously he will have to refund above 10%. If he is not entering into agreement to sell, but if he is entered into agreement to sell, nothing doing, no problem.
Even in case of the real builders, whenever our clients are their builders, we always advise them that once you take a 10% amount and suppose LOT is coming forward and paying the more money, better always ask him to sign the agreement to sale. If he refuses, he said, I don't want to bear the cost of agreement to sale, better to send him a letter, and that by speed post or hand delivery, and take an acknowledgement that he is not interested to register the agreement to sale. In case of the promoter, we always advise. So he will not be in a fault when any complaint goes in particular allottee's case, because he can prove on the record that the allottee has refused and with his interest and consent, we have not executed. That is also generally we advise to the promoter.
Whom the letter should be sent, Madhavji?
Pardon?
The letter should be sent to whom?
Allottee.
Allottee. Achha. No.
Yes.
Suppose if the promoter is not agreed to register the agreement, he is not agreeing, he is asking interest and all that. So should a letter be sent that I have paid so much, please register the agreement?
Yeah, you can send that also, and that letter can be put before the RERA authority also. That I have reminded promoter so many times, but still he is not executing the agreement to sell.
In fact, sir, practically telling you, there is a format of complaint, form and everything in RERA law. But nowadays, RERA is so vigilant that even if you write a letter to the chairman, they automatically take cognizance. They don't even see the format, complain, anything.
Very nice.
So they are doing very wonderful work.
Even we have seen in 2 cases, the allottee sent this letter to PMO office, and PMO automatically forwarded that letter to RERA chairman that we have received this letter and you take action against. Even that complaint was not in a proper format, and the authority has taken action by the letter forwarded by PMO office.
I hope they don't start following on Twitter now. I mean,
they are doing.
Rest all complaints would be gone for a toss. Only Twitter would happen now then.
Sir, now since we have moved ahead of time, so I would request that if we share your email ID with all the participants, so they can send you their queries via an email, so that it could be an better. Yeah.
Ma'am, we will be also sharing our PPT, so it contains email ID and our phone number also.
Okay, sure, sir. We'll share that with all the participants, so those who have missed asking the questions can take their questions on the mail. Okay, so sir, it gives me immense pleasure to propose a formal vote of thanks to Mahadev sir and Nipun sir. Since the theme of our program is Think Beyond, this was really a very useful and enlightening session, because the way you have started by explaining the basics and made us familiar with RERA. For those who are not into the RERA practice, we can definitely think beyond our regular practice and explore the newly found interest in the topic. So thank you, Nipun sir and Mahadev sir. Thank you, sir.
Thank you.
Thank you, Nehaji, and thank you all the committee members for calling us. We will be happy to come again in case there is anything left out.
Nipun sir, we will do physical session after the corona pandemic in Pune.
Surely, sir, surely.
Thank you, sir.
Okay, I request Kashinath sir to please take over, since the guest for the next session has also joined us.
Thank you. Now, good evening, all of you. Today is the last session of this sub-regional conference hosted by Pune branch. Before starting last session, I request our young dynamic regional council member, C. Arpit Kabra, to give his opening remarks.
Thank you, Kashi Bhau. And believe me, this was a fantastic session that we had. Thanks to Pune branch. What a deliberation and lovely interaction. And this is the essence of a sub-regional conference, that people speak their minds out and get their issues on, and not only issues, but I think find out new ways and new opportunities in practice and help larger society at large. And the next topic, I think, congratulations and kudos to the brilliant managing team of Pune branch for identifying this topic, future of audit. This is something which is close to my heart, being the chairman of the Digital Accounting Assurance Board at WIRC. I've been lucky enough to interact with so many people, and even Dhruva Brata also, he has come to us. He's taken a session at WRC level also, and he brings in a lot of value. And recently I had a session I was attending a session in US, and I was invited by the CPA there, and just to put it in context for all of the audience today, I'm just for future of audit, and as a remarks if I have to give you, I'm just giving you a scenario for you to think about it. as a regular feature, what we need to do, we usually get opportunities for doing stock and receivable audits. Now think about this scenario. Maybe a year down the line, suppose your client is submitting a stock statement, and the moment he submits a stock statement or a March financial statement, he would get a notice from bankers saying that, sir, a show cause notice has been issued that your finished goods is not in line or does not appears to be as per the production or as per the other parameters that you have submitted in your financials. How would that happen? I'll tell you in matter of few minutes, this can be done. Believe me, we have been doing XBRL reporting. In XBRL, we capture a lot of cost elements, lot of elements in terms of in a different particular fields. Now, all I have to do is for every company, you've heard about transfer pricing that we do. There is a TNMM method. Kashiva, you can hear me, right? Because someone told me that there is no sound.
Yes.
Yes, we can.
Yes, we can.
So look at the scenario that when we do transfer pricing, we do a benchmarking for TNMM method, that is transactional net margin method. Now in that method, we compare same kind of companies with same parameters and come at a benchmarking price of what they do a sell. Now look at this, the same ideology is now adopted for say a particular company of yours, say X private limited or X manufacturing entity. Now for past 5 years or 8 years, leave aside this corona period, but all others, if there are any exceptions, we'll discount it. If they're not, all I need to do is capture their purchases, capture their production cost, capture power and fuel, capture labor, and some more small little aspects which are directly related to a production. Yeah. And now all I have to do is run it by a machine learning technology or a tool to say that if this year these are the purchases, if this year this is the production cost, this year this is my power and fuel cost, these are my opening stock or whatever XYZ, what should ideally be my production? And therefore, if that is the sale, what is my closing stock? Gone are those days of manipulation. And within 8 minutes flat, and we have tested this already, a beta program has already been developed by one of the agencies here who are experts in data mining. And believe me, for some of the companies, it showed results which are fabulous. The promoters could not even defend and to accept that there has been some window dressing done or there has been some silly stuff done, that my statements are absolutely off the track. And these are 8 years trend, my friends. 8 years. Nothing could happen very significant overnight. So just imagine if I start making a tool on AI based platform with, it learns, the machine learns, the more and more inputs that you give, the software will start learning. And as the software starts learning, it will give you results which are very, very, very true. And this is happening at Amazon also. The sales behavior, the pattern, everything is being observed so well that what you want to buy, even if you don't put it in the taskbar, you will still find it in one of your results. Probably it will help you understand that, look, go and buy this. It could be promoted, it could be sponsored, it could be anything. It is purely machine learning at its best. And it is happening to all of us. Now, if this machine learning comes to our platform, believe me, our audits will no more be the way that we look at, will no more be checklist based. And as I said in the earlier, purely and purely, they would be exception based. If this is the input, this should be the output. If not, what is the difference? Please reconcile. If not, there is something wrong. And that would call for a qualified opinion. And now with these tools, with technology becoming easy, simpler, our roles would be how to use it, how to serve it to the lenders, to the stakeholders, be it SEBI, be it any other body, be it an MCA, for example, and then get a result, get a delivery to say that this is what is wrong or this is not correct. And this has to be rectified. So just a food for thought for all of you today, because this has been a beautiful conference in real terms. What classic topics, beautiful, amazing faculties, brainstorming at its best. And with Abhishek, I think what a commitment, because he was driving and is still logged in to see whether everything is going on perfect or not. So I think kudos to the entire management team, Ruta madam, Kashi, Samir, and Agarwalji. All of them have been fantastic. So once again, congratulate all of you for an amazing session, and all the participants. Please start thinking about, take some time out from your busy, artificially busy schedule of compliance activities, and start thinking of what could happen next. Read into some technologies, subscribe to some technology platforms, and understand these aspects, because you never know what could come in next. Of course, we as a role of council members are making sure that we are bringing in the best of the best emerging technologies. And I think as an endeavor towards that, Dhruva Brata is with us, speaking to chartered accountants, and he really brings in a lot of value. Some of the sessions that I've attended, fantastic. So I really welcome Dhruva Brata and congratulate all of you once again. And thank you for having me here. This topic is really a very indeed a perfect end to a fantastic, successful sub-regional conference. So thank you once again, and over to you, Kashi Bhau.
Thanks, Ankit, for your word of wisdom. Uh, today we have uh, Durval's host, Raskidar. He is a PE Master of Technology. He also done PGDPM, leads the data and digital practice for ProVT India. He is a data innovationist with a focus on developing and architecting end-to-end data science solutions. He has worked with a large and global telecom, banking and utilities clients with an experience in working in business intelligence, revenue management and master data management domain. He also works as a core member of ProVT to define next generation of internal audit and to see how technology can act as an enabler of audit. On behalf of Pune branch, I welcome you, sir. Without taking any time, I request you to start the session.
Thank you, and thank you, Arpit. Thank you, Kashiba, for the introduction and welcoming me to the. I'm a kind of an outsider, right? So I'm perhaps not a chartered accountant. I'm a pure techie guy, but I have been working on the audit field with a lot of my fellow colleagues and trying to see how we can kind of infuse technology within audit. And we perhaps will talk more about that. There was an interesting observation which Arpit talked about, which focuses on gone are the days that you can do without technology, right? And it is becoming more and more evident for each one of us to kind of embrace this disrupting change that kind of is there in today's world. There was a quote that we came across which talks about an auditor that does not embrace the latest technology solutions and be or is equivalent to a medical doctor who is not taking the latest advantages or the latest advances in medicine itself. So the more people in this profession starts taking into account the technology advances or the technology solutions, we are talking about a much more efficient audit, a much more holistic view of what the problem is kind of coming up, right? And what is it that as auditors that we are trying to kind of look at, and what are the critical challenges that technology itself is trying to address, right? If you look at a traditional internal audit approach, it has always been very resource intensive and kind of reports issues which is already known to management in most cases. Now, what does technology come in and do? Technology tells you that you don't have to be limited in terms of your coverage, in terms of your testing, or even in terms of your samples. You can do that 100% population testing. Now, this is possible not just because analytics can run on 100% of your population, but today with automation being around, it can even read samples which are there in physical copies. If you want to do physical verification, you can use drone technology to do that as well. The second part which technology helps is analysis and the assessment based on hard evidence and rather than interviews. Interviews exist, is gonna be there, but more than interviews, what technology can do is collect hard evidences. Now we will show you how our PA can go and create and collect evidences in a much more automated fashion. Analysis is no longer limited to historical or structured data. You can start looking at doing predictive analytics, which includes unstructured information as well. And we kind of touched upon this, that automation is there in all possible ways, forms, and shape, right? It's just not the queries. It's the end-to-end automation which is becoming possible in today's world. Now, Arpit also talked about the AI and the machine learning algorithms that exist. And time permitting, we will also show you a particular tool which actually does these kind of machine learning algorithms on financial information to see what kind of outputs can be expected from. Now, what it talks about is a next generation of internal audit or next generation of audit, right? It has three pillars. If you actually look into it, the three pillars are those of governance, methodology, and enabling technologies. Now, governance talks about the strategic vision, the how audit needs to change, right? And how it needs to start embrace technology to make that change possible. And that brings in the organizational structure, resource and talent management, and the aligned assurance. So when I talk with my fellow colleagues, we come from a technology background, right? The kind of knowledge that comes from the process side is unparalleled. And if the two can come together, which means if the resources who are so good in process and so good in terms of all the other aspects, picks up the nuances of technology, it can do wonders. And hence governance tries to achieve that. Methodology kinds of put a method to the madness. What kind of technology to be used where, right? Whether we should look at a dynamic risk assessment or an agile audit, or should we start using reporting and look at continuous monitoring rather than doing an ad hoc nature of audit, or using technology also in an ad hoc manner. Now, when we talk about technology itself, right, there are four enabling technologies that we kind of look at in terms of audit. And these are the advanced analytics, which talks about the query that you would like to run on your data set to kind of give you an output. The second piece is on process automation. Now, the process automation entails the end-to-end kind of integration. It also talks about bringing in technologies like OCR, chatbots to make audit much more interactive, much more practical in nature. Process mining is a very close to my heart. Process mining actually talks about how you can mine a process, not just query the data itself, but actually go inside and start looking at the process from the digital footprints. So it kind of recreates the process itself, not based on interviews, but based on what digital footprints an individual leave in the system. And the more things get automated, more data gets kind of ingested in systems, it becomes easier to create an end-to-end process and find out what those bottlenecks in the processes are, or for that matter, what is the business not adhering to? Is it confirming with what is required to ensure proper controls, or they are just bypassing all the controls? And finally, machine learning and AI gets combined with everything. Whether we talk about just the simple queries or we talk about using AI along with automation and process mining. AI gets kind of thing with everything. Now, we will talk about a few of these use cases as we go forward. And these are the different enabling technologies that we will talk in today's discussion. Now, when we talk about enabling technologies, we know that today's discussion is predominantly on the future of audit and the use of auditing tools. So we will talk about the kind of tools that we use for process mining, the kind of tools we use for RPA, and what we can achieve using these tools itself. But before we kind of start, right, I just wanted to talk a little bit about what data is all about. Now, the reason behind data is, or rather talking about data predominantly, is because every aspect or every enabling technology requires data at the end of the day. And data can be of different kinds, right? Whether we talk about the transactional data or we talk about our master data, such as your customer master, product master, we need to have all these four kinds of data available to us. And we need to look at these data from from the lens of all these enabling technologies to help us generate exceptions, understand the process better. Now, data was always there. What has happened over the period of time is, as we moved into the fourth industrial revolution, we have started seeing a lot of growth in computing power, distributed computing, and clubbed with that, you have natural language processing, machine learning. It has made possible what was not possible initially. Now, I would play a particular video which talks about how much data that we have to deal with. Now, why is it important? It will give you a sense, as by 2020, we are talking about trillions and trillions of transactions and data that we have to deal in each of these organizations. Whether we are talking about social media data, whether we are talking data about in our own organization, we have to start analyzing data to ensure that we are kind of looking at a process from all perspectives. So let me play the video. Do let me know if you cannot hear the sound. Can you hear the sound? I assume you can.
Yes, sir. Hello. Hello.
Yes. Can you hear the
Ah,
sound?
yes, sir. Yes, yes.
Now, why is it important for us to kind of understand how much data is going to be useful even for an auditor standpoint? If you talk about social media information, more than ever, auditors are also starting to look at social media to see if there are risks coming from outside the organization, or if the external data talks about things which is happening external to the organization which poses a threat. Now, we had looked at one of the financial services institutions which kind of went through a fraud which happened within the organization. Now, when we looked at the social media data, we could gather a negative sentiment which was there on the management, predominantly because of high target and high pressures that they had to go through. Now, this was possible because we were not just looking at internal data points, but we were also looking at external information to kind of generate what the risks an organization faces. Similarly, we do a lot of sentiment analysis, as we call, from looking at social media information to understand whether there are threats from the customer or from the product launches which has happened. Now, gone are the days where you would work on structured information available within the organization and kind of determine what the risks are and analyze the data to get an exception out of it. You have to start looking at all kinds of data, and the volume of data keeps on increasing on a day-to-day basis. So you would need to focus, you need to understand what those risks are. And as we move forward, we would talk about a particular risk index that our organization was able to develop, which monitors the different kinds of risks a business unit kind of gets on an overall basis. And it uses very simple tools like visualization to create that kind of a risk index. Now, what this particular slide talks about is, if you look at the entire gamut of things, we talk about standards and frameworks which are available. We talk about the infrastructure which is needed. And the infrastructure, post the infrastructure, there is the risk assessment and planning. And within the risk assessment and planning starts the usage of enabling technologies. If you are considering a change, or if you want to risk rank your audit unit, you can start using what we call as a productivity risk index or process mining as a tool. Similarly, if you want to prioritize your business risk or even identify your business risk for creation of an audit plan, enabling technology starts to play a role. And these are the different kinds of enabling technologies which you see, whether it is on natural language processing, whether it is on machine learning, whether we talk about a maturity assessment from a data and digital perspective, or even RPA process mining and risk index. What it tries to capture from a risk assessment and planning is to what kind of technologies can start to play a role. If we move on from a risk assessment and planning to project execution, starting from understanding the activities and objectives of an audit to actually performing the risk assessment and analyzing and designing the effectiveness of the controls, the enabling technology starts playing a role. And as we move forward in the session, we will start showcasing some of the tools which can help you either in doing a risk assessment, or it kind of helps you in do a controls testing. The full and major objective of all these enabling technologies is to help you do something on a continuous basis. And why is it important to do it on a continuous basis? Because exceptions doesn't occur just one time or once in a year, right? It keeps on, or it can happen at any point of time in the year. So if you have a periodic monitoring reporting of what is the process is and how the changes are, it kind of helps you. And again, enabling technology starts playing a role. The entire assessment, whether from an external assessment or an internal assessment or even a performance management of the function of the audit function, these enabling technologies starts playing a role. Now, we talked about the productivity risk index, right? Now, what it tries to analyze, it tries to understand what the risk drivers are. What is a chief risk officer looking at? What is the target business matrix that he should be looking at, and what should help him understand the risk within the particular business unit or within that particular organization, and what corrective actions it can start taking in. Now, this particular video again talks about how to monitor the risk within an organization. And this uses a simple visualization tool to come and create such a simplified risk index. I will let you watch the particular video to get a feeling of that. Now, while you see a visualization tool at the front end, what it does, it combines automation, process mining, and every other aspect to come up with such a risk index. It talks about going through a huge set of papers to understand and bring out what is relevant for that particular business unit, and how the risk can be quantified and qualified. So it uses natural language processing, it uses automation, OCR, to help bring out those perspectives and showcase it to the rest of the organization. And the final output, what you see is a risk index, or a risk dashboard, if you want to call it. Now, similar to looking at risk analytics or risk index, what you see is process mining, right? And what process mining actually helps is helps to perform walkthroughs of a process automatically, and looks at 100% of the transaction. Now, what it kind of replaces is, it replaces interviews that you would need to have with the business process owner. You have to stop depending on them and them letting you know what exactly a process is. And the tool itself, and we are talking about a tool which is Celonis. There are a multitude of other tools now available in the market which can automatically reveal what a process is based on the digital footprint. It helps kind of make better decisions by qualifying what is not confirming with your defined process itself. And we will walk you through part of the tool which talks about how Celonis or process mining as a tool kind of works. Now, there are inherent weaknesses in which we had looked into understanding the process itself, right? We would go and perform interviews to understand process. Then we would, and the major problem we would face is there is an incomplete understanding, and it's focused on most of the common or the traditional variants. When the walkthrough is performed, we just look at a small sample size. We kind of neglect any process changes or any variations that we would have to the process itself. A risk assessment is performed, but analysis is focused on the process captured in the interview and not anything which the processee has not told us about. Uh, Again, when we look at the process steps and the controls we are reviewing, we generally perform the testing focused on the most common variants. When we talk about a variant in process mining, we will showcase in the tool what does variant mean. And finally, when we are running uh, an operational effectiveness of the testing which we perform on the data which is available, we kind of get a lot of exceptions which happens to be false positive. Now, when you start using process mining as a concept and start using the process mining tools which are available in the market, you kind of capture the process insights through data analysis. You do not require a walkthrough of the process, but the digital footprints kind of helps you capture everything which is existing. You kind of get a precise coverage. You start focusing on 100% of the population, right? I would jump a few slides and will kind of walk you through how a process mining tool kind of looks like before I actually move into the demo itself. A process mining tool tries to capture a process uh, which looks like different activities. It tries to look at whether or how many days it takes to move from one activity to the other, how many different variants and how many different cases are covered as part of the process. Now let us look at purchase to pay as a process itself. What you see here is the different steps or activities being performed in the purchase to pay process, like creation of a purchase requisition, creation of a purchase order, sending a purchase order, receiving the goods, sending the invoice, and booking the invoice. Now, this is only one variant and the most commonly occurring variant. What you can see on the right hand side is much more variations in the process itself. And it kind of, and as you keep on selecting more and more process variants, it tries to start giving you more number of population which is covered. You can look at the variations in the process itself, which means that process doesn't have to follow one particular path. It can follow different paths, and that can have an impact on the entire cycle time that you're looking at. And it starts talking about the different inefficiencies or the different exception scenarios that you can start monitoring into. You can even look at a holistic view of the process. And uh, we will go through the entire process flow and the process mining tool. So I am kind of moving in a bit of a hurry. It talks about the entire dashboard that you can look at and help you take decisions as to what is going on in this particular process. You also can look at what is known as a conformance checker. Now, what a conformance checker actually helps you do is to analyze that this is my defined process. I believe that this is a process that all the data should flow in. And what it gives you is how many of the data which is there actually conforms to the process which I have talked about, and how many violations to this particular process actually exist. And then you can understand what those violations are, whether change of price is a violation or scanning invoice before anything has happened is a violation, and whether these are acceptable violations or these are certain kind of whitelist violations or things which is not not a complete fraud case or a complete issue, but maybe some lapses in judgment or certain other variations that you would need to kind of define in. So these violations kind of tells you how the process actually is. Now, what I will play is an overview of the tool itself, which will kind of help you understand or visualize how a process mining tool like Celonis works, and what are the different things which you can look from the tool itself. Now, process mining as a tool is used in a lot of our next-gen internal audit cases to do process audit. It is even used by the business process improvement or the BPI team to understand what the bottlenecks in a process is. Even from an automation review or an automation assessment, the auditors kind of looks using the tool to figure out where automation is possible within the audit function and outside the audit function itself. So anything and everything that you would like to do and understand about a process mining tool like Celonis can actually help you achieve that.
Compliance policies. This can have many reasons. One could be employees in the production department directly contact a possible vendor and order materials without the involvement of the purchasing department. While it's difficult and time-consuming to detect problems like this in your ERP system, Celonis can show you the affected process and root causes in a matter of seconds. Process weaknesses hide in small details, but with the proper Explorer, you can see all of them at once. Just increase the percentage of the cases to 100%, and you will see how your actual processes look like. The full view reveals all inefficiencies and the complexity in your as-is processes, where you lose time, money, margin, and customer satisfaction. But it's not only the amount of related cases that is important when analyzing processes. Solonis offers a variety of options to identify weaknesses. Let's say EXP Productive would like to know the throughput of all included activities. No problem. If we click on the top left icon to switch to the throughput time, we see how much time each step takes. In the case of the price changes, as mentioned before, it does afford a lot of time to change all those prices in the SAP system. But how much time does it exactly take? As you can see now, this on average adds another 9 days to the process, simply caused by price changes. We just discovered several process inefficiencies and weaknesses. So what's next? Let's move on to a second worksheet. You can click on a specific type of case and, for example, see the different processes of all our exemplary companies' P2P cases in a single month. What's more, you can combine different filters, like a specific company and a specific time period. If we open up the same process from the beginning with the scan of the invoice and order the table on the right by vendors, we can see detailed information about which companies are more or less contacted without communicating with the purchasing department. As you can see, one company, IDIS Corporation, is part of this process variant in 9,000 cases, with a value of almost $54 million. By adding the vendor as a filter, we can not only see its Process Explorer, but also its performance during the year. A very noticeable peak is in September and October. The EXP Productive Management could now start from there and check how the problem is caused. If necessary, we could at any time of the analysis change the view to the cases table and check all information in the source data set. Would you like to dig even?
Now, process mining actually helps you uncover what is wrong with the process, and you combine it with analytics to figure out any variations in the data, kind of looking at all aspects of the data itself, right? So when you're auditing any particular process, whether it's from a process inefficiency or if there is hidden patterns within the data itself, uh, AI and machine learning algorithms starts identifying those root causes. Now, at the beginning of the session, Arpit talked about how machine learning or AI have started looking at stock and balance kind of audits, right? Now, what this particular set of tools that we are going to talk about does is it also looks at all the financial transactions and tries to learn from its previous data points what has been right and what has gone wrong. Now, MindBridge is also known as an AI auditor. So it has machine learning algorithms which kind of looks at the current data set and looks at the data which was there in prior years and tries to identify whether a transaction is a high risk transaction or a low risk transaction and whether it can be classified as an exception or not. And it kind of strengthens whatever is the risk which is there as it keeps on looking at different transactions over a period of time, like any other machine learning algorithm would do. And this is just one particular use case of AI or machine learning, and we would cover other aspects where machine learning kinds of plays a role in the entire gamut of things. What it does, again, we will cover in the video itself. It kind of performs targeted testing of high-risk transactions. And it kind of automatically selects random samples based on whatever classification you have defined at the beginning. Now, I'll not take you through these slides, but I'll rather play a particular video which talks about what this tool is available to do. Now, I know I am playing a lot of videos primarily because I want you to get a feel of what the different tools exist today in the auditing market. And most of these tools are not necessarily tools which I or our organization kinds of brings in, but tools which are available in the market. A lot of them are available from a SaaS point of view, which is software as a service. So you can get it on a subscription basis, use it, and see how you can leverage technology or leverage these kind of new methods for your business or even for your practice. So MindBridge, it is known as an AI auditor. It uses artificial intelligence to find out if there are errors in the financial data itself.
Good morning, everyone. I'm going to give you a really quick demo of the MindBridge AI Auditor. So this is our cloud-based service. I've already logged in. And what I'm going to do is I'm going to create a new engagement. So let's say this is Audit 2019. Maybe this is a SAP user. Invites me to get started. I'm invited to bring in some data. So I can connect directly to cloud-based accounting packages, or I can pull in a data file that's been taken from a finance system. So what I have is I actually have an Excel spreadsheet that I'm just going to drag and drop here. So what you see is it started to load the data file. In a moment, it's going to detect what kind of data file this is. So despite it being a spreadsheet, it's actually determined that it's a Sage 50 ledger. Prepares the data, so it automatically loads it, and then it starts the analysis. Now this analysis usually takes a couple of minutes. I'm going to actually speed up the video so we don't have to sit and wait. So as you can see, the file has completed the analysis. That was actually about a minute and a half of elapsed time. I'm going to click to see the analysis. So this entire dashboard has been created since we started this demo. So everything you're looking at has been derived from that data file that we were just loading. What we've done is we've looked at every single line of every journal entry, and we've scored every transaction as a measure of its quantitative risk. So what we have is these high, medium, and low risk categories. You can see the number of transactions in each category and the dollar value associated. So it's fairly easy to see that if I was randomly sampling transactions, I'm much more likely to find a low risk one than a high or medium risk one. The idea here is that the auditor should spend their time looking at the most interesting transactions, the most unusual. So let's scroll down. Let's have a look through this dashboard. I can see risk by day. I can also look at, risk by month. I can also look at it by day, which gets me a kind of finer grained view. Let's scroll along here. You can see that there's definitely a spike. You can see these are actually periodic spikes in this data. That's fairly normal. That's when we look at accounting practices, you often see a flurry of activity around things like month-end closes. You can see there's something definitely happening here, and this is actually the year-end close cycle. If I remove the low risk, you'll be able to see that far more clearly. There's definitely a higher risk time period here. And I can click on any of these bars and drill into the detail of it. If I continue to look down the dashboard, you can see here on the right hand side, here are all of the different control point checks that we've performed. If I'm interested in, let's say, manual entries, I can click here and it'll immediately take me there. I can also look at some of the more detailed ones, like our flow analysis, which is a machine learning based technique. On the left-hand side, you'll see a visualization that we call the risk burst. So previously we were looking at risk by time or by risk level. This is actually breaking it down by accounting area. So the concentric rings here, the innermost ring is the highest level of the chart of accounts. So that's your assets, liabilities, revenue, and expense. And as I move out through these concentric rings, I'm going out further down into the chart of accounts, into more levels of detail. So you can see here, if I go out here, I'm getting to one of the more detailed accounting areas. The system definitely thinks that there's something going on in the equipment transactions. And I can just click on that slice. It takes me to a ranked list of transactions that impact the equipment accounts. And I can look at any one of these and drill into it in more detail. So let's pick this one. So I've drilled all the way from the highest level, looking at the overview of the ledger as a whole, the business as a whole, and I'm now looking at a single individual journal entry. So you can see it's received a 35% score in terms of overall risk, And what you're looking at here, as I scroll down, you'll see all of the different control point checks that have been performed. The ones that are green, the system has said, no, it doesn't fail this test, but the ones that are red are the ones that have definitely highlighted this one. So to explain how our AI had selected this transaction, all you have to do is read off from these kind of red items. So this is a transaction happened at the end of the year. It was a high monetary value. It was entered manually. But more interestingly, it's a rare financial flow. That's a machine learning technique where our AI is looking at all of the different account interactions, and it's determining that this particular account interaction is unusual. It's also an unusual amount, which is the next machine learning technique. So a combination of these different control points is expressing an opinion on this transaction. They're all combined together into the risk-based score, and that is what has brought us to this transaction being interesting. If the auditor wishes to follow up on this particular item, they think that this is indeed unusual, they can create a task, and I can assign it to one of the colleagues working with me on this audit, and I can put a little note in, and this creates a task which is a part of our workflow. In the system, I can go to my audit plan, review the tasks that are currently open, and I can even go to the reporting area, and I can produce reports on different aspects of the audit or different parts of the business, including things like key performance indicators. So that's your 5-second tour or 2-minute tour of the Mindbridge AI Auditor.
Now, the two different kinds of tools which we looked at, first was on process mining. The second one was on how do you find out unusual transactions using machine learning or AI. Now, the third kind of tools which you can start using in audit world is on automation tools. Now, automation tools you can use for a multitude of purposes. Let's say if you want to extract data or pull data from different kinds of sources, or even extract data from the web, right? You can write scripts to pull the data. You can use RPA tools to do that job for you. But RPA starts the data collation as one part, and it can also start looking at testing certain controls, which involves a lot of manual and repetitive tasks to kind of make it easy for the auditors, if we want to call it, right? Now, these are basic uh, benefits that you kind of get out of using RPA, whether you're using for any business function or you're using for audit itself. You definitely get a better quality. The speed to market increases. You have faster process speed, which means the quality or the time that you will spend to do an audit kind of goes down. You don't need to hire employees because you can cover more with less, and it gives you a much greater employee satisfaction, because then you're not asking people to go and look at physical documents, do some mundane task, which is not value add, right? So you take out the non-value added task from an individual and you give it to a bot or RPA engine to work at. Now, I'll go through these slides that are very fast paced, and I wanted to talk more about where we see the use of RPA within audit itself, right? Now, there are three kind of use cases which we have, which is built up in three different RPA tools. We have one on UiPath, one on Blue Prism, and one on Automation Anywhere. We will focus on one which is related to people signing off on user acceptance test. Now, when you are doing an UAT, you expect that, let's say you are migrating from, or you have implemented an SAP system, right? Now, once you have implemented, there has to be an user acceptance test where people sign off and say, uh, I okay this one, this is ready to go into a production, and it can start being used by the rest of the organization. Now, as part of this ID controls testing, you would actually have to go and see whether these change request or whether this implementation task was actually approved, who approved them, what are the evidence against each one of them. So somebody is manually collecting this artifact. Now the RPA tool or the RPA process that we are talking about kind of automates the entire artifact collection piece and kind of makes it much, much more faster in nature. So definitely there is a uh, uh, lot of benefits which we get out of this from a quality, from a time, from a cycle and coverage. And we would talk about each one of these in this particular video. Now, I know I'm rushing a bit because I'm cognizant of the time. It's already 5:40 and I don't want you to keep waiting on a Saturday evening for more than 6 o'clock. So I'll just cover one of these use cases, which is using RPA for the purpose of doing an IT controls testing. Uh, Now we talked about this piece, right? An individual have to do or identify a population, extract the artifacts, populate these testing attributes, and finally give it to someone to review the testing results. Now, what is this process? We talked about people going through an user acceptance test and whether they have actually given the sign off is the test, is the IT controls test that the bot is trying to perform. So what it is doing is it is logging into SharePoint and it is logging into the SAP's Charm site, which is the site which kinds of captures whatever changes or change request has been requested for. It goes and it kinds of puts the change request number. It picks out whatever change has been requested for, and it captures that as an evidence and stores it in a particular designated folder. It keeps on doing it for all the change requests that it wants to monitor, and it kind of saves them as PDF files, as images in those designated folder. As a next step, what it will do is it'll go and see for this change request who has provided the approval, and it will also start storing or extracting these emails as well as the name of the users in an Excel file. What it is populating now is the testing attributes in an Excel file, as well as who are the people who have kind of approved this change request. So if you look here, this is the name of the people who have approved these change requests at which point of time and what is the mail and where is this mail available in the designated folder, right? And there is one individual now who has to go and manually review these results. So from a standpoint of actually looking into and understanding how much time saving it's there, you will see that what used to take more than 26 hours, which is 16 hours of artifact gathering and 10 hours of manual testing, has now kind of reduced to just 1 hour and 4 minutes. Because the bot runs in 4 minutes and the individual now is spending only 1 hour to go and do this validation of the bot result. So you can understand the kind of coverage and the kind of quality it will produce. There will definitely be no manual error, but the coverage, the cycle time, the ability to do more with less have now increased. And that's what RPA or process automation can even achieve from an audit standpoint. Uh, so I'll move on and I'll move on this particular topic, which talks about digital maturity assessment. Now, why is digital maturity assessment even needed for an audit function? Is to assess what are the different aspects which the audit function also needs to take to ensure that they are in line with the business function. But I'll rather not talk about the digital maturity assessment function, but I wanted to cover a few additional topics in the next 5 minutes or so, which is related to natural language processing, right? Uh, Now, there are a lot of places where we have to go through lengthy contract documents to actually understand what kind of data can be captured and what those data mean, and if they are in line with what the requirement of that organization is. Now, there are different kinds of tools which helps us do contract analysis. Leviton, Kira are a few of them. And I wanted to cover one tool which helps us look at contract, extract the necessary information, and helps figure out what are the different problems which a contract may have.
Leverton provides valuable insights from unstructured data found in corporate and legal documents. We do this with our AI-powered deep learning data extraction platform. Let me show you how. In today's example, I will be using a commercial real estate lease document. Step number 1 is to drag and drop a zip file of the documents into the Leverton platform. Once the documents have been uploaded to our platform, they're run through our proprietary optical character recognition technology. OCR is the technology that makes the words on the page machine readable. After the OCR process, we need to give the system just a rough idea of what this is. You will see from the drop-down menu, there's a variety of different document types available, but we're here today discussing the real estate lease model. Once we've selected the type, we can begin the artificial intelligence process. We've developed our own proprietary neural network as well as corresponding data models to extract information from these documents. During the AI process, all of the documents as well as the corresponding amendments are read through and the information is extracted according to the data model that was selected. You will now see we have the data model on the left-hand side and the document on the right-hand side. After the AI has done its work, there's 2 phases of human review where validators go through, they read the main agreement as well as the corresponding amendments and validate each and every data point within this agreement. If in fact the AI picked up a wrong piece of information, they simply re-tag the information. Each and every time that they make a correction, the machine is reading the words on the page, everything that comes before and after a statement, and drawing a conclusion about how it should behave the next time it encounters that situation. After the documents have been OCR'd, run through the AI, and validated, you have the ability to view this information within the Leverton platform. You will see here I have a large real estate portfolio with a number of different leases. I now have the ability to view this information in a very structured format. Let's say, for example, I want to see the rent charges. I type rent charge, and very quickly I'm able to be brought to where within this document that information is found. Any of these blue hyperlinks have the functionality where it's going to link me to where within the document that information was found. We've also developed a table feature that allows you to pare down this information within our platform. There's a calendar feature that allows you to see all of the critical dates within this agreement. You can set notifications for yourself, as well as a map feature that allows you to see geographically where these assets are located. You also have the ability to export this information via our API into a variety of different ERP systems, as well as export it to Excel. And each one of these data points has a unique hyperlink, so it makes it easy for me to easily reference back the information within these documents. If you'd like to learn more about...
So what it does and what it talks about is it uses natural language processing to kind of read the necessary information and kind of put it into the relevant context of that organization. So if you're wanting to analyze a particular contract and want to see if my indemnity clause is in line with the other contracts which I have, it will be able to do so by comparing this with the other contracts which exist. If you want to look at the labor laws which is there, if you want to look at the GDPR context that has been pushed into this particular contract, it can read, understand, and go back and kind of put those in picture as well. Now, there are other applications of using much more advanced technologies within audit itself. But I know we are on the hour, so I will take a pause. These actually talks about whether we can use drones to do it from an insurance standpoint, right? From an auditing, whether the claims are legitimate or not. If we are doing a call center audit, can we use speech and understand, or rather understand from the speech itself what it can do and cannot do? So more the technologies are evolving, more different kinds of data are being captured in today's world, whether it's video, whether it's image, whether it's speech, all of them are now being audited to see whether it makes sense or not. And what is making it possible? The automation AI, machine learning, mining of the processes, as well as the old or the traditional queries that we can run on the data. It's making possible each of these to be kind of brought in and kind of being analyzed, right? So that's all. I will stop my share. I'll see if there are any questions, and I don't want to keep you waiting on a Saturday evening. Any questions? I believe not. Mr. Kashinath, should we then call it a wrap?
Hello. Good evening, sir. We take a pleasure to thank you very much for the addressing the participant in sub-regional conference. It is pleasure to have you again in the upcoming seminars or upcoming conference.
Thank you.
Yeah, thank you, sir. And I thanks all participants for joining the sub-regional conference. Thank you, sir.